Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Omaha.
Omaha for sure.
Omaha.
We got to get the Ocho channel going so we can start hearing the in-between takes before the show.
No one wants that.
You don't think so?
I don't think so.
I would like it, but I don't think so. The rest of the world.
Beth would probably put an end to it. She did everything like that.
For good reason.
She ruins everything.
Do not say that about Beth.
She's the fun vacuum.
You're the fun vacuum.
That is, you are the original fun vacuum, but you stopped working, and now Beth is the fun vacuum. That is
So what's up? What's up, boys?
Yeah, how are you, boys?
Why are you here today?
Hey, what are you talking? Bell to bell.
It's Wednesday.
Bell to bell.
Bell to bell.
You guys were not here bell to bell yesterday.
Bell to bell every day.
Bell to bell.
Okay.
Bell to bell.
Why are you here today?
I
he's not
wanted
gonna-
to
'cause he's
spread
going on-
sunshine on your life.
Because he's going on the road the next 2 days.
Yeah.
Wait, why is it 2 days?
Well, Friday and Saturday is what it means. You know, we travel on Thursday. We work all day
Oh.
Friday. We come home on Friday.
We travel tomorrow.
Sure.
We do.
Sure. What time's your flight?
1 o'clock?
7 or 8.
This is early.
7. I'm doing 2 shows in New York tomorrow.
Wow.
I'm doing a podcast as soon as I land, and then I'm doing some business show.
Egotistical SOB.
Talk about
Leave me alone with my son Nick tomorrow. We're gonna have another great show like we did last week. You're gonna get used to this. Me and Nick, it's gonna be fun.
talk about life of a showgirl. That's you,
That
Tom.
was a decent movie with Pam Anderson, right? Wasn't
No.
The Last Showgirl. That's called The Last Showgirl.
Okay,
yes,
yeah.
she's a good actress. I didn't see it.
Decent movie.
I didn't see it.
Wasn't
But I
bad.
heard she's great in Naked Gun. I heard the new Naked Gun is hilarious. It's on streaming now. I gotta watch it.
Not my
The
shit.
first one is what made me want to get into comedy. I'm not joking. I watched
Naked
it.
Gun?
This was a great one.
Yeah.
Was classic.
Yeah, because the guys that wrote Airplane wrote Naked Gun, the Zucker brothers, right? And so
I'm gonna take your word
it was just, it formed my whole being when I was growing up. But I was
Really,
like,
it
this
didn't
is
do
the,
that much for me.
this what?
Nick-
Excuse me, stewardess. I speak jive. Look here, blood. I'm gonna get you back on the med side.
No, that's Airplane.
Listen, Big Mama, I dug your rap. My mama ain't raised no chump.
That's good. That's
good.
good.
Oh my goodness. Oh, it's
No,
so
Airplane
good.
was great.
Yeah.
Naked Gun wasn't.
Naked Gun was fun. It's slapstick,
Yeah.
but it's like the jokes per minute hits. You haven't watched it in a while. It's good.
I haven't watched it in 20 years.
You're right about that.
Yeah.
20?
I don't know.
40 bid.
20 years is only 2005.
I don't know.
Yeah.
Like you're thinking 20 years
It's
is
like 1980.
Right, yeah.
Right.
I don't know the last time I watched Naked Gun.
Yeah. All right. Well.
Yeah.
What'd you get up to last night?
I went out to dinner.
Ooh, where'd you go?
A little Mexican food.
We had Mexican for lunch.
It didn't go so well if he tells you the whole story. It didn't go so well if he tells
Oh,
you
but
the
you
whole
weren't
story.
here for lunch. We had Mexican for lunch yesterday. It was good.
Yeah, he did double Mexican on Taco
did. I
Tuesday.
Oh, it's Flacos.
Not a good day.
I
Flacos
love
tacos.
Flacos tacos.
Wait, what happened at dinner? Why wasn't it good?
No, it was good. I just because I have pretty much a solid stomach. Like nothing gets
Oh, an iron stomach. Oh, was it?
Iron stomach.
Was it food poisoning
maybe. I don't know.
last night?
I'm here though. See, and nobody else could do this.
Oh.
Yeah, you're no Vecchio.
Yeah, I'm no Vecchio.
Oh.
Yeah, I play right through the pain.
So you got a rumbly in your tumbly.
Yes.
I had.
Oh my God, I hope you have to leave mid-show or something.
We're
like that.
at
That would
threat
be
level
great.
brown.
It moved on through to the other side.
Okay, that's good. Where did you go? So I don't go
One of
there.
my favorite places, Donatello.
Oh.
Literally.
More like Don the toilet.
Donatello is probably my favorite Mexican restaurant in Chicago.
Not anymore. They're laughing. They got that
one
joke.
bad
That joke
meal.
hits, yeah.
One bad something.
What'd you eat?
Little, they do the best enchiladas I've ever had.
Enchilada. That doesn't sound like something you would normally order.
Well,
Yeah.
How do you get sick on an enchilada? That
I don't know.
doesn't seem too bad.
I don't know. Well, I had some other stuff too.
well, you're just one more stomach
Do you
flu.
have any shrimp or something like
No.
that, or
No.
fish?
No.
Yeah, but you went on a Tuesday, like, or no, they say like never go on a what's the
Monday.
day on Monday? Oh yeah,
Monday.
that's it. You want to?
Yeah, I went on a school night.
Yeah,
My
that's
outlet
fine.
for me.
Yeah.
Look, dude.
Well, no, it's because of the fish. Well, if you get fish, never go
Yeah,
out for fish
yeah.
on Monday because they don't.
Yeah, but look, you're just one stomach flu away from your dream size for Paris Fashion Week.
You'd be a French size 6.
Yes.
That wasn't exactly what I was hoping for.
But you're not mad at it because you're going to New York, so.
Yeah. You gotta
No
get
sales
New York
tax
City
on
ready.
clothes in New York. It's my favorite, like up to like $110.
I want me to buy you something from the
I
street,
will
like
not.
something from the street you'd like me to get
If
you?
I'm shopping,
I want a
for clothes-
purse. I want a fake purse.
Want a
yeah.
fake purses?
Yeah.
If I'm shopping for clothes in New York, something went horribly wrong.
Why? Why do you say
Because
that?
I'm there for 3 hours.
Oh, okay. Yeah, I
Really
got you.
are.
I mean, I'm literally
I
don't
got
have
you.
a free out.
Hey, but if you see any labubus,
man.
if you see any lafufus, fake
Labubus.
labubus, yeah, give me one. Yeah. My labubu's lonely. I want a lafufu.
Is that what it is?
Didn't I give you one?
Yes, you.
Oh.
I know, but he's lonely.
Oh yeah, I get it.
Yeah,
I get it.
I need another one.
Yeah, sure.
So,
I get it.
It's fine.
That's what they sell in the street, lafufus.
They do
They
even
sell
in
whatever is
Chinatown
selling,
here.
Sam.
Chinatown here in Chicago, there's a lady, and she's got the accessories and the outfits and the lafufus. But there's also there's a claw machine, like arcade emporium in Chinatown, and they actually have real labubus. Are you good at the claw game?
No, never won anything.
Okay, yeah, that's it. But this one's stepped up because now you can get like
I think it's a
iPhones
scam.
or labubus. No, they're real.
No, Vinny always gets a free lobster in the lobster claw game in Florida when he goes to the lobster lady. Yeah, always.
You pick out a live lobster?
Yeah, always. He always gets one.
Really?
Always.
Yeah, because you're paying for it.
Well, no. It's a claw game. Like you pay $1 or $2 or $3. I don't know what it is.
Oh, and then you win a lobster?
You win a lobster. Yeah.
And then they cook it for you?
Yeah.
Oh, okay.
Yeah.
It's they have dollar lobster. I'm very confused by this business princess.
It's called Lobster Lady in Cape Coral. You guys probably somebody's been.
Shout
there.
out to you, lobster lady.
Yeah, they have a tank with a claw, and you get a lobster if you win. And he always gets one.
That's where they put the old
Interesting.
No, somebody told him there's some trick to it. I'll figure out. I'll find out.
Oh, okay. The game, the system. There you go.
Yeah.
You know what, Tom? To bring in business to your coffee shop, you should have a claw game, but full of just random crap that was laying around your house.
Yeah.
And then people could win it.
You haven't been able to get rid of.
That's revenue stream.
Yeah.
Then they're just feeding it dollars.
Tom
or
had we
quarters.
have millions of those. We
Originally,
get rid
my
of those next.
game plan was to put like these, free ice pops for kids, but then that took.
But you hate kids. You literally hate children.
And then it was all the dog, stuff.
Okay, because you like dogs. You actually do like dogs.
But then we
Yeah.
got in trouble for having dogs in the restaurant.
Okay, well that is a health violation.
I know, but that's bullshit.
Well,
Okay.
I think it was the free
I agree
service
with
dog
you.
vest that really got you over the top.
Yeah.
So if you take off the front of the building, so you can open it up like a garage
Yeah, like a
door,
big garage door. Yeah.
then you can have dogs in.
Cool.
A lot of work.
Take off the front of the building.
Yeah.
You mean if you make it a garage?
You make it a
door?
garage door instead. Then you can have dogs.
Why? What is the
I don't know.
loophole?
That's a loophole.
Interesting.
It's a loophole.
Was the garage space?
Well, there's another loophole because it's Chicago. Just pay off your alderman.
No, we never got in trouble.
I'm just.
Somebody in their place would go, like some guy that would go every day, hated dogs or he was allergic to dogs, and he ratted us out to the inspectors.
What a miserable human being.
Miserable. And I don't think that guy.
Well, if he's allergic to dogs.
So you get an EpiPen and you suck it up.
Oh man.
We have EpiPens behind the counter. We'll just give you one.
I'm just kidding. I know. Whatever. But yes, you should abide by all the state and local laws. I don't know.
I mean,
Hey, can I tell you though? I went to Walgreens yesterday because I had to pick
That
up
was your big
some
outing?
drugs.
That's exciting.
Walgreens is very
Yeah.
exciting. No, but this lady in line, because I'm just like on the phone because the line was like really long at the pharmacy, and I was just like scrolling on my phone and I just hear, "Ruff!" And I'm like. So I look over and this lady has a Samoyed, like a big fluffy white cloud dog, and he's just barking his head off in the Walgreens, and everyone's just like, "This is fine."
When
that annoys old men.
When I flew home on last weekend, wherever I was.
In Maine,
No. Wherever I was.
New
before
York?
that. Where were we before that?
San Francisco. Are you okay?
I'm trying to remember.
Are you stroking out?
No. I think it wasn't San Francisco. I guess I must have been flying to New York.
Okay.
And
You were Tony.
there was a guy next to me, and he had his dog
At 5 a.m. because you had that
Yeah.
early flight. Yeah.
in a like a handheld pouch
In a
So-
carrier.
in a carrier.
Yes.
And so He goes, I got to run to the bathroom. Can you watch my dog?
Oh, give me the baby. Oh,
Can you
I will
hold my
watch your
dog?
dog. What
It was
kind of
the guy-
dog was it?
It's
Did
the
he
dog
ask
that-
you?
Oh, I was sitting next to him. It's the dog that Frankie has. One of those
Not a Pomeranian.
Charles, St.
Corgi,
Charles.
Corgi.
Oh, Cavalier King Charles Spaniel.
Yeah, that was what it was. Cavalier King Charles Spaniel.
Yes.
It was one of those dogs.
Aw.
He was nice.
Did you hold it or just put him on the floor?
I held him. He was old. He was. He
You would not be my first choice.
I was
I know you were best available.
You were in first class. You were in
was the
first
best
class.
available.
I got.
Yeah, I was sitting next to the guy.
Aw.
He didn't really have another choice.
I would have changed my seat.
See, but this is why men don't ask questions. I would have been like, where was this man and his dog going in New York City on an adventure?
Why would I ask this guy anything?
Because
Did you ask the dog's name?
No,
Ah,
Oh, man, you didn't ask nothing.
I was just being nice.
okay.
That's
care of the
very
dog.
unusual feat.
Did you eat the dog's treats?
The human grade.
Maybe.
You're like, what is this, turkey bacon? Yeah.
I could see him doing that too.
Yeah. Oh, my dog Kalita, she loved turkey bacon.
I gave him a piece of my. What are they? They don't give you food in that.
To
place.
my mind.
I think it was like potato chips or something.
Oh, that's lovely.
Yeah.
That's great. That's really nice for the dog. All right. Well, Bat, what did you get up to last night? I think we have open
Free
speaker.
Babysitting.
Free babysitting.
Yeah, he had,
T-Mac.
he had hockey from 6 to 9.
Oh, I thought you meant the grandson.
No. They don't let us babysit. You kidding me?
Okay.
They know better than
You're
that.
not approved.
I'm not alone. No, with the wife, yeah.
I'm not approved.
Yeah, I'm not.
I would not approve either of you.
I'm not approved
to
alone.
provide solo childcare for.
It's amazing that my daughter doesn't trust me and enough that I'm not approved for solo babysitting.
I know. Sad,
To
right?
be
I
fair.
haven't been certified.
Probably the right thing to do.
But yours is older. You should be approved for that.
Yeah, he's 23 months already.
Yeah, he's talking, right?
What's that?
Is he talking?
Yeah, the words, not a ton. His buddy, what's his buddy's name? I don't know, but his buddy, like Lucas, at the park, almost the same age, maybe like 2 weeks older than him.
Chatting up a storm.
Complete sentences. Look at the plane. You know, that's what my.
Oh, I was that way when I was quite the loquacious toddler.
Oh, were you?
Yes.
Yeah.
He's grunting.
No, Tristan goes, "Ain," you know, like that.
That's funny. Well, we all develop at different. Like he's still learning his words.
This is true. We haven't gotten to nouns yet. Remember?
Yeah, he's like the thing to dig, to eat. Spoon? Yes, spoon.
Yeah, so Casey's not giving me the
The green light. Yeah, that's.
green light. I don't have a solo approval yet.
That's
I have to be monitored and
I mean, you should probably take a class or some sort of course.
feeding him. I'm not even.
No, just
remotely-
child safety, child first aid, like a first aid. I don't know,
raised 2 kids.
CPR.
They're fine. They're alive.
Okay, well, you do with that what you will. Hey, I got a lot of news for today. We're gonna keep it moving. Happy Feds Wednesday. Feds for Wednesday. I tried. I haven't had coffee.
Good try.
Yeah, happy Fed Day. We got a great show for you today on this
Fed Day
wonderful
said nobody in America ever.
Wednesday. At the top of the 8 o'clock hour, we have
You know that there's 300. How many people in America? 330 million.
yeah, give or take.
300, give or take. 329,995 of them couldn't care less that it's Fed Day.
Okay, well,
How about that same number? Doesn't even know. 340 million, they say. Yeah.
340 million.
do with that what you will. Hey, at the top of the 8 o'clock hour, we got an options jive, meme stocks, and market mania. Ooh, I love a little meme stock. Has the definition of a meme stock evolved?
I don't know. It'll never be the meme stock of what the meme stocks were when
Sure,
they
in
were
like
a meme stock.
2021,
So I guess
yeah.
they have evolved, maybe changed. But
Yeah.
evolved.
I think that, listen, first of all, a meme stock could be anything.
Okay.
You could have called Oracle last week a meme stock if you wanted to.
Really?
No, Tom's just being
Okay.
Tom right now.
But yes. the
That's a moving
definition-
target.
Open's not the meme stock of yesterday. A stock that goes from like $2 to $10. That ain't crap as a meme stock.
Sure.
Meme stocks used to go from $2
Meme
to
stock
$4.
is a catch-all.
Okay.
It's a catch-all.
Well, we're going to dive into it. That's going to be at the top of the 8 o'clock hour. Then at 8:40, we got What's Your Assumptions, where viewers write in with their trade ideas, but these trades have a directional bias. Tom and Bat going to try to put on as many trades as possible, and that's at around 8:40. And then 9 o'clock, Skinny on Options, math, understanding Black Scholes. Jacob in the house, I believe. Yes?
Nothing says Jacob more than understanding Black Scholes.
Yeah. I mean, he's been here for what, 10 years?
Jacob goes all the way back to the early days.
I know, but it was like intermittently, like
Sneak and
on
the Geek.
Right, yeah. But he's been trying to explain Black Scholes to you for over a decade.
I think we should do a segment just called Trying to Explain Jacob.
Okay. Oh, there you go. Like becoming John Malkovich.
Like, exactly. Becoming Jacob Perlman.
Yes. And then we got Johnny Trades. I think we have an open speaker in here. I'm not sure what's happening.
Yeah.
It's just like lots of noises clinking around here.
Sounds like somebody's banging on the pipes.
Something, I don't know what that is. But we got Nikki in the house for Johnny Trades. So if you have a normal sized account, not a Sosnoff sized account, Nikki Bat has trade ideas for you. And like Bat mentioned, you're gonna get double the bats tomorrow.
That's right.
So stay tuned for that. And then we have a rising star coming at 10 o'clock. If you missed Liz and Jenny live from Germany, we retweeted a link on our socials. You could watch them. They looked stunningly gorgeous in their dirndls. Sehr schön, as I tweeted out them. They looked really good. And they were drinking beer on stage. I was like, man, I'm sad I'm stuck here.
Mm-hmm.
No, I watched it. It was really good.
It was really
A
good.
couple of
Got
interviews.
great feedback on it from.
Yeah, they did good interviews.
Yeah.
They served looks. They
All I
brought
can tell you
market
is-
insight. What can't they do?
All I can tell you is the SIBO needed them.
Well, yeah, they are true talents, man. They are powerhouses. So I want to be Liz and Jenny when I grow up. And yeah, that's our run of show for today, boyos. You want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story,
today's
breaking
headlines.
news,
Breaking news.
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
Breaking news.
All right, everybody. Today is a wonderful Wednesday, September the 17th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Nah.
I think FedEx.
No, I think FedEx. Let's take a look. The 18th after the close.
Oh, so tomorrow.
You
Gotcha.
got FDS today, which I was going to mention. Maybe that's where you get it. And dry.
Yeah.
They want.
Oh, Darden. Yo, that's Olive Garden.
Yeah, I know. I don't.
What?
Think, yeah.
Unlimited pasta bowls.
I can't trade anything that I've never been to.
You've never been to Olive Garden? We gotta film this.
No, I've
anyway.
We've already had this discussion for 14 straight years.
Yeah,
Okay.
I've never been.
Hey, let's get. This is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. My name's Vanetta. Fed rate cut optimism has bond investors focusing on duration and a steeper yield curve. The U.S. Central Bank's policy setting FOMC is widely expected to reduce their benchmark rate by 25 basis points today. We are waiting with bated breath. You said you love teaching rooms full of people about the yield curve. What are your thoughts on the yield curve this morning?
Yeah, what are your thoughts?
I don't think there's a yield curve trade to be made today.
Really?
Really.
Okay.
I don't think there's a yield curve trade. I think it's all priced in.
Okay.
I think that I would be surprised if the bonds are not, if they're up or down more than 3 or 4 ticks prior to the Fed announcement today.
They're up 4 ticks right now.
Yeah, and I don't think that just given the amount of volatility in the markets right now.
Well, that has been pumped up a little bit. Now, remember, we've been talking about 0-day options for the last couple of days. They expect to move around $15 or something like that. You got to expect a move of $43, which will quickly collapse after 1 o'clock.
I mean,
you would think.
I don't think there's a bond play up here. I think if bonds were like 3 handles lower, there'd be a play.
Okay.
Up here, I mean, maybe there's, what's the expected move in the bonds? Like a half a point, isn't it? It's pretty small, or maybe 20 ticks.
Bonds are looking at 0.84.
0.84. So
Yeah.
0.84 is like 25 ticks.
Yeah.
So let's talk about some other things that could be impacted today. The dollar, one, and gold, maybe. What are your thoughts on those?
Well, gold and silver were getting whacked this morning, but the dollar has just been destroyed.
Yes.
Yeah, the dollar's been destroyed.
It's-
Gold flirted with 3,700, it going down by under 3,700 just a skosh. Down 18 right now, 3,706.
I mean, I'm super bearish in gold and silver, and I have been since last week. I think if you buy it up here, the pot odds are so stacked against you.
Euro's actually down small, give it a little.
Yeah, it was up. It was up 950 ticks yesterday.
Yep.
bips yesterday.
Oh.
So
Yep.
I think the dollar is grossly oversold, but we're only long yen.
Okay.
You know, so like we're kind of just short some premium in the euro, but we're not really playing long dollars at all.
Gotcha. Hey, this is interesting. Can your employer just take away your 401k match? Well, employees of Sherwin-Williams are finding out because they did it. When businesses face a financial pinch, retirement benefits are often the first things to be cut. For countless Americans, the 401k match is simply a fact of life. That's why we do it. We opt into it. But I didn't know it could just be yanked away. Tom, you sure do look nice today. Have you lost weight? Please don't take away my match. Mama needs to retire. No, this is interesting. I didn't.
It's a nice feature that some companies offer. Not every company offers.
Right, the matching, you mean, not the taking it away.
No, the matching.
Right.
Well, you're taking away the matching, not.
Right. Yes.
I didn't know. I had never heard of a company taking away the matching.
Right.
It's obviously they're in financial. That's not a good. That's not a good.
It's
look.
not a good thing. No.
It's not a good look. I don't know what the rules are on that.
Well, they can do it. The average company contribution equates to around 4.6% of a worker's pay. Obviously, very beneficial, and bad news if that just disappears. In other news,
gone.
Is Sherwin-Williams, is it a public company? I have no idea.
That's a good question.
is.
Yes, SHW.
Yeah, trading around 353 bucks or so. It looks unchanged. The volume's less than 100 shares.
I don't think we've ever traded it.
No, I don't think you really can.
Well, yeah, maybe you should paint your mausoleum of a house a bright color and support Sherwin-Williams. Not a single wall in my house is white, so.
Every wall.
I was gonna say almost
Yeah,
every
that's-
wall's some sort of grayish white in my house.
Yeah, no,
Every wall's white. I can't stand people that paint their houses in different colors.
Can't
I'm sorry.
stand them.
I'm sorry. Is
Can't stand.
is your name on my mortgage?
I don't-
Did you?
I cannot stand people
You want it to be?
that paint their houses in different
Not with his credit score.
Well,
I worked
played.
very hard to build the sterling credit reputation that I have. Thank you very much. This is interesting, though. For Bitcoin traders, is the Fed rate cut already priced in? We talked about bonds, we talked about gold, we talked about the dollar, but what about Bitcoin and the Fed?
I
don't know if
They're
you've
trying
ever
to make
talked
a
about
story
it.
here. 160.5 on Bitcoin. It's been going. It's the higher end of its most recent range. It's been a tight range from 125 to about 100.
Yeah, I don't know that a Bitcoin. I look at Bitcoin the same way I look at gold right here. I hate the pot odds in Bitcoin. I think
What do you mean?
I think the upside
The
is.
upside.
The upside is. I think you're taking twice
Is
buying
muted.
Bitcoin here. I think you're taking 2 or 3 times the risk, hoping it goes higher than it goes lower.
Okay. Or you're not doing anything specific in like a IBIT or Coinbase or Circle?
I'm not doing anything in those. I have a bunch of positions on in ETHA, which is the
The ETH
Ethereum
ETF?
ETF. Because the volatility was really high in there, so we sold a bunch of premiums. We actually worked the last couple of days. But Bitcoin, now we're just long a little Bitcoin.
Okay. Hey, well, speaking of my sterling credit scores are falling at the fastest pace since the Great Recession as Americans struggle to keep up with the high cost of living and the return of student debt payments. We got like some retail sales numbers, and yes, people are still spending money, but you got to dig deeper into what extent and how the money that they're spending is affecting them, personally. So I think we're not quite getting the whole story on our economy. What are you looking at? Yesterday you talked about, whole market awareness about looking at things and what they mean. What do you think it means when you see credit scores drop at the fastest rate?
Well, I've never actually looked at credit scores as an indicator of the economy. I mean, I'm assuming I'm assuming people would say it's a red flag.
Yes.
I don't think it means anything
But
one way or
I don't know.
You don't think it means anything one way? How can you not think it means anything one way or the
Because
other?
I don't think the data is accurate now. I don't think it's ever been accurate, and I don't think it really means a thing.
But it could.
I don't know how you even do it. Like if you look back on how many people they did, there's probably a couple hundred people.
No, not credit scores. It's a lot of people, but I don't know how to.
How do you know?
Because I'm telling you.
Because they can pull it, yeah. Because there's 3 credit bureaus,
But I
and
will
they
say
can
that
pull all of your. They
My
can pull all of your data.
son-in-law works in the credit department at J.P. Morgan, by the way.
Okay, all right.
And he studied this under the Fed for a long time, and their subset studies are very, very small. A lot of times they can't get the scrub data from the banks to accurately see
So
what's going on.
I would say it's a red flag, but I would say that we've never looked at credit scores as being that big an important issue.
Sure. I mean, but if people are using buy now, pay later for DoorDash.
That's a different story.
No, for DoorDash, like, we're in trouble.
Well, I don't really.
No, allowing that is where we're in trouble.
Right, no, but some people, like, you're
Well, if
using
you
it
want to take
because
the
they.
risk, you can do
What's
it.
that?
I mean, if you want to take the risk, if you're the company and you want to take that risk, I don't get that.
Sure, if you're the company, you want to take that risk.
Yeah,
Yeah, sure. So
I
now,
don't understand.
you're a subset of people that you're actually looking at. Let's just call them not as well as means as the people you would have looked at if they did not allow that. Like, I'm not using that to pay for my DoorDash. I'm
Sure,
paying for
yeah.
my DoorDash. Somebody else who may be a college student or something like
Sure.
that doesn't have as much disposable income might be using that. Now your subset all of a sudden
Right.
is compromised.
I don't know. I just think that, I don't know what I think, but I just think things are starting to crack under the surface. And why is meat so expensive? Your girl needs her protein. It's expensive.
So soy.
Hey, StubHub is priced their IPO at $23.50. That values the ticket broker at $8.6 billion. They're going to go live today. They priced their IPO, like I said, at $23.50. They provided a range last week from 22 to 25, so right in the middle of that range. Supposedly, the StubHub IPO is 20x oversubscribed.
23.5 though is what I heard, which was the middle of the range.
Yeah, that's what I just said.
Yeah,
Yeah,
no, I know,
23.50.
but I mean, so-
But it's 20x. I know. I'm just.
If they're telling you it's 20x oversubscribed, it's not oversubscribed.
Okay, I'm just reporting.
By much at all.
I'm just reporting what
I know,
What
I'm just telling you.
Yeah, I know. I got you. Hey, in other news, cybersecurity provider Netscope lifted their share price range for their upcoming IPO to between $17 and $19. That values that cybersecurity firm at $7.3 billion. IPO activity is back, baby. What do you think of this logo?
I really don't like it.
Yeah, I don't either. It's weird.
Really don't.
Yeah, it looks like someone did this in Canva.
It's like somebody's bicycle chain broke.
Yeah.
I do not like that.
Not a fan. But you know, what are you gonna do? But you can look at something like CrowdStrike, CRWD.
CRWD trading at 244. I'll call it down $1.
Okay.
Hard to tell. There is 12,000 shares trading. It has caught a bit over the last couple of days, up to 445 or so. It looks like it's unchanged, after around 50 cents one way.
Big news, Microsoft and NVIDIA and other tech giants are planning over $40 billion of new AI investments in the UK. Microsoft said they are investing $30 billion in the UK between 2025 and 2028, and that includes 15.5 in additional capital commitments. Other tech companies, including NVIDIA, Google, and OpenAI, were also stepping up their investment. Breaking news out of China. China is now banning NVIDIA. So I'm not sure if NVIDIA is moving, but
It's down $1.
okay. China bans tech companies from buying NVIDIA chips.
What do you think of that?
I'm not sure what this means.
What are you doing in Microsoft? Also, I want to see receipts for all of these pledges of tens and hundreds of billions of
We have
dollars.
a very small short position in Microsoft.
Okay.
Stuff looks unchanged, maybe even up 50 cents or so. It's hard to tell.
Yeah, we're just short some call spreads.
Okay. China says the U.S. TikTok deal is a win-win. That is rare praise from China. And Oracle and Silver Lake are going to take part of the TikTok investor group as the deadline has been extended. We should be getting more details about the deal maybe on Friday, but that did send shares of Oracle higher yesterday. What's the play here?
It did early on, but Oracle kind of sold off a little bit after hitting.
You did do a trade in Oracle for your
I
podcast.
did for option trades
Yes.
today. Yeah, I did a little bit of a strangle in there. It's up small right now. Ivy rank is 70. It actually has grown from 60
Wow.
to 70 yesterday. We'll see what's going on today.
I don't know enough about this to say anything about it.
Yeah, but you
do
can,
you
you know that Oracle's IV is 70. That's all you need to know, boo. Get in there. What are you going to do?
Oracle looks unchanged. Maybe down.
I have no interest in ever looking at Oracle again.
Yeah, but it's post earnings and it's juicy.
It
Like,
does have high implied volatility.
tell
IVR.
me-
you're just being a hater.
You can tell me anything you want. I have no interest in ever looking at Oracle again.
But you love TikTok, though. Does that make you feel conflicted that TikTok is now going to be like, bumping uglies with Oracle?
Yeah, it sucks. I don't even like Silver Lake.
I love this for you. I love everything about this. Hey, here's something interesting. Micron stock has been climbing ahead of earnings, and so has Wall Street's price targets. Micron stock is heading for its best win streak since 2019.
Here's where I don't care. MU, I can't trade it. Doesn't make any
More like FU.
Yeah, like FUMU is correct. Micron 158 looks unchanged, but it has gone from $120 to 100 and let's round up, say 160.
Micron's one of those stocks that once it gets going, it just doesn't. It's
trades like a commodity.
yeah.
When are their earnings?
That's an excellent question. September 23rd. Thank you.
Okay, there you go.
After
Just
market
around the
closing.
corner.
Yeah.
You think you will trade them for earnings?
Maybe. We'll see.
Tom.
Yeah, I'm not. I don't know if I'm going to trade it. I have a position on there now.
Okay.
We're strangled. We're a little tiny bit short.
Okay. Google's Gemini is at the top of the Apple App Store, snagging the lead spot from ChatGPT. Gemini's recent updates include a viral photo editing tool called Nano Banana, and Google saw peak traffic to the app over the weekend. Google's traction in consumer AI helped push the companies past the $3 trillion market cap. So it's Google's world. We're just living in it.
Yeah, I mean, Google's had a huge rally. I'm short Google right here.
Have you heard of Nano Banana, or
No.
is that what the ladies call you?
I have never heard of it, but I do use Gemini.
Yeah. Okay.
What do you use it for?
I mean, for my AI search, it's my primary go-to.
That's your go-to. Gemini's your
Yeah.
girl.
Yeah, it's pretty good.
All right.
I mean, I've never had any issues with it, I don't think.
That you know of.
Yeah.
In other Google news, they say that YouTube, which is owned by Google, has paid creators more than $100 billion over the last 4 years. And what I think is interesting is if you do a survey of kids just slightly younger than Vinny, Gen Alpha, like 35 to 40% of them, the number one career choice is influencer. Like they all want to be YouTubers.
I want to be an influencer.
No, I just think it's so interesting. Like 40%, like obviously it was not a thing when I was a kid, but it's just interesting. Like that's.
Well, let's look at it from the backside for a quick second. There's an industry that was created by the internet and technology and changing the same way that like AI, it might create an industry and change things that we can't see and don't know yet. So let's be optimistic about it all.
But you do though realize, but not every kid though can be.
Yeah, 10 and 12 years old. I wanted to be a police officer. My father was a hoodlum. It was never going to happen. Those influencers are never going to be influencers. The 40% is going to be 4%.
What did you want to be when you?
How many of them have nice feet?
What did
How
you
could
want to
they
be when you were a kid? Like.
I wanted to be an Italian kid from Brooklyn.
No, seriously, what'd you?
That's all I wanted to do.
You're like all my like. What?
I wanted to be a kid with a silver spoon in my mouth from like.
All my life. How does it
All the
start?
reservoir.
How does it start in good? All I ever wanted to
All
be.
I wanted to do was try to get
be a
inside
gangster.
country club
All
where
I
I didn't
wanted
have to rake the leaves.
all I wanted to do was be able to dunk a basketball.
Was be a gangster. Okay.
I just wanted to be able to dunk a basketball.
Okay, so you just wanted to be ethnic in some sense. You couldn't really figure out what ethnicity.
I mean, I was
but
pretty sure I was going to go pro in some sport.
Right, okay,
I just didn't know
okay.
which one.
I always wanted to be a
I wanted
writer.
to be Mark Scally because his dad brought home like Cocoa Crisps and we only had like Sugar Pops.
Okay, your trauma is disturbing. Hey, I always wanted to be a writer. I wanted to write like ad copy, and it's basically kind of what I do now. So it's
I wanted to have an older brother. I didn't know I had 3 of them.
okay. All right, nope. Just your generational trauma spilling all over the place. Hey, Meta Connect kicks off today. It's a big sort of conference that Meta is spearheading. So maybe a little binary moves in
my
Meta
God,
today.
I wanna throw
Meta
up.
has spent billions of dollars trying to make virtual reality catch on with consumers. They are shifting their
Does
metaverse
this make you
bet
want to buy
towards smart
glasses?
It makes
glasses.
me wonder if Dylan Radigan's wearing them. Is what it makes me
They
wonder.
shifted their metaverse to smart glasses, and they're set to unveil the most advanced set of smart glasses today at their Meta Connect event. The Hypernova glasses should include a display, and they're going to cost $800.
You hate Elon. I hate him. I mean, he is
what do
such
you
a
do with
putz.
these glasses? No,
So it could give you, it has like a heads up display. It could give you information in real time. It could record video
Like what kind of information?
for you. Well, whatever information you want, like biometric information.
Okay.
Like, I don't know. You have to watch the presentation today.
Do you have to wear those glasses if you want all that information?
You do have to wear the glasses.
I'm going to buy those for Tony.
But they have the Meta Ray-Bans. The Meta Ray-Bans,
I'm
they
just
don't
going to
look
take Bill
bad.
Madigan's. He's got them already.
Oh, boomers. What are you doing in Meta? Can we talk
Meta
about
down
this?
$2,
Thank
maybe
you.
$1.50. Who knows?
Thank you.
I'm not doing anything. Ivy rank of 11.
Does Palantir face a new threat from Salesforce? The two software giants are clashing over government contracts. Yesterday, Salesforce announced Mission Force. It's a national security business unit focused on integrating AI into defense workflows. That makes it a direct competitor of whatever shady dealings that Palantir is doing. What are you doing in Palantir?
Palantir's going like this.
CRM.
CRM is going like this. So
Yeah.
right now it's like Palantir's winning.
I'm a little long CRM. I'm a little short. Maybe I have no position in Palantir. Actually.
Okay.
Palantir looks like it's down around $1.50 for $2. CRM looks like it's unchanged, maybe up a quarter, 50 cents.
All right, there you go.
Market's basically unchanged, so all these stocks are basically unchanged so far.
Have you ever used Fiverr?
Fiber?
Fiverr?
Yeah, it's a website.
No.
Oh no, I thought you meant like to be regular.
Oh, fiber.
Yeah.
You should be using. Yeah, you should. You should be getting, as a man your size, around 30 grams of fiber a day. 30 to 35.
FIVR?
Can we go to the next slide here, John? I don't know. The wheels are just falling off today. Fiverr, yes, Fiverr. They are laying off 30% of their workforce in an AI push.
Never even heard of this company.
So it's cool. We've used them here in a business sense. I've used them personally. So basically, they're contractors for hire, but for any endeavor. It could be like mostly like creative endeavors.
I remember this company.
Yeah.
About
So we
15
used
years
them.
ago.
We hired like some VO talent. We needed a voice artist for something that we were recording. So we went on Fiverr and
When we have a
them.
voice of an angel like Sosnoff.
Yeah, whatever.
We didn't
Yeah.
use somebody else.
I made some stickers like for my motorcycle or whatever, and I just hired someone on Fiverr to make the design. You can follow me on Instagram, Midwest Moto Adventures. But Fiverr, it was great. I paid some lady in Romania like $20 to make a logo for. I'm not kidding. And so Fiverr says they are laying off 30% of their workforce as they double down
Gronk
on
will do it for free or anything else.
AI to automate systems and streamline operations. But tell me again, Tom, how AI is not taking people's jobs.
Well, in Fiverr's case, it obviously, I think they're laying off 30% of their workforce because their business stinks.
No, that's not true. No, this is just automating systems and streamlining
It says
operations.
of workforce in an AI push. I mean, they're,
You're just reading the words back to me.
No, I understand that, but what I'm saying is they're
You're
probably,
answering the question with a question.
Right, yeah.
if they're going to make an announcement like this, then they're laying off 30% of their workforce because their business stinks, and then they're going to make an AI push, going forward.
Sure.
That's two different things.
Well, the cuts will affect around 250 employees. It's part of a restructuring plan. So
Yeah, I don't think that has anything to do with AI.
Okay, but they literally said that. Okay.
No, they're making a push in AI, which makes sense.
Okay, but then that push in AI is.
They're laying off 30% because their business stinks. There's a difference.
Okay. Cool. I love our chats. When are you leaving?
Tomorrow morning, 6 o'clock.
Hey, this is interesting. Amazon is roping in a company called Faye to provide personalized insurance-covered dietitian services. Amazon has a telehealth system. You can talk to a dermatologist, get a retinoid prescribed to you. You could get, there's boner pills that you want. I don't know, whatever. But now you can talk to a dietitian, and then it's covered by insurance, so you can eat healthier.
It's jumped the shark where you can talk to a dietitian now.
That's cool. Faye uses AI to match users with registered dietitians based on their goals and health history.
We really need to know what to eat. Like, don't we know, that candy bar is probably not as good?
Yeah, that fried ice cream is probably not that good for you, but I need to call that dietitian.
No, but people have different metabolic goals and metabolic needs. So it's interesting, and women are different than, like, there's nothing that's just
that
universal.
1% of 100.
But also there's a difference between knowing what you need to do and making something adaptable so you stick to it.
I just asked Tom because he knows everything.
Okay.
Right, just ask me.
Can we talk about what you're doing in Amazon? I hate it here.
Unchained, or an Ivy rank of 9, maybe
Okay.
down 50
Great.
cents.
Hey, United Airlines is ruling out a bid for Spirit Airlines assets. UAL's CEO Scott Kirby said his company will not bid for bankrupt Spirit's assets if they become available. Kirby did, however, say that Spirit's airplane slots and routes do not work for the Chicago-based airline.
Oh, what are they going to say? We're going to bid them up? I mean, there's only, how many players that can bid on these?
Where is Spirit based out of?
I do not know that.
Let's see.
I'm just curious where their home base is. We don't have a lot of Spirit in Chicago.
We
got Spirit. Yes, we do. We got Spirit. How about you?
Oh, sorry, not Dana Beach, Florida.
I was going to say the dumpster fire of a company it is. It's based in
Miami
Florida.
metro area. Well,
It's based in Florida.
Headquarters are in Florida. So, I don't know. Yeah.
Dana Beach, I don't know.
Florida somewhere.
Yeah.
What are you doing in UAL?
No position. The stock's been a little weak the last couple of days, but no.
Tom, I pulled this just for you. I'm very excited for this story. JP Morgan Private Bank is launching a new lifestyle service for its wealthy clients. That's you. The service will offer discounts and referrals on everything from private jet flights to household staffing, you need a butler, to art restoration. Yes.
You think they're putting this on a layaway plan?
I love this for you, for your private client needs.
JP Morgan has nothing better to do than to do art restoration for you?
And private jet livery, yes.
What does that mean?
Just so you can rent a private jet.
Oh, yeah.
Is that Scott I see in the window there?
I know. I think that this is nice. Private banks and wealth management firms are seeking to find ways to serve clients outside of core investing and financial advice, and this is the way to do it.
Very nice.
JP Morgan trading on its highs, just under 310.
That's very nice. I love this.
Ivy rank of 23. Not bad relative in this market. Earnings are October 14th.
In a Mad Libs of a headline, LimeWire, yes, the LimeWire we used in college to illegally download songs from the internet. They were a file sharing service from the 2000s before they were shut down for copyright
4 computers.
infringement.
LimeWire.
What is LimeWire?
Don't you
It
remember?
was like Napster. So there's
Yeah.
Napster and then LimeWire, but it's like a torrent
steal
site.
music from
It's-
Apple,
Yeah, it's a way to
stuff like
steal
that.
music when you're hooked up to your college's sweet T1 Ethernet. Those were the days. But LimeWire, the file sharing service that then got shut down for copyright infringement, announced they are acquiring the rights to the Fire Festival. Yes, 2 companies.
Fire Festival?
Yes, that Fire Festival, that LimeWire, and that
How
Fire
do you
Festival.
acquire the rights to something that bankrupt?
Because the guy, McFarlane guy that did, he sold the rights to Fire Festival, and so he got like $100 million for, I'm not sure how much he sold the rights for, but he got money, like actual money for it, but now we found out who the buyer was. Billy McFarlane, I couldn't remember his name, because he went to jail. He legit straight up went to jail.
Okay.
But he was in the same jail as The Situation from Jersey Shore. I'm not making this up. And then they became friends. And then someone wrote a play about it. It's a whole thing. Mike Sorrentino, because he didn't pay his taxes. So The Situation, GTL, no? Okay. He went to, okay.
I never watched the Jersey Shore.
Yeah, you did.
Come on.
I didn't.
Yeah, you did.
You love
Yeah,
Snooki.
you did.
You love
Yeah, you did.
Snooki.
You used to quote her all the time. You would come in.
Snooki.
Yes, you did. Yes, you did.
JWoww.
What was that?
Oh, JWoww is the other girl.
Oh, no. It was
Oh.
Jim Tan.
Laundry, GTL.
GTL. You would
Yeah.
go GTL. You would come in. You're such a liar.
Jim Tan what?
Laundry.
Oh, no.
Yes, you did. Yes,
Sorry.
you did.
No.
You,
Sorry, never watched the Jersey Shore.
Anyway, hey, Bat, I pulled this story for you. Congratulations, finally, NHL players are going to take the ice in the 2026 Olympic Games in Milan after not participating since the 2014 Games in Sochi. So hockey is back in the Olympics. Gary Bettman, who is the commissioner of the NHL, first cleared the path for players to take Olympic ice, and he said it will be a boon for the league to return. Obviously saw the huge frenzy around the world, hockey
100%
games.
Supportive of this.
Yeah, so hockey's back. I don't know why it ever went away.
You said the story was for me. I 100% support this.
Yeah, I think this is great.
Yeah, 100%.
Good job, NHL. Good job, hockey. Hey, when your dog is motivated by food, sometimes that means you could train them to do anything. But this golden retriever is like Liam Neeson. He has a special set of skills. I don't even know how you get your dog to do this, but this is dang impressive. Watch this. His name is Jax. He's got the dad thing down, like the one arm on. Like how?
That's pretty good. I like it.
I mean, every single golden retriever I've ever met is food motivated, but Jax.
Would you say Sadnov was the golden retriever of humans?
No, because golden retrievers are fun and they bring joy to people.
This is true. On that note, we'll take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. Good job, Vanetta.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a quick look at what's going on with the market. Even the S&P is down $2.50. A fairly tight range of about 20 handles, 21 handles, just under 21 handles to be exact. NASDAQ down 10. Russell up 8 and Dow up 55. The opposite of what we saw yesterday when the Russell and the Dow were weaker than the E-mini S&Ps.
I told you I loved Russell today versus NASDAQ. I think it's the trade of the day.
Yeah.
But it didn't give you a chance to get it on this morning, unfortunately.
Not yet. Maybe they will. Markets move. Volatility in by 4 cents. Bonds up 5 ticks. That's 1 tick higher than Tom said they would be. He said they'd be within 4 ticks, one way or the other, up or down.
When the number comes out today, they'll be unchanged. That's all I'll tell you.
Bitcoin down 600. Oil down 29 or 30 cents. Oil coming back after, well, I don't know if I'm saying coming back after going under 3,700. I guess it's a round number, the only reason I'm mentioning it. 37.12 down $12. Silver down 77 cents, much bigger move on a percentage basis, almost 2%. We don't never talk about palladium, but it too is down around 2.5%. Net gas up about 5 cents to 3.15. Every time it seems to go under 3, it comes back up there. Some of the stocks in the move, we talked about NVIDIA, basically unchanged, down $1 after the news of Vanetta just spoke about, with China no longer wanting any of their chips. And then you've got some of the Chinese stocks, Baba up around $4, Baidu up around $11. Is that enough? They coming for the piggies?
Well, they're coming for China today.
Coming for China today. Got it.
Coming for some of the Chinese stocks. Not much else going on.
They never come for JD anymore. Stock's up 50 cents.
No, that stock's a pig. I'm long that stock. It is an absolute pig. All right, let's do it. Emails that came into us overnight. It's Wednesday, September 17th. Tomorrow we head out of town to go to New York. Looking forward.
I will be on the show, though, with Nick Batista.
Looking forward to the show Friday morning. Hope to see everybody at our live trading show Friday morning. It's going to be fun. So we'll see you there. It's triple witching. We'll get you started in the morning, and it'll be fun. Anyway.
We'll have you at work by 11.
Let's see what we got here today. If you buy a call option 2 years out, at what point would you take profits? I'm up a good amount of money on one of my stocks. I bought a 2-year leap, thinking the underlying would hit that price in 2 years, but it hit that price in 1 month.
Darn, you're good, man. Just call me. And more importantly, call Vanetta. She's single, too, if you're single. I mean, high-class problem.
High-class problem.
Should happen in every trade. You should have a 2-year time frame, and it happens in a month. You're going to be a rich person when you're done with trading. Close it. I mean, if not, put on a strategy that has less delta risk to it than just being naked long a leap option. Buy a call spread if you want to.
Sure. I mean,
yeah. I mean, if you want to continue being long, but I mean,
first of all, if you set your target and it hit it in a month, it was targeted for 2 years. Why wouldn't?
What's your target on your next stock?
Why wouldn't you just take profits? And if, like Tony said, if you want to replace it with a short put spread or a long call spread, go ahead.
Go for it.
Or a naked put, whatever. Who cares? But if you get your profit, take your profit. You can just keep some long deltas in there with something else, but just take your profits.
Yeah.
Let's go to the next slide. You're not going to be mad about taking profits.
Pat yourself on the back, too.
I have a call ratio spread that's been breached. I understand I should close the embedded long call spread. So it's a short call ratio spread. I understand I should close the embedded long call spread, but when do I roll the short call and sell the offsetting put? Do I just sit with a naked call until 21 days and then roll?
I mean, selling the spread is not like an understanding, first of all, the long call spread. I probably would if you're going to make this into a strangle with maybe some delta to it. I mean, remember, when you put on this ratio spread, you are omnidirectional, slightly bearish since it was a call one. That's where your risk was to the upside. You have that naked call. Now your spread is probably close to full profit, so I would look to get out of that. That's neither here nor there. And when you're looking to do that, that's when you're looking to roll it, sell something else against it, reduce your delta.
Yeah, there's no reason to sit with a naked call. You sell the long call spread, exactly what you said. Mm-hmm. And then you're left with a naked call. You sell a put against it and roll it out to the next month.
Yeah.
Reduce your risk, recenter the trades. Yeah. Fine. Yeah. I mean, it's a losing trade right now, but you've made the perfect adjustment. And now let's see if you can, let's see if
you get back to even, make a profit on it, continue. Yeah.
Yep. So, that's it. You do it.
This happens slowly. It's actually,
you do it all at the same time, but you don't hold that call naked. There's no reason to. Mm-hmm. It doesn't cost you any more money to sell the put against it. Doesn't cost you any more money to roll it out to the next month.
Yep.
Let's go to the next slide. When you buy or sell actual stock, is it always your intention to scalp it?
Yeah. 99.9% of the time, yes, it is. How about this? It's to make money. Now, if you want to call it scalping it intraday, when we do it on the show here, yeah, he's definitely doing it, for a scalp.
When we trade stock, we're usually doing it for a scalp. It may be like what you guys consider a swing trade. So sometimes, like, you know, like I've been short some stock for a couple days now, so it's not really like a short-term scalp. I'm just getting I wanted some deltas, so I sold some stock. So maybe it's more of a swing trade sometimes, but my intention is not for a long-term hold. When I buy or sell stock, my intention is it's a trade. It may be a scalp, it may be a swing trade, it may last an hour, it may last 15 minutes, it may last 15 days. But my intention is not to put it into a portfolio and have it part of my core portfolio. None at all. Let's go next slide. Yesterday's confirm and send, on yesterday's confirm and send, you said that you close a losing position when the IVR is low. Just curious why you don't try to roll it out for a scratch. I have a couple losing positions where the IVR is low, but I keep on rolling them out.
You certainly can keep on rolling them out because that's a conscious decision that you made looking at all the factors that you deem, you know, responsible for that trade. A lot of times we will close when IVR is low because you lose that little, not edge, but that little oomph in if volatility contracts because it's a lot more mean reverting than the stock price is. So for us, it just becomes down to be a little bit more mechanical and closing the IVR, but we've kept trades on. You know, in high IVR atmosphere, when we're putting on trades on the opening 50, 60, 70 IVR, you know, we might look to close at 25 and 30. Now you're putting on trades at 25 and 30 IVR. When it gets to 20, 15, you might look to hold it on just because you like the directional bias. So.
Yeah, there's no reason why you have to close it. If you want to keep it on, you want to roll it forward, keep doing it. Sure. Of course. It's only a small difference in the probabilistic outcome is the difference is very small, but based on our research, it's not optimal. So the reason we close a position out when the IVR is low is because we want to move on to use the capital for something where it's got a better opportunity. So it's all about optimizing your capital, and it's all about optimizing the mechanics. Yep. Is it that big a difference? No, it's like a game of blackjack where, you know, you have a 12 and you're deciding it's a small edge to hit.
Yeah.
You know, that's all it is.
Right.
Yeah. I mean, there's a small edge, and we take every small edge we can have. You know, every small edge we can get based on our research, we will go there. So if the mechanics say to split aces, you split aces, and that's all it is. It's just being mechanical. You don't have to, for sure. Let's go next slide. But if you don't split them and you get a 9, then you have ace, ace, 9. The dealer does. Do you watch ETF deltas or do you watch beta-weighted deltas daily when you decide to adjust? Meaning, do you adjust your ETF deltas or your beta-weighted deltas when you make adjustments? I look at my beta-weighted portfolio every day, but I'm just curious what you look at when you adjust your deltas.
I'm looking at we open, the first thing I'm looking at is my beta weighted delta on the top of the Tasty Trade platform to see if I have what my directional risk is for the day. If I have no directional risk for the day, I'm not quite as concerned as going through my portfolio. If I see a directional bias, especially one that doesn't meet what I think the market's going to do that day, then I dig deeper into each individual delta of each one and then go to those stocks to reduce my delta. So I prefer to reduce an existing position's delta if my beta weighted delta is off.
Yeah, I'm going to make this very simple. We look at beta weighted deltas for our total position. We look at ETF deltas when it comes to futures and futures options. And we look at individual stock deltas when it comes to adjusting our individual stock position. Now, the software will weight the futures ETF deltas against your futures options. And so it makes it apples to apples. So it's super simple. We're the only platform that does that. But we adjust our positions. Like if I don't like my position, for example, in Baidu this morning or Baba this morning, I will simply adjust those deltas. That's it. I'll adjust my Baidu deltas. You know, I won't adjust my overall deltas because Baidu's higher. I'm going to take a look at my Baidu.
I think you confused us, but okay, go ahead.
Yeah, and then let's see. Let's take a look at the next slide. So this person writes, I am doing synthetic strangles with wide wings, $60 wide, with some success. My approach sometimes keeps the trade for 2 to 3 hours if the market's cooperating. When I go to close my position, sometimes I can't close the long wings. I suspect this might be because the wings are so far out of the money that there is maybe little or no market left for them. Is there any downside to closing my short strikes and just leaving the wings to expire at the end of the day?
So they're talking about 0-day
Yes.
trades here on this.
Yes.
And regardless, 0-day, 45 days, 365 days, there's no risk to leaving those out of the money long options that probably have no bid to them. That's why.
Yeah, they have no bid.
That's why you're not getting filled on them. You can certainly put in a penny, 2 or 3 offer for them if you want to. But yes, I would close the 2 short options and leave the 2 long wings. Hey, good things can happen from something that's absolutely worthless.
I mean, once or twice a year, you'll get lucky on those long wings and,
Make some money on
they'll
them.
turn into something, but the rest of the time they'll just expire worthless.
Yep.
But you don't have to do anything. We call it closing the guts.
Mm-hmm.
So the guts are the 2 bigger options. Just close those. Take all your risk off.
Yep, that is where all your risk
Holding those far out of the money wings, $60 away, who cares?
Yep.
They mean nothing. So let them expire worthless at the end of the day. That's exactly what we would do. We usually close our stuff before they're worthless, but listen, they can get worthless pretty quick.
Sure, especially with 0-day options, and extremely low implied.
I mean, you're
low.
$60 wide. It's a synthetic strangle. There's no question they can go to 0. Just leave them on. Doesn't mean anything.
Yep. Let's say a quick 90-second break and come back. We've got more Tasty Live. Sadnov, what comes up next?
No.
That's right, an option job.
No clue.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I
well,
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. Jive is right, Sosnoff. Go. Even the S&P's unchanged, up 50 cents. Actually, all 4 indices are up right now, Sosnoff.
Yay. Yay.
Yay. One more time.
Yeah. I don't think I think it's going to be a little bit of struggle this morning.
Struggle bus until 1 o'clock Central?
Yeah, probably. Yeah. Right until Dylan and I start. Told Dylan, give me 1 minute after the opening before we start.
It does seem to be that way all the time, but yes.
Yeah. This morning, silver was down $1.20, so I thought that was kind of ugly. Now it's only down 76 cents. Gold was down about $25, but those are the only 2 things I've seen that have moved.
That's correct.
Pre-market. Nothing else has really moved much. Yeah, I do like Russell today versus NASDAQ. I'm going to stay with that. Haven't done the trade though.
Okay.
We got a lot of stuff going on today, so thanks for spending your morning with us. Before we head out of town, we're going to cover some meme stocks. We got a little Jacob Perlman coming on, and we're going to do a little what's your assumption. So should be a pretty busy, Tasty will be a pretty busy day.
Mm-hmm.
Let's see, we got the first one. Okay. This is a tough one. I mean, I know you're thinking that meme stocks, this should be easy, but what we did was we turned our research team loose and we said, can you quantify meme stocks and market kind of mania, like all the crazy stuff that's going on? Because there's so many people out there that like talk about things that, that just drive me insane. So one of the things I love about what we built here at Tasty is that we keep everything, mathematical and everything pretty much as quantifiable as we can. It's pretty hard to put meme stocks into a quantifiable bucket, but we challenged our research team to do the best they could, and they came up with some pretty interesting stuff. It's a little heavy, warning you in advance.
Okay.
It's a little long, it's a little heavy. You might want to go check it out later, but it's a really good piece on meme stocks and market mania. Let's take a look. So what are meme stocks? And again, this is a very subjective, there is no real definition. Stocks that surge due to social media hype rather than fundamentals. Stocks driven by retail investor communities such as Reddit, X, TikTok, often feature extreme volatility, short squeezes, and irrational valuations. Retail driven, narrative based, prone to volatility. Some examples could be GME, GameStop, and AMC in 2021, Open Door and Kohl's in 2025, right? Fair?
Sure. Now, Kohl's has been around forever. Some of these other stocks have not been around for forever. But this
AMC's been around abroad.
Yeah, but this is a recent phenomenon, right? I mean, it's an internet.
2021, first time I ever heard the term. Let's go to the next slide. So some key signals: social media buzz and trending tickers, explosive trading volume. You saw that the other day in Open. It was like 330 million, whatever.
Yeah.
High option activity, high short interest, over 20% of the float, narratives appealing to retail investors, meaning they're usually cheap, price disconnect from fundamentals, volume 3 to 10 times the average daily volume, option flows where the call put ratio is greater than 3. That means 3 calls trade to every 1 put. Sentiment scores rising mentions on Reddit and like stock twits. And this is something we don't really look at much, but technicals where the RSI is over 70 and Bollinger Band expansion, that's just kind of
We're trying to encompass everybody.
Yeah, we're trying to throw everybody in there.
Stocks, that's all.
Throwing everybody under the bus.
Yeah.
Let's go next slide. Okay, so what's important to note here is that no single indicator is sufficient to determine whether or not it's a meme stock. So these are quantitative indicators for early detection. So you need to combine at least 3 of these signals for higher probability setups. The best trade occur when technical, social, and options flow align. So what we did here is we put together some kind of really cool statistics, and we said, okay, well, you need 3 of these, right? So you got option flow, volume spikes, you have Reddit mentions, borrow rate, and IV percentile or IV rank, it doesn't matter. And you're looking for something that is a score of greater than 5. And so we put kind of how we figured out all these numbers here. So it's kind of cool. And what's interesting is if you look on the right-hand side there, it says lead time. You don't have much.
Yeah, no, you don't have much at all.
Yeah, you don't have much. And we explained things here, like, the volume, over 10 million shares usually. It's usually way more than that. The AI sentiment, options activity, short squeeze setup, which is kind of hard to know when it's happening.
And subjective, right?
And order flow, man, that's hard too. It's hard for a retail customer to look at, kind of figure out order flow as you're watching it. That's not easy. Let's go to the next slide. These are not easy, but it just explains things. So we put some recent examples of meme stocks here. Open Door, 500% surge after the CEO change. Kohl's, 90% intraday spike on short squeeze. Krispy Kreme, 32% short interest. Beyond Meat, 43% short interest. These are recent ones, September, July of 25. Reddit, which is probably the most expensive stock we're going to look at here, just had an unbelievable move, 50% gain. EVGO, which I've never actually traded, 33% short. and GoPro, which, God, I haven't traded that in a long time, but 54% surge. So some big.
These are not tells that the stock is going to do this.
No, these are not tells. These are just examples of recent meme stocks.
Okay.
In 2025. Let's go next slide. So what we did here is we looked at the fade strategy, okay? Premium selling analytics. So when you look at the implied volatility, how it fades from peak to normal in just a few days. That's what's interesting for us, okay? You can see the peak, and then you can see day 1, 2, 3, 4. I mean, it crashes pretty fast. How do you know what to expect when you follow the fading of meme stock volatility? So we decided to take a look. The win rate for selling the 30 delta credit spread, 73%. The win rate iron condors at the 20 delta, 68%. This is if you were able to sell these, into the powerful up move. Put credit spread at 61%, diagonal call spread at 77%. Those are just win rates. We have average credit, we have max loss, we have the Kelly criterion, and then we also have the Sharpe ratio. We're just throwing all of the, things out there.
Yep.
So we put down on the bottom of the page an expected value formula. This means a positive expectancy if you just be a little bit patient of 27%.
Okay.
I mean, it's a positive expectancy with a 27% loss rate. It's a net positive expectancy. I take it's not 27%. It's with a 27% loss rate. It's a net positive expectancy, which is good. That's all you can ask.
Great. That's all you can ask for. That's what you want. All's well that ends well, I guess.
I mean, I've never seen anybody put together this kind of analytics on meme stocks. There's a lot of research. By the way, they wrote at the top here that this was the IV Crush timeline, but it's a composite of 50 different meme stocks. So it's not just like looking at 2 or 3
stocks we mentioned.
Yeah. Let's go to the next slide. So let's also look at the following the meme stock. So this is the momentum trading. So we back tested the performance from 2021 to 2025, and we used 237 different meme events. Now, this is when you see a stock going up, you try to jump on it, okay?
Ride the wave.
Okay, well, look how great riding the wave did. Your win rate, 28%.
Not so bueno.
Expect
average hold time's only 2 days. Less.
What?
Average hold time's only 2 days.
Yeah, average
Really
hold time's a little less than 2 days. Expected value, 23%. Not bad. The sample of typical execution timeline, and we just put, T plus 0, T plus 2, 1 day, and 2 days. And again, the shorter the time frame, the best.
Okay.
I mean, this is basing your trade on a volume spike and the social media mentions.
Yeah, but a lot of stocks get social media mentioned that don't do anything.
I understand, but we have to start somewhere.
Yeah.
Let's go to the next slide. Okay, so this is really good. These are actionable insights. So the do's: identify catalysts and sentiment for follow strategy, fade after signs of exhaustion, falling volume, always use risk management like stops or position sizing, mental stops, and diversify to avoid wipeouts. No hero crap. On the don't side, selling naked calls can be a little risky sometimes in some of these meme stocks. I can tell you from my GME days, it's very risky. Averaging down on losing positions.
That actually ended up working for you, though.
Yeah, I know, but it took more risk than I wanted to. Mm-hmm. Averaging down on losing positions, don't do that. Using margin for meme stock, just be careful how much leverage you use. Mm-hmm. And holding through earnings or other major catalysts like binary events, not really a meme stock thing. For capital allocation, define risk spreads, max 2% per trade. Medium risk, long stock or long calls, max 1% per trade. This is what our recommendations are. And high risk, naked options, we don't suggest that, like naked short options.
Wouldn't be our first go-to.
Yeah, the 2-20-50 rule for meme stocks, which is really kind of fun. 2% rules never risk more than 2% of your account. on any single meme trade. The 20% rule is exit any position down 20% from entry, no exceptions. And the 50% rule, take off half when up 50%, let the rest ride with the trailing stop. Mental stop.
Mm-hmm.
But you can just take it off also.
I mean, those are all kind of.
That's good.
Yeah, but they're
20,
all
50.
Right, but they're all kind of not common sense.
Yeah, they're common sense.
You know, but like they're
common sense.
Yeah,
they are common sense. But again, this is more geared for
the size is
actionable insights for meme stocks. Let's go to the last slide, John. Some of the takeaways. Meme stocks are sentiment driven and risky. Meme stocks are not investments. They're short-term trading vehicles. I would 1,000% agree with that. Diversify your exposure and your size positions cautiously. Follow early with exits or fade after overextension, and use data-driven signals to avoid emotional trading. That's really good.
I agree. Let's take a quick 90-second break. We have an unchanged market. We'll be back in 90 seconds. We've got more Tasty Live at the opening bell now.
Unchanged.
Unchanged, Sadnov. Unchanged.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Soslow bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner!
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. Gotta go to your front door.
Oh.
Elijah left you a present. Go ahead.
You really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like "thank you" and "you're right."
Oh my God, keep your shirt on.
no, right there, please. It's sweep.
Like this?
Please.
Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, go. Oh, happy chauffeur. Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the opening bell here imminent in about 2.5 minutes. Imminent. Even the S&Ps. Imminent. $1.50. That's as high as I've seen them this morning. NASDAQ up 375. Russell up almost 6. The Dow up 62. The Russell the strongest of the group, as foretold by the great one, Mr. Tom Sosnoff.
As foretold, yes.
Volatility basically unchanged at 1830. Bonds up 7 ticks to 118.06. Bitcoin 116.5. Kind of a tight range, about $1,500 last night on Bitcoin. Ethereum up $12 and gold down. Oil down 14 cents. Gold down $15 now. Silver, bigger move to the downside, down 74 cents. Silver back.
What you doing?
Oh, you're selling some NASDAQ. Oh, you buying?
Told you I was going to put this spread on. I'm going to...
Sold NASDAQ.
Bought Russell.
And bought Russell. 1-to-1.
Right now. I'll do them. I'm just going to... I need some stuff to scalp around today.
You feel like you need to get your juices flowing.
Yeah, I got to get some... I got to get the sweat. You know, I got to break a sweat.
Break a sweat on the basketball court.
So I put my offer in at 30, got filled, then I bought the Russell.
Net gas up a little over 1%, 4 cents and change. My Taiwanese sources told me Lyft, LYFT, is up around $3 or so on the bringing of Waymo to Nashville. I don't know. Maybe it's because StubHub is coming out. I'm just kidding.
Can't believe Lyft's up to $23. That's a huge move for that stock.
It is a huge move for that stock. I mean, it's over 10% move for Lyft.
Yeah.
Got 1 minute before the market opens. South of a lot of the Chinese stocks are higher also.
Yeah.
You know what? We'll see what the market opens here in just a minute.
I'm going to have a few problems here. Baidu a little bit. I didn't expect that kind of move. JD should be good. I don't know what else. I really think I have much feel like I don't have much risk on here other than the indexes.
You don't. I mean, you're.
Yeah, I think it's all indexes.
Yeah. Yeah, which is where you've been getting some of your delta, right?
Yeah.
Yeah. This is true.
Pikachu.
Pikachu.
This is true, Pikachu.
We got about 15 minutes before the market opens. All you've really done is rolled up some net gas puts and put on the ratio spread.
Yep. I've done nothing so far today. I just don't have a lot of stuff on right now. I need positions.
Oracle, after having some big moves, looks unchanged this morning. Here's your opening bell, Sadnoff. I don't hear any dingies from you.
I wouldn't.
Low ding.
Low ding for sure.
Low D. Let's see what's moving this market to the downside. You got Tesla down around $6 a liter yesterday, last couple of days. Nvidia down $1.80, Palantir down $1.80 also. AVGO down $1 and change. Uber down 84 cents. UNH basically unchanged. Let's see what the upside looks like. Netflix up $21. Netflix catching a little bit of a bid here. $2.20 and change. Baidu up almost $9. PDD up almost $4. Baba up $3 and change. Lyft up 2.5, as I mentioned a moment ago, off of its highs already by $1, up about 11%. Adobe up 2 and change, and the mighty Apple up $1 and change, with Microsoft up $1 and change.
What's saving the good kids this morning is Reddit. We need to Reddit down. It's down $5.
RDDT, you are correct. $4.66 for Reddit.
Yes, we need Reddit a lot lower.
Yeah, it's gone from the 220s to the 260s in a heartbeat.
Yep. So I need Reddit. Need Reddit to crash and burn.
Understood.
Other than that, I mean, we might. Anywho, I'm just looking for. I'm watching the way these things are trading right now. It's just a little bit of nerves. Everybody's trying to get their
positions to where they want for the number, which I think is going to be a non-event. Volatility kind of telling you that right now.
Oh yeah,
but we'll see. Are you scalping this thing already?
Yeah, just scalping, having a little fun.
Look at you, beautiful.
I lay it back out higher now.
Sure.
But I'm gonna wait.
Scalpy.
I'm gonna wait a little bit. Try to get some Nasdaq futures off, back up around 40.
Oh, sure. Because Nasdaq always goes up.
It does. Anytime you can. I bought it down like $1 or $2 on the day. I mean, it's a miracle.
I'm telling you. I've been trying to tell you for a while now. Gotta get with the program. By the dips.
Read it down $7. It was up 9 or 10 yesterday. It's so freaking hard to trade that stock.
Mm-hmm.
Let's see. Yeah, it's just so hard. I'm going to put some offers in above. Wow, the Nasdaq futures move around 10 ticks on
Yes, they do. On nothing.
On nothing. They just, blow up. You blowed up. Let's see what else we got.
Netflix up 16, Baidu up 7 and change.
Yeah. Let's see what we got here. On the downside today.
Downside, your big movers, Tesla. Tesla down 7. Lilly down 4 and change. Coin down 2.5. Uber down 3. Nvidia a little bit lower, down 280 and change, trading near its lows.
Russell up 12, 13 now. Nasdaq down 10. Should have waited. Make an extra 10 or 15 handles.
Only had a little bit of intestinal fortitude.
I'm just trying to scalp. I'm trying to make some things happen today.
You.
Reddit down 9. Good night, Reddit.
Mm-hmm.
See you in hell.
Yep.
See you in hell.
Give me some more, Sadnov. What else is going on? Give me something. GDX finally down, Sadnov, down 40 cents. It's been up $40. It's down 40 cents for the good guys.
I missed getting a little bit short. Short Tesla yesterday. I thought it was kind of got up a little. That gap up opening yesterday seemed a little rich to me.
It's still at the very high end of its range.
It still is.
Got as high as 425. It's 414, down 7.
Yes, looking around at my quote feed here and to see if there's anything. Not what you would think.
Mm-hmm.
Not a lot of stuff.
Lyft and Waymo announced a new partnership, my buddy Jason just said, to bring Waymo's fully autonomous ride-hailing service to Nashville by 2026.
Like Nashville's not crowded enough. Now you're going to have to...
less drivers on the road if the Waymo's there. They have no drivers. More cars, less drivers.
Yeah. I was surprised in San Francisco how many Waymos were on the...
A ton of them.
Ton of them. Everywhere.
Yes.
And that's, to me, that's a hard...
I wouldn't think it was possible. I would have said I don't think San Francisco would be possible.
Well, I would think that's a harder city than Chicago because of all the hills and weird streets. I don't know. It seemed.
It's a construction thing that you got going on in Chicago is what I think is the problem for autonomous cars.
I don't know, but
they seem to navigate around it. I mean, the technology seems to work, man. It seems to work. I felt very secure in them. Dow up 200, by the way, with the Russell up 12. They're up about a half a percentage point.
What's the big mover in the Dow?
Give you that side enough because if you go to our platform here and you go to I have the high option volume list, but you certainly click.
I'm just trying to figure out what's up so much.
I'm gonna give it to you if you let me get to that.
Costco.
Go down. You can see all the earnings, forex, futures, market indicators, liquidity. Here you go. Let's go down here to Dow Jones Industrial. Click on that and then go from high to low. You'll see GS, the Goldman Sachs Group, up $7. AXP, your Nemesis, up $6. Caterpillar, up $4. JP Morgan, up $2. Those are your culprits. Really, what's down in the Dow? Only NVIDIA, down $3.80. Is
Costco not in the Dow?
It certainly is, sir. And Amazon, down $1.40. Those are your two that are really down.
So Costco's not in the Dow then?
Costco is not in the Dow. We've been through this before.
Huh. I was a little confused there.
Yeah. Well, that's okay. So I don't know if it's
Russell
better.
up 13, NASDAQ down 30. I should be a pope.
You could have been a
I should have
pope.
been. Yeah.
Let's take a quick 90-second break. I don't think you should start at being Mother Teresa. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Sign of what comes up next. That's right. What's your assumption from our viewers comes up next. Thank you so much for participating. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With what's your assumption?
Please, Hammer, don't hurt Reddit.
Don't hurt Reddit. You want Hammer, you want Reddit to go lower.
Please, Hammer, don't hurt Reddit.
Reddit down $11 and change now. Reddit trading near its lows.
Yeah, finally we have an uptick in Reddit. I'm Tom Sosnoff. He's
Tony Batista. They have an uptick in Reddit P&L, a downtick in the stock.
Yeah, and to be fair, it's not a profitable trade.
Yeah,
it's
I
an
understand.
uptick.
I understand.
There's a big difference between a profit and an uptick.
We got AVGO down $8, Nvidia down almost $4, Palantir down $3.
Yeah, like I said, NASDAQ down 50 today. Russell up. That was
Meta down 6, Tesla now down 10.
Good night, Tesla.
Amazon down 2. Yeah. Got some of the high flyers taking a little bit of a breather here so far.
Yeah, they're coming for the pigs a little bit.
Coming for the pigs or the Russell, as you eloquently said.
I need Google down. Can you make Google go lower, please? Again, I'm Tom. He's Tony. This is Tasty Live. Thank you for spending your morning with us. And hopefully you're going to spend Friday morning with us in New York City.
Love to have you.
Love to have you at Webster Hall.
Mm-hmm.
We're going to
see us.
We're going to have a fun crowd. It's going to be a fun event. And
New York always comes out strong for us.
Yeah. It's going to be great. Doors open at 8 a.m. Show starts at 9 a.m. We are on wait list only right now, but just put your name down. You'll get in.
Mm-hmm.
We always open up stuff when there's some cancellations at the last minute. So you'll be able to get in.
Beautiful.
Anyway, that's it.
Anywho,
what's your assumption?
Let's do it.
Now it's 8:43 in the morning, and thank God we're not doing a live trading show today, because if we were, I would tell you that for the next 3 hours, S&Ps are going to be unchanged.
And they are unchanged.
Yeah, unchanged. Let's see what our viewers sent in. Assumptions. Ray. Hold it. From Burnish. What, Ray, where is this? I think it's I think it should be Alabama, not Alabama. What do you got here? Microsoft, you're bullish. I am not, Ray. I am so sorry. Microsoft pops to 530 this week. They can get TikTok. They already didn't, but they own 100 billion of OpenAI, which is becoming for profit and losing their nonprofit status. I don't hate any of your logic, except that I am currently short Microsoft. And what's Microsoft doing this morning?
Microsoft was down small. MS,
Yeah, I think so. I just don't.
got $1.77.
Down $1.77, right? Yeah, I'm not a huge bull in Microsoft. What's the IVR in there?
12.
Yeah.
Stock is off of its highs of over 500, but it is 507, well off of its maybe mean over the last year or so of 440 or so.
Yeah, I'm not a bull, Ray.
Ray.
Sorry, Ray. I mean, I appreciate the suggestion, but it's all yours, dude. Go for it. Let's go next slide.
Probably defined risk trade.
Yeah, I'm a little short Microsoft. That's why. Abhishek from San Mateo looking at Pepsi. He's bullish. Nov timeframe. Price dropped, and IVR is 92. Any news coming, or is this a great chance to sell premium? I don't trade Pepsi very much.
Me either. Pepsi IV rank is relatively high at 97, Sosnoff. I would say it's high. Earnings are October 9th.
I mean, Pepsi does have a really high V rank, and the stock's up. You made a nice call, Abhishek. The stock's up $1.70 today.
Stock's fallen from 150-ish to 141. This is the first uptick of $1.60 it's had.
Yeah, I think it's an okay stock to sell some premium in, actually. And I think you can even go to November because this seems like one of the better long-term plays. Markets are about 15 cents wide on the options. So if I do let's see where we can do here. What's the expected move? $10.
$10 for what time frame? You're going out to November?
$10 in November.
Yep.
You can go 125, 160. It's a little bit, yeah, that's probably what you do. For $2.
Okay.
High IVR.
Okay.
Let me see if we can get a fill here. I don't think so. Looks like it's going to be a little worse. Maybe a lot worse. All right, we're going to work it. I'm going to
working it, boss. I'm working it.
Pepsi's a tough one to fill, just so you know. I'm going to work. I was way off. This price is actually lower. Forget that $2 discussion. I don't think I'm going to get filled at 192.
Oh no.
Let's see what you got next. What's the next slide? I'm working it, Abhishek. Man, they're hitting the premium as fast as I can put an order in. They're lowering
the premium in
Pepsi.
In Pepsi.
Yeah, they have the mid price down to 190. Oh,
you filled 190.
190. Not the fill I wanted, but whatever.
Not the price you wanted, the fill you wanted, of course.
It's the fill I wanted, not the price I wanted. Let's go to Oracle.
Let's go to Oracle.
Brian from Denver, Colorado is looking at Oracle, and he says Oracle still has great IV to work with. I'm neutral to slightly bullish. Iron Condor or Jade Lizard, maybe. I'm not going to do Jade Lizard in there, but I do have an Oracle position, small though.
Oracle down around $5.50, $6. IV rank of 68 is actually upticking.
We have currently the 270, 360 strangle. I would be happy to add to that, but I want to roll those calls down. So let's just see. I'm going to roll the calls down to 350. I'm going to roll my calls down to 350, and then I'm going to add more to that position.
Let's do it.
All right, so we're going to sell let's go Oracle, October. We're still in October here. What I say?
October.
270 puts, and the
you could certainly go to November here too, right? I mean, I know.
But I'm not. I'm going to stay. I'm going to stay
30 days.
Yeah, I'm going to stay. And God, no getting fills in Oracle this morning. That's
Pepsi
weird.
pays a big percentage dividend, by the way.
What?
My peeps want to know. You know, Pepsi pays a big dividend, but it doesn't come till December.
Yeah, I don't think that'll matter. Okay, filled and Oracle.
Well,
I rolled my calls down and I sold more strangles. So I have the 270, 350 on. It's completely delta neutral. 270, 350. Thanks, Brian. Let's go next slide.
70, 350.
Natskis. Sunny Pasadena, California. I actually am a big fan of Pasadena.
Are you?
Yeah, I like
because of the Rose Bowl.
No, I just like downtown Pasadena. It's kind of a cute little town.
I had no idea you were like.
Have you ever been to Pasadena?
No.
It's nice. It's a cute little
I'm sure
downtown.
It is. I'm sure it is.
Tesla.
I've never heard you talk about the architecture of a town before.
It's not the architecture. It's just a cute little town. It's not architecture. There is no architecture. Have you ever been to LA? There's no architecture now.
What's cute about it?
Some of that, but there is no architecture in LA.
Well, okay,
LA is the weirdest architectural city. Like Chicago has beautiful architecture. Other cities have some really cool architecture. LA, it's a mishmash of everything. It's like Houston. It's everything. They throw everything. They throw the kitchen sink at it. Those are the only two cities, biggest cities in America that have the weirdest architecture. LA and Houston. Tesla, 30 days. Stock buyback fueled by the latest rally. Completely ridiculous. Oh, bearish. But the problem here is stock's already down $6 today. I'm with you. And if the stock bounces back up today, do we whack them and how?
Well, the stock's down $6, but it was down about $16 just a moment ago. Traded down to 409 and change. And Tesla's just a skosh off its highs of 425, $10, off of its highs it just made. I mean, it's not horrible.
I am very comfortable selling some more call spreads in Tesla. So let's see. We have some October short call spreads. We are short the what are we short? We are short the 455, 490.
Sure you don't want to buy the dip here? Volatility's contracting. Market's catching a bid everywhere.
No, stop talking to me. Stuff. Where's the expected move? $50. Stock's 415. We will sell the 465s. That's $50 higher. And we'll buy the 475s.
Mechanical, easy. Go into the expected move.
Scoop of chocolate, scoop of vanilla. $1.80, right at mid-price. That's what happens when you get liquid underlyings.
You get filled at mid-price typically.
Let's go to the next slide.
Okay.
Sean.
From
Hong Kong, neutral in Baidu. Baidu's overbought short term. Well, not this morning, dude. I know you put this in yesterday, but thank God we didn't do it.
We made this trade up $8, Baidu.
Yeah. So we're short right now the 125, 135. I do not like it. Let's see what we can do here. Because I'll sell some premium in there, Sean. I think it's
IB rank of 67.
IB rank of 67. Let's do some interesting stuff. Let's go to the expected move, which is $15 from where we're currently trading. So let's trade the 350s, and we'll go down to the 120s. That's about the closest we can get.
50s, 120.
350, 120, and let's sell it. 150, 120. I'm sorry, I said 3. Okay, good IB rank, and let's see where we can get a little fill here. I'm working it, dude. Sean, we're probably gonna be filled in a couple more pennies. I'm squeezing a little bit. I don't love
your squeezer.
I'm trying to get filled. Nothing done yet. Man,
I'm trying, boss. I'm trying.
Today's a little rough.
Volatility's contracting, down 30 cents now.
Russell, the Nasdaq's almost back to unchanged.
Yep, down 6.
It was so nice.
Stop talking to me.
It was so nice before.
Stop talking to me. You told me.
Stop talking. Yeah. Ruining everything.
I mentioned this to you 10 points ago. You said, stop talking to me.
All right, what's next? Sean, I'm working it. We'll be filled. I'm just waiting for them. I'm waiting for them to come to me. So far, they're not. Let's go next slide.
So far, you're on the do not mind list.
Austin from Boise. Tom, sell as many iron contracts possible, market open.
Oh, Boise from Austin.
Take 10, 20 or 10 before the Fed announcement. Quiet morning guaranteed. Guaranteed, the dude said.
Well, it was guaranteed if you put it on earlier this morning for sure. It's almost 9 o'clock though. That's your time frame.
Let's see. 0 day. Austin, let's see. What's the expected move right now? It's 40. So it's not bad.
No, it's significantly higher than what it's been.
We're currently at 66.12. So we're going to go up to 55 on the call side, and we'll go down to 55 on the put side. We'll go $50 away. And fill it at mid price, 1060. I did not do an iron condor.
You just did a straight strangle.
Yeah, God, why can't I get filled in Baidu? Am I doing something wrong here? Let's go to the next slide.
Usually you are.
Sorry, I'm trying to fill this order.
I mean, the natural's $1.50, $3.50.
Zach.
Baidu's not the most liquid.
No, it's not the best. Zach from Allendale, New Jersey. CVNA, less cuts in the future than expected. Halloween. What does he want to do here? Sell the 375s, buy the 370
put, sell the 360 put. Looks like a
reverse trade lizard.
No, these are yes, call, put. That is correct. Yep, reverse trade lizard. Selling the call, that was where all the risk is.
If you want to get bearish, Zach, today's the day to do it in here. So let's see. What do you want to do? He wants to do Halloween. So that means November?
Well, Halloween's the end of October, so I guess November. October 29th is earnings. His time frame's 15, 30 days, so it's October 17th is where he's going to.
Fine. So what does he want to do here? 375.
He wants to sell the 375 calls, which...
Well, you're not going to sell those, dude, because you got to go to the expected move, $40.
Well,
so
and October only has $10 wide strikes too, so...
Yeah, so you're at 370. You're going to go up to 420. That's just outside the expected move. And then on the put spread, you're going to sell... you're going to sell $40 lower the...
Well, it's not a classic jade lizard.
It's a reverse jade lizard. Selling at the expected move. Selling the 420 calls and the 330, 320 put spread. Heck, man,
okay, so you would collect $10 as a classic jade lizard.
I don't care about
$7.
I don't care about classics.
You're not a classic kind of guy?
Baidu finally filled. And
266.
And Carvana filled. So I did
703.
I did the reverse jade lizard, Zach. So we'll see what happens. Let me just see something. Okay. All right, let's go to the next slide.
Next slide we go.
Moo. Neutral. I want to short it, but it may be too early. Being cautious, selling premium without much bias. Kevin from Charlottesville, Virginia. Let's check this out. MU.
Check it out.
Moo. October. We currently have on not a good position. We currently have on a small strangle in there, and it is not working. Let's go to something better. Stocks trading at 160. We're going to sell the 180s and the
Mercedes
and the 140s. And we'll do it small because I do not like this stock and I have not done well in here. And it's going to trade around 815-ish. I don't know.
You're going to try.
I'm going to try. I'm having a little trouble this morning with some fills. We're going to come back to it. Hopefully we'll be filled in a couple seconds.
Hopefully.
813, 2 cents
off. Filled. Good job, buddy.
Yeah. Let's go to the next slide. John. Jack from Philly, PayPal. We have not traded PayPal in a while.
PYPL.
I have no idea where the stock's trading.
You're going to find out momentarily.
It hasn't gone anywhere. 67. It's been here forever. PayPal. It really has not moved. Jack from Philly is a little bullish in PayPal. All right, Jack, I got no position on there. IV rank is 12. I mean, there's not much to do.
No, not much
Expected move is 371. I mean, do you sell the 65 puts naked? I mean, that's really all you can do, Jack. They're going to trade around, I don't know, 113, 112. 112. That's about it. There's not much to do in there. The downside, okay, gets back to 65.
Mm-hmm.
No, you said bullish.
He's bullish.
Yeah, but it says PayPal getting back to, meaning that it's down near 65.
That's correct. That's correct.
Okay, let's go to the next slide. Taking a look at my SPX position.
Your SPX position.
Yeah, because we sold off a little bit.
Yeah. It was up 10 cents, down 10 cents.
Yeah, I know. I can roll the calls down. See, that's what you do.
You could.
Have a little fun. Starbucks, Mike from Salem, Oregon. I kind of like Starbucks here. I agree with you. I have not bought any yet. SBUX. It's definitely on its butt, even though it's rallied a couple a little bit.
Up a little bit too tree.
The IVR is just okay. Yeah, it's too cheap for. You can sell. I could sell naked puts in here. They're not very. The naked puts are cheap, but the 80 puts they're like $1.20. I have a small position on in Starbucks already. We'll add to it. Tiny. I don't know where to get filled. These puts are.
Puts or schmutz?
Puts or schmutz. It's the last one, huh? Oh, filled. 117. All right, Mike. Just added a few puts to our position because we're already a little bit long Starbucks. Fine.
Okay. Fine.
S&P's still wrapped around unchanged.
They are 6666.
Russell up 22, looking really strong. NASDAQ down 60, looking really weak.
I don't know about really.
Can't do any better than help you guys out that way.
What's that?
Can't do any better than helping you out that way.
You're a giver.
Just a giver. Let's see, what else do we got here? I'm going to make one more.
Did your Starbucks?
Huh?
You filled your Starbucks.
Yeah. And I'm going to make one more adjustment in the SPX. We like to have some fun in there. I love adjusting trades because it drives everybody crazy. Myself included. All right. There you go. See, the only problem with 0DT today is I don't know if premium's going to come in at all.
Not going to come in until right at the number.
Microsoft, we did nothing because I was not going to get long it. Pepsi, we sold a strangle. Oracle, we sold a strangle. Tesla, we sold a call spread to get a little short. Baidu, we sold a front month strangle. SPX, we sold the 0 day. Carvana, we did a reverse Jade Lizard, John. It's reverse Jade Lizard. MU, we sold a strangle. In PayPal, we sold a naked put. And in Starbucks, we sold a naked put. So a couple of short positions, a couple of long positions. Everybody's happy.
Everybody's happy. Mixed bag of tricks.
Totally.
Good job.
9 out of 10.
Good job out of you, my friend. We're going to take a quick 90-second break and come back. What do we got coming up next, Oz?
Got our boy.
We got
Jacob
Perlman in the house.
We're going to look into the mind, yes, of Jacob Perlman.
Back in 90 seconds, it's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, with the skinny on options math. My man Jacob in the house. Jacob, how are you, my friend?
Good morning. I'm well.
Glad to hear that.
I'm well. How are you two doing this fine day?
We are spectacular.
Mm-hmm.
We are living the dream, Jacob. Living the absolute dream.
It's not a nightmare for you then?
No, it's a dream. Today's the dream. We're traveling tomorrow, so we're living the dream today. Beautiful day in Chicago. Right. Everything, market's cooperating. It's all good.
So far, so good. We'll see, though.
Good.
Things can change. They usually do quickly.
All right, what you got for us today?
So today I wanted to talk about the risk neutral measure, which is sort of a complicated concept that comes up a lot in financial math, but is very hard to, I think, get non-probabilists on board with.
I don't know if we're ready for a complicated. I don't know. I don't know where our heads are at today, but
So the key thing here is that it sort of requires ignoring the realities of risk premium because we need to do mathematical models. And so we're going to assume that you can always perfectly hedge away your risk, right? You have a complete frictionless option market. And we're going to sort of see what the results of that are and how you can then derive upcoming probabilities from current prices. It's this like very powerful mathematical trick, but it's really so that we can use the tools of of more widespread tools in mathematics in these sort of less, these more psychological, the market's just not really a perfect mathematical setting. Because in fact, it has a lot of people in it who behave irrationally. And so we need to come up with some assumptions that we're going to make that can get us around this idea and let us do mathematics to get an idea about what's going on. And then at the end, at like the last possible moment, we can try to adjust our calculations for how people really are as opposed to how math says they should be.
Okie dokie.
Okay.
So let's get into it and we'll see where we're going. So the key thing in almost all of this are what are called martingales, which we've talked about a number of times. It's a probabilistic property of a random variable that gives a technical term for what it means for that random variable to represent a fair game. Right? So if we're going to flip a coin, and if the coin is heads, I win $1. If the coin is tails, you win $1. That's a fair game. That's a martingale. And even if we play it repeatedly, even if you come up with a strategy like, oh, you're going to stop after you win 3 times in a row, it doesn't matter. We've got very powerful theorems that say the combinations of martingales are martingales. Any strategy you come up with how to play a martingale is a martingale. And this gives it a lot of really robust mathematical properties that let us express this idea of fairness and also fit with the idea that you would have an efficient, free, liquid market, right, where everything could be exchanged at any time, so there really shouldn't be a distinct advantage to one side or the other. Right in the middle here is sort of the formal mathematical definition, which is that the expected value of a martingale at any future time, given any amount of information up to some earlier time, will just be the exact value that it only depends on the value at the end of that earlier time and is exactly the value that it had then. Those are the properties that make a martingale. And mathematically, this makes it very nice. It makes it very easy to work with. We wind up with sort of this whole theory based on it. But in fact, reality isn't full of martingales, unfortunately. Brownian motions with no drift are martingales. But if you have any drift in the system, then it's not a martingale because it goes up. In fact, even just cash isn't really a martingale. Let's go forward one and we'll talk about that. The need for the risk neutral measure is because even cash isn't a martingale, even though it feels like it should be, right? If you just have cash sitting, that seems like it should be fair. So it should be a martingale, but it isn't in reality because we have this risk-free rate, this future discount factor, this idea that money today is better than money tomorrow. All of these are the same concept. And so we need to sort of invert that idea so that we can do the math of martingales, even though the realities are not martingales. So let's go forward one to the risk-free rate, and we'll see. John? Yeah. Money today is better than money tomorrow, which is often summed up by the fact of the risk-free rate, right? Which would mean that you would get a return on a zero-risk asset, right? So you would have something where its present value of $1 tomorrow will be worth a risk-free rate more amount than that, right? Its expected value in the future is exactly what its value will be. And so the risk-neutral measure is a way to account for this rather than saying, oh, well, we give up. We can't do all of these powerful mathematical techniques that rely on everything being martingales. We say, no, the market really should be fair. And it's just this like time distortion going on that's throwing us off. And the risk neutral measure is going to be a way to try to incorporate that time distortion into our viewpoint so that we can continue to use the math of martingales. Let's go forward one. This is the most toy example. It should be pretty straightforward. And the idea here is that if we have, the simplest of the binomial models, right? We've got a stock price at 0. And at one point in the future, it's going to either go up with probability P or go down with probability 1 minus P. Right, and these factors could be that down is exactly 1 over up, but it doesn't matter. It's up by some factor, down by some other factor. Then we get that the expected value, well, there's two ways I can compute the expected value. One is I can take the probability of each outcome times its value at that outcome. So P times its value if it goes up, plus 1 minus P times its value if it goes down. Or I can say, well, I could hedge this with exactly cash. What would the value of cash be if I just held it that long? Well, it would be the risk-free rate. It would have gone up by the risk-free rate. So 1 plus the risk-free rate times its current cash value. Solving this equation, I can find P. And finding P, I get that it's this value that depends on, the higher the risk-free rate, the more likely you to go up. The bigger the difference between an up move and a down move, the less likely you are to go up. That increases the denominator. And also you get this important feature here, which is in order for this to be a probability, you see that U has to be bigger than 1 plus R and D has to be less than 1 plus R, right? Which is to say that the risk-free rate has to sit between, right, this S0, which is this risky asset, has to have its ups and its downs spread around the risk-free rate. Otherwise, you would get a negative number there or something, which is not a probability measure. And this is exactly saying that there isn't an arbitrage to be had by S0, which is exactly a theorem for risk neutral measures, which is that the risk neutral measure exists if there is no arbitrage and is unique if the market is complete. Complete meaning that all options are at all expirations and all strikes are priced.
Following him, Saz?
Yeah, I follow, but I still don't understand why. I still don't understand why cash isn't fair.
Cash is fair. This is the whole point. The risk neutral measure isn't saying that cash isn't fair. It's saying that cash measured just in dollars doesn't look fair, right? Because you have $100 today, and a year from now you have $105. That looks like it wasn't fair. And so the risk neutral measure is a way to reshift our view of the world so that cash is fair.
Okay.
It's so that we look at $105 a year from now, same as $100 today.
Yeah, I understand that.
Right, to make cash fair. But that's the whole point of the risk neutral measure is to make cash fair. And in fact, in the Black-Scholes model, where the Black-Scholes differential equation drives all your prices so that they've got that upward drift of R plus the volatility term times the Brownian motion, all in a geometric sense, where everything has a factor of that. Then when you do the risk neutral measure, exactly what it comes out to is all future values get discounted by e to the minus RT. It's very straightforward that way. Other more complicated models can have more complicated risk neutral measures, but in the Black-Scholes model, which is the one that we sort of found our understanding on, it is exactly what you're saying. It is you discount everything by the future discount of cash. So that cash looks fair. Once cash looks fair, everything looks fair. The model works lovely.
Okay.
It does run into this one thing, which we're going to talk about in the next slide, where I don't have any words. I just have a picture and a discussion point, which is there's a contradiction in how we talk about these things, where we say that everything should be fair, that it should be an arbitrage-free market, that it should be the risk neutral measure should obtain, but we also believe that you receive a risk premium. And this causes a confusion to me, to traders at home, to viewers who write us emails, right? How can, if everything is a martingale and the whole market is fair and there are no arbitrages, how can you get given an edge for taking on risk?
Well, it's not necessarily an edge. Taking risk doesn't have to be edge. The only way you can do it would be, and I don't think this is what you're looking for, would be scale. But I don't think that taking risk has to have edge.
So that's the thing, right? In the models, taking risk does not have edge, right? Everything's a martingale, everything is fair, right? Your selling options does not give you an inherent advantage. But in the reality of the market, where there are market participants who are primarily risk averse, right? They are not risk neutral, right? The risk neutral measure is what happens if everyone is neutral regarding risk. They don't care. As long as the bets are fair, they'll take them. They don't care if it's more dispersed or less dispersed. In reality, most people, and particularly investors, are willing to take a small loss to their expected value to have increased consistency, right? That they're risk averse in this sense, which is why there's like a long-term advantage to being a lottery salesman, a lottery ticket salesman, or an insurance salesman for health insurance, not disaster insurance, because those are so highly correlated. But if I sell 10 raffle tickets and the prize is going to be $10 and each one is $1, that's perfectly fair. But I know but I'm taking on risk and everyone else is sort of having a negative risk, right? They have a chance of making a bunch of money and a large probability of losing a small amount.
Right.
So in fact, I can possibly sell these raffle tickets for like $1.10 or $1.05. Right. This is the idea of the risk premium that you get paid on, is that by selling 10 such raffle tickets, I've completely hedged away my own risk and taken in my risk premiums. The difficulty is that the risk neutral measure forbids this and the mathematics don't account for this. And I think this is one of the most important things for people who start getting into the weeds of the mathematics, right? If you go and you read Shreve's financial modeling book, you can get lost in thinking that there should be no arbitrages, when in fact, because many people have non-risk neutral utility functions, there are in fact risk arbitrages. They just can't be accounted for properly in the models because, like we've said many times, once a model has arbitrage in it, it's hard for it to do anything else because it will always just prescribe you should do the arbitrage, which really reduces the value of it as a model.
Yeah, I understand that.
Perfect. Then I think we're good. We can go to takeaways or have a more full conversation. Yeah, this is just my reminder to discuss the fact that people take in risk premiums, and this is the death of models. But yeah, let's go to takeaways. Martingales are the mathematicians' formal way to define fair games, and they correspond exactly to a no arbitrage assumption. But due to the risk-free rate, however, in like a pure dollar sense, not even holding cash is a martingale. And so the risk-neutral measure is this just probabilistic tool where you take current prices, you invert them to come up with probabilities, and in these new probabilities, everything is a martingale again. If you had theoretically perfect hedging where you could liquidly trade anything you wanted at any time, then the risk neutral measure would be unique and inevitable. In a sense, the fact that there's spaces between strikes and spaces between expirations means that there's sort of a range of possible risk neutral measures. And I think that to one extent, you can view market makers' bid-ask spreads as them just taking those ranges of risk-neutral measures, right? They say, well, we don't know exactly the risk-neutral measure because we don't know all option prices, right? There's no 59.75 calls being traded, so I don't know those prices. And so this means that there's some uncertainty in what the true risk-neutral measure is. And then they just go, well, there's an upper bound and a lower bound, and they use those as their bid-and-ask settings. In the Black-Scholes model, the risk neutral measure is very simple. It just is discounting everything by a constant future discount. In reality, we believe that market participants demand a risk premium. So different assets would need to be discounted differently, but mathematically means it introduces arbitrage to the models and sort of throws out all of the math that you're doing. It's one of those cases where we can recognize that the math runs into its limitation, but rather than trying to do more math at it, my counseling is you should just recognize that you've run into the end of where math can help you when you run into places where you have arbitrage or non-risk neutral trader preferences.
Very nice.
Very good.
Very nice. That's a most.
Tom says it's very nice. It's very nice.
It's the heaviest explanation of risk neutral I've ever heard, but still, it's good.
I don't want anyone to, not be confused.
No, thank you, sir.
Very good, my friend. We're going to take a quick 90-second break. We're going to come back. Saznoff, we've got Johnny trades coming up next, followed by your phone calls, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. We'll open up those lines momentarily. Give us a buzz. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. But before we get to that, you can give us a call, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. You want to know why? Because you can get answers from Mr. Chloe. That's right. Tom Sodnoff himself has answers to all of your questions. But before we get to that, let's get to my man Johnny Trades. Nick
I can answer
Batista.
every single question. If I can't, AI will help me.
That's correct. Play some music.
Come on, John.
Nah.
It's all right. Appreciate it, John. Thank you. Good
No
morning, boys.
fanfare for you, son. Sorry, the Batista curse is following.
All right. It's all right. You know. It's okay.
Hey, you went to Oshaval last night. How was it?
I did. It was delightful. It really is.
Good. I got kicked out of there, so I don't know. I've never had a fresh
I was with
burger.
you for that. Yeah.
I haven't been there.
We were too big a party.
I haven't been there in
Any
a while.
Batistas.
You get the burger?
Of course. I was actually surprised because every time I've been there, even at like 4 o'clock, we went there at 4 for Gino's birthday. It's usually an hour wait. We got right in. There's nobody in there.
Yeah, more burger joints have opened up that are like, you know,
4 o'clock's kind of early.
If you
go, I mean, it's prime Sosnoff eating time.
Yeah.
But it's a little early.
If you go at 5 o'clock, it's a 2-hour wait.
I mean,
from my experience.
I know, but I'm saying
from the past
4
experience.
To go at 4 o'clock, it's a little.
It was like 4:15. You know.
How come you didn't
it was
go?
right there. He doesn't stay downtown.
Come down at 4 o'clock in the afternoon to the city.
Your daughter's birthday.
It doesn't matter. He has other children.
I am taking my daughter out for her birthday. I am just fine, but I wasn't going there. Plus, I said I would never go there again.
Yeah.
So they kicked me out that day.
Yeah, that was rough.
And nobody sticks to their guns like you do.
That's right. That's right. That's right. I walked out once.
You got no problem with the small cheval lunch, though.
Small cheval.
Yeah, different.
I like,
It's
I like
delivered.
small cheval.
It's good. I mean, small cheval
is nowhere as good as.
It's a way different. It's a whole different.
It's a way different burger, but
yeah, it's a whole different.
Way different burger. Very salty.
But it's good. But it's
Very
good.
salty. Very salty.
Yeah.
Oshaval.
good.
I haven't been there in a long time, but it's good.
Yeah. What's for lunch today? We got something good today?
Mediterranean.
Which one? Greek kitchen?
Pita.
Pita. It's not the best one.
It's okay.
Yeah, it's all right.
They have good onions.
Good onions.
Yeah, they have good onions.
What's so good about them? Like the way they slice them?
Yeah, their onions are great.
Huh.
Yeah, you just get their onions and throw it on whatever else you get. It's great.
You excited for my giardiniera that I got coming your way?
Wow, for all of us?
What do you mean?
You get one too.
What do you mean?
Sadnuf, your spread is Oh, no, you're down a little bit. Never mind.
What do you mean?
Batista Gardens.
Batista Gardens.
He's had a garden on his balcony.
On my balcony, I've been growing peppers all summer. I saved them. I'm going to make giardiniera.
Is it spicy peppers?
Oh, yeah. I got hot banana peppers, jalapenos, Tabasco peppers.
He's been watching these things like they're his eyeball. I mean,
I go home, I like talk to him, you know.
How many peppers did you get?
I got 2 gallon-sized bags full over the summer. Ziploc bags.
That's pretty good.
Yeah. Yeah.
On your balcony?
Yeah. Put some onions in there, some cauliflower, some celery. Right now, it's
like a
pickling.
little-
right now in my fridge.
Like a little carrot.
Did you dice it?
Carrot in there. Organic carrots, too.
Organic for you.
All organic.
Did you dice them like real small, or did you leave them a little bit more chunkier?
So
What's the oil? Is it just olive oil?
So I'm pickling them, and then I'm going to put them in olive oil so they last longer.
Oh, you're pickling them.
Pickling them first.
To make your giardiniera.
Yes. And then you put them in the jar with olive oil, and it'll stay for like 3 months.
Oh, way longer.
I got a label made too. I got the whole
way
thing.
longer. What do you?
Yeah. No, you can.
Yeah. What are you calling
You
them?
got a label made?
Oh yeah. I got labels.
What are you calling your?
Hey,
your
this is
Batista Gardens.
This is his game.
Gardens.
This is his
Batista
game.
Gardens.
This is his power move.
Yeah.
Okay. This is his flex.
This is his
I
retirement.
got a logo.
plan.
This
Logo
is his flex.
too.
He's got a logo.
Yeah.
Everything. This is
Yeah.
You got a logo?
Yeah. Oh yeah.
It's a big
What is the
flex. I
logo?
like
Yeah.
this.
I can't give it away yet.
Yeah.
When you get it, you
Batista
can see it.
Gardens, and it's going to be just hot.
Just hot.
Yeah.
And at one time only. Next year, I'm going to partner with Westwater Farms.
Westwater Farms.
Westwater Farms, because he has a lot of land. He's got way more peppers than I do. So
Yeah.
we're gonna do like a collab, a one-time drop.
I like it.
Yeah. So we got plans.
One time drop. You're like those TikTok shops.
Yeah, exactly.
I just
$20 a jar.
I love giardiniera. I actually use it. Like I don't like.
Do you like it chunky or?
That's what I'm asking. Did you dice it or did you chunk it?
But I was gonna do
answer.
a chop with it, like and make it like kind of
Very
like,
small, like a relish.
not that small.
Like I don't like the
Small.
way JP Gracianos does it with the relish. I do not like
You
it.
don't like the relish?
No. I like the chunk.
You like the chunk.
I do.
Okay. See, I've been debating this if I was going to go chunk
Oh, no,
or
you
relish.
gotta go-
I want to go in the middle. I want to do like a
I don't mind
chunky
that.
relish.
I don't mind that.
Like a chunky relish where you got some pieces that are a little bit bigger than the others.
I like the chunk.
Because you got to have a little chunk. I feel like you got to have.
You got to.
It's like crunchy peanut butter. You got to have crunchy peanut
Yeah.
butter. Like little peanuts.
You got to have the jardinera. You got to.
Like if you get orange juice, you can't go like you got to get
I don't
some
want to
pulp.
spread. I don't want to spread.
Yeah, no spread.
I want to see them.
Okay. Okay, I'm with you. All right. So get excited. Next week. I have
It's my dream now.
Wow.
Before the weekend.
Batista
right?
Gardens is
Early in the
looking
week?
for investors. We could sell it out of
Do you have
back
an irrigation system?
This is the irrigation system right here. Yeah, we're looking to expand. If you like what I got.
Let's test them first.
Yeah, did the herbs too. I grew the herbs too.
Before we get all excited, let's test them.
Okay, all right.
You get a Batista Gardens big piece of toast at.
I will give you my honest feedback.
Okay, all right, good.
Okay, well, let me say something right now.
Yeah.
He can't like it.
He can't. It's impossible.
Like, it's going to be all right. Like, that's going to be.
Yeah,
the
that's
best
what you're
you're
gonna
gonna
say.
get.
Depends. If we don't die, they're going to be all right.
All right.
855-238-2789 or
I have-
855 be tasty. If you got some jardinere talk you want to call us,
Best
give
way
us
to
a buzz.
test jardinere, two ways. On tuna fish and on brats.
Brats, I'll take that.
Those are my favorite ways to do it. Brats or tuna fish.
Yeah, I don't mind on tuna fish too, but I like it.
I like it on tuna fish. I like it on brats.
How come you don't grow peppers? You got that nice little.
How come you don't grow anything? How come
Yeah.
everything you do dies?
I'm not a big grower. I'm a shower.
You shower? Yeah.
You all show, no grow?
Okay, yeah, fair. Yeah, I guess it doesn't grow anymore.
It sure is cold. It sure is cold in here from my shower.
Ooh.
You ready for Johnny?
I got a couple trades for you.
Phone calls open.
That's a good way to go out. All right, first trade. I mean, it's a tough day. It's a tough day to trade. You got FOMC later today, 1 o'clock. That comes out. Then you got 1:30. J. Powell takes a stand. What do you think? What's your thought process? Because I feel like I'm public on my thinking, which has me.
What's your question?
What do you think the move is through on FOMC? Like
down. It's going to be nothing to down, pretty decent. No chances.
Nothing to down, pretty decent. So
nothing to down, pretty decent.
What does that mean? So like, is decent? You mean like big move down?
No, I don't think you're gonna have a big move down.
Oh, so it's inside down, is what you're thinking.
Yeah, 40, 50 points.
Okay.
That's it, max.
You think it continues? Is this the top? Have we hit the top? Or you think that's a buy the dip?
I think you have to wait till Friday.
Okay.
You got to get through this stupid triple witching.
Yeah. Okay. All right.
Yeah.
I have that same sort of thought that it's inside down, you buy the dip.
Ooh, that's hard.
And I think everybody thinks that too.
I hate buying the dip.
So it's either a big move in either direction. I think you buy the strangle.
Well, the premium right now, I can tell you because I did a
It hasn't moved.
It's gone up.
Really?
Yeah,
Okay.
It's not coming in at all. Not even a penny.
Well, I'm looking for a short-term SPX trade, a little Johnny trade.
Yeah, what are you doing?
I'm doing the 6675. 66.
You mean you're doing the is the 1 day or the?
I'm doing it for the end of the week.
SPX.
End of the week, right at the expected move.
Okay. What is? So you're doing that.
6675.
So is this the 19th? Is this AM?
Yeah. No, I'm doing PM settled.
You're doing 19th PM.
Yes. I do not like the AM settled. I don't like the set.
Okay. So you're doing 19 PM. That's 2 days.
2 days.
Okay. What's the expected move? $75.
I'm right at the expected move.
So you're doing the 675s.
Yep.
Correct.
675, 685.
That's why you have it on the screen, right?
That's right.
I wasn't looking at the screen. 675, 685.
Traded it at 225.
It's a 205 right now.
Ooh.
So I'm gonna put.
Johnnies are always early, so you know.
Yeah, I know.
But a little better prices for my peeps.
I'm gonna put a 210 in.
Okay.
Okay. What's next?
All right. 1 for 1.
I would quit while you're ahead. So.
Seriously,
I didn't get
100%.
filled. I didn't get filled yet.
Okay. You could do this with the FX products if you want to go real short term, but The euro has just had a monster move. I think the euro is across the board, volatility is super, super low. The euro has low implied volatility, but from an Ivy rank perspective and a historical perspective, it's a relatively high implied volatility. I'm doing a 1 point wide call spread here, the 121, 122.
I'm short the 121s right now.
There you go.
So what are you doing?
I'm just doing a 1 point wide.
November, right?
I'm doing November 7th expiration.
121, 122.
Yeah. I did a 20 ticks, or 200 ticks.
Yeah,
which is about $250 in total value. You have $1,000 in risk, but because of span margin, you only put up about $350. So it's relatively small, but has
small but mighty.
Small but mighty.
Filled.
Yeah.
At $2.
Yeah.
Yes, you are.
Cool.
I trade that a lot, just so you know. I trade a lot of euro.
Yeah, I mean, it's super liquid.
It's the best of all the currency products.
For sure.
Yep.
855-238-2789 or 855 Be Tasty. Yes, that's the number to call. I got 4 or 5 lines open. Give us a buzz.
What's next?
Don't call and
Last one. This is Cookie Cutter. Delta. You got a position in Delta?
Yes.
Ivy
Delta.
rank 36.
Yep, we're a little bit.
It's got earnings coming up like in the middle.
It stocks up $1.23 today. We have a Jade Lizard. We did it at, let's see. Jade Lizard. We're short the 57.5 puts and the 65.70 call spread.
Okay. So I'm wrapped around where you
We're up small on it today, but down small on the position. What are you trying to do?
I'm doing the 52.5, 65 strangle. I did a 234. Uses about $500, $600 in buying power.
October?
I did October.
52.5.
65.
What do they have, earnings or something?
I think they have, I don't know if it's confirmed yet, but I think it's like middle of October, so you might have some.
Yeah, it's not confirmed as you are.
Not confirmed yet.
Yeah.
It looks like, if you look at volatility, it's baked into the October expiration.
All right. What price did you get filled at?
234.
237.
Wow, you had to do that, right?
Three pennies for you. Cool.
I'm not filled yet.
Had to be that guy.
I'm not filled yet on SPX.
Cool.
You are not filled on SPX. Correct.
But working it.
Awesome. That was a 3 for 3.
That's
in terms of approval. You didn't get filled yet on the SPX one, but you blessed it.
It's one of your better days.
Wow. That's good. That's good. All right.
He's being extremely kind to you right now because he mentioned something to me that we did on Friday that he's not mentioning to you right now because I think he's a little scared of you.
I'm not scared of him.
Ooh, what do we do?
You guys sold strangles in Baidu?
I don't know about that.
I already checked.
I don't remember.
I wasn't here Friday, so the only trade was.
Ooh.
I couldn't even.
So you've been trading Baidu for the last year. It hasn't moved, and it finally moved, and it's our fault.
Of course.
The one time.
You put the trade on.
Do we get credit for any of the winning, like the SPX?
No, if it's a winning trade. If it's a winning trade, it's mine. If it's a losing trade, you did it.
Okay,
Exactly.
got it. Perfect.
And that's
perfect.
exactly the way it works.
Well, nothing's changed.
Yeah.
What's
That's
changed?
perfect. All right.
Yeah.
I like it.
Wow. So he's been salty about that all morning?
I haven't been salty. I just mentioned
It
it.
was the first thing he mentioned to me.
I just mentioned
at
it
6:30 this morning.
He likes to brag about all the winners, and so he mentioned it. I'm like, oh, what about this? He's like, I didn't do that.
At 6:30 this
I
morning.
didn't do that. We didn't do that.
He's been thinking about it since 4 o'clock this morning when he looked at it, when he woke up to pee.
Yeah. Did you do anything with it yesterday? Were you mechanical?
But I asked him,
No.
I said you had a 20-cent winner yesterday. Why didn't you close it?
Yeah.
20-cent winner?
Hey.
I've seen you take it in nickels and celebrated it. Like,
Hey, it is what it is.
Oh, my God.
855-238-2789 or 855-BE-TASTY. Give us a buzz. Don't be afraid. Got 4 or 5 lines open.
That's it? Does anybody want to talk to you two?
Oh, no, we'll get calls.
Phone lines
They're waiting
lit up when you were on the show, and you'll be on the show
Friday.
tomorrow.
Yeah, Friday. We had some great calls.
Friday we had great calls. We have great calls on Thursday tomorrow, too, when you're on the show.
Yes.
Everybody loves bat versus bat.
Yeah. I think they're sick of you, Tom.
I think so, too.
Your shtick is just like, ooh.
Good.
Ooh.
Oh, you back hurting?
What happened?
Back hurting?
My back hurts, too.
Yeah, my back hurts from carrying YouTube. That's all.
We're calling it Tasty Life Next Generation. That's right.
Oh, my back hurts. But I'll be in New York tomorrow, so yeah, have fun.
All right, thanks. Yeah, you don't.
All right, you want me out? I didn't know.
You can hang around if you want.
Well, you're the boss.
No, you can say. Sure, you can say.
He's a paper tiger.
Paper tiger.
You're the boss.
No, who the boss? Mookie.
Beth is the boss.
Beth is the boss.
That's the
boss. Biatch.
Omaha.
Thank you, John.
John.
Thank you, John.
John's her number one biatch.
Mm-hmm.
John's just playing. John's doing.
He's doing what he has.
He's got to play down the middle.
Right.
Yeah. So anyway, this is going to be what you're looking at it for the next however many hours. This is
going to be a chop fest.
What?
Going to be a chop fest.
It's going to be a chop fest till they get back to even.
You think they bid volatility into the event?
They're already bidding it up.
Are they?
Yep.
Well, /VX is down 20 cents, but it does look like
I know, but they're bidding up.
daily volatility is.
They're bidding up the SPX vol.
Mm-hmm. Yeah, $42 expected move. We had under a $40 expected.
That's right.
Move, an hour ago.
Yep. Yeah.
So you got volatility definitely.
Yep. They're bidding it up.
Definitely creeping up.
It's not like huge, but they're bidding it up, just nickel and diming it.
Yeah, more like not taking out the hours of the day than bidding up volatility itself.
You know what that means? They're going to come out at some point.
Yeah.
Not until after one.
Everything has to go to parity, especially in 0 days for sure.
Yeah. But I got my truth or skepticism, which makes it really tough to trade in that hour.
Oof. I would not want to have this SPX position that you have on that you did all by yourself. today.
Yes, exactly.
Right.
You're getting no help with that management. Your account.
I did not get filled on the SPX.
Oof. You want Nick and I to look at that while you're
I can
on
monitor
Dylan Radigan? We can take care of it for you.
I would rather monitor it on airplane Wi-Fi.
That's not saying a lot, but we appreciate
American
your
Airlines
support.
Wi-Fi is pretty damn good.
We'll see if it is.
Can't say the same thing for the free Wi-Fi on Delta.
Which Johnny trade would you put on? We did a little poll. I got to thank Laura in production. The rest of the production team, of course, it's a team effort, but thank you for taking that. Which Johnny trade would you put on? The SPX short call spread, the Delta Airlines short strangle, which was neutral, or the Euro short call spread bearish?
What do you think?
My favorite of those trades is the Euro.
Okay.
And that was the last one.
It's the most. It's the most overpriced of anything.
Do you dabble in the FX in the Tasty FX
first
products?
one was the SPX trade, followed by the Delta Airlines.
I dabble in the spot FX.
Yeah. Because today's a big day for
I dabble in it, but I prefer the futures.
Yeah.
Because I prefer the options.
I agree.
So
I agree.
The problem with spot FX is they don't have an option market.
Yeah.
And I don't really care about the leverage that much, and so I prefer.
Well, that is
because you got so much capital, you don't have to.
No, I'm just saying. I prefer the option market.
Yeah. I do. I like the one-click close.
Oh, the feature on Tasty Trade. Yeah, you like
Tasty FX.
Yeah.
I mean, it's a good interface.
It is good interface.
It's a good interface. Yeah. They did a good job. I like the interface. I just don't trade a lot.
Clip that. Send that to the FX team.
I just don't trade a lot of.
Did a good job.
I don't trade a lot of underlines like that. I mostly trade. I don't trade a lot of Euro futures. I trade mostly all Euro options.
What do you think happens with Bitcoin into the event?
In the what?
Into the event today.
Oh, I think it's a non-event. It hasn't really moved. I think Bitcoin's going. I think the risk in Bitcoin, if it doesn't just sit here for the next year, which it might, the risk in Bitcoin is a lot lower.
Let's go to Los Angeles. I got Jeff. Jeff in Los Angeles. Thank you for calling in yesterday. Thank you for calling in today. Hey, Jeff, what's up?
Hey, guys. Thought I'd take advantage again while the lines are open.
Sure.
Yeah. So quick question. I usually trade mostly short puts, short strangles, typical Tasty mechanics, but a little bit of jade lizards. But I was curious about calendars. I've never really wrapped my head around kind of like, buy a call, sell a call in the later. But are you playing for volatility contraction, or how should I think about those in my toolkit?
Exactly the opposite. You could think about them as a volatility expansion, more so than contraction. And you could think about them as directional plays. If you do them at the money, they're non-directional. If you do them out of the money, they're more directional. But I would think of them as low risk, low reward, hoping for a pop in volatility. Very low risk.
Completely the opposite of what you're doing with strangles.
Yeah, completely the opposite. It's low risk, low reward, a little bit directional. Most people play them a little bit directional. And
so if the stock's 100 and you did the 95 calendar, you would want the stock to pin 95 at expiration or close to it.
usually they give you, the way to think about calendars is whatever the expected move is the amount of wiggle room you have if you kind of hold it through. But you want to pop and vol.
Got it. And you're typically buying the short dated month and selling the long?
No.
No, opposite.
Exact opposite.
Oh, vice versa.
Yeah.
Yeah, got it. Okay, got it.
Because as a customer, if you buy the near term and sell the long, it's considered a naked position. So you have to do it the other way and sell the near term, buy the long.
Got it. Yeah. And then when it pops, you just basically close the position outright, or if you want to,
You close it as a spread. You close it as a spread. No legging. If you go 2 months, if you skip a month in between, then you can roll forward a month. But if not, then you just close the whole thing out.
Got it. Would that would ideal be kind of like a 21 and a 45-day dated or 30-60 kind of time frame?
Yeah, perfect.
Yeah.
Or you could go 30-90.
Okay.
You go 30-90 if you want, 30-75, with a roll in between. It's up to you, but the shortest period we do is a month.
Yeah.
Got it. And just a lot lower risk version than buying calls or puts or something with have a directional assumption.
It's lower risk than anything else you can do.
Yeah, it's a low risk.
Yeah, low risk, low payoff.
Low risk, low reward. It's a slow moving vehicle.
Yeah.
Like Sosnov.
Yes.
All right, sounds good.
All right, man.
You got it. You got it.
Thanks.
Sosnov, as we do what? We're not limping into the
No,
chopping?
chop's a better word. Like bonds will be unchanged at 1 o'clock. They're up. What are they up to now? 3?
They're up 3. They were up 7, 8.
I know, but they'll be
NASDAQ down 100. That's something.
Yeah, NASDAQ's weak today.
Good week all day. Russell up 22. That's big.
That's strong. This is exactly what we talked about yesterday afternoon. A drop of a quarter points or maybe a half point, whatever it is.
I mean, a half point, the odds are very low.
It's good for the Russell. It's bad for the NASDAQ relative. And I think you're going to see a continuation of this. I don't know about the S&Ps. And the Dow has been really strong all day.
Yeah.
Probably you don't know something about something. You usually know something about everything. Just watch Truth or Skepticism. It comes up at 1 o'clock if you don't want to watch the FOMC.
What's the topics today?
Haven't decided yet. Something hugely controversial, I'm sure.
Of course. Tune in.
We can debate it.
Tune in.
Maybe how FOMC meetings trying to get interest rates to 0 like Obama had?
I don't want interest rates to go to 0.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Oz? That's right, Liz and Jenny. 14 years. One day I'm going to get an answer. We'll be back in 90 seconds with Tasty Live.
All right, welcome back, everybody. We are here for another Rising Star shoot today. I'm excited about this one. We don't get a lot of women in here. Emily, welcome.
Thanks.
It's really fun to have you. We've been dying to have a woman rising star on here. We've got you.
No.
We trapped you. We trapped. You're in from Ohio.
Mm-hmm.
And I guess you spent some time in Chicago before.
Yes. I went to school here, University of Chicago, and then I lived here afterwards. So I'm sort of a Chicago native.
You're kind of a South Sider, like the Pope.
Yes.
University of Chicago, you were a history major.
Mm-hmm.
And then you got your master's, you almost got your PhD. We got your whole history, educational history down. And yet you ended up as a jeweler.
Yes, I did.
I mean, you're also a professor and English professor, but I'm just giving people a little bit of a background.
Uh-huh.
But what's with the English professor stuff makes sense to me, but the jeweler stuff, where'd that come from?
My mother-in-law is an artist, and she got me started in jewelry. And it was my hobby and stress relief while writing my dissertation. So the jewelry became more and more time. Dissertation.
So you liked it. And yes. The dissertation took a back seat. And yes. We have a couple of people here like that, also from University of Chicago. where after about 6 or 7 years, the dissertation got lost in not in the jewelry making, but in something else. It's amazing how life works that way. And I guess you had a pretty successful jewelry business from what I hear. Yeah. And what happened?
Well, I was making some silver ingots in an artisan studio, and I was melting the silver, and then you have to put it through this rolling mill, which is like a pasta mill, except metal comes out, and you have to hand crank it. And I was cranking away really, and it was really hard, and I happened to glance down, and my wrist bone was popping out. And so I stopped, and
That's a good time to stop. That's what we call an act of God. That's God telling you that it's time to stop pumping.
Yeah. So I couldn't use my wrist the next day, and the doctor said I couldn't work for like 6 months. So I had nothing to do.
And at this point, you are like, what year is this?
This was 2019. So the summer of 2019. So I asked my dad, I was, telling my dad about this and telling him I didn't have anything to do. He was an options trader in retirement, and he told me
Oh, what did your dad do before he retired?
he was an actuary.
He was an actuary. Okay, makes sense. So, and then he was an option trader. So as a customer, not as a professional, he was
No,
a
a
retail customer.
yeah.
Okay. All right.
So he told me about Tasty Trade and that I should trade options also, and that I should just simply go on Tasty Trade and learn how to do that from them.
Also, we got to thank your dad for all this. And had you ever traded stocks or options before that?
No, I never even paid any bills. I just I was not interested in anything financial, and just
So you'd never made a trade before 2019,
no.
but your dad had.
Oh yeah.
Yeah. And so was he like, does your husband trade at all?
No.
No. So it was just your dad kind of saying, hey, maybe you should check this out.
Right.
And what were your first impressions of checking out Tasty?
Oh, it was really relatable and understandable. Because at the same time I bought this textbook, and I opened it up, and it was like the math equation.
Hold it, a textbook on option trading?
Options.
Oh my God, what's textbook?
There is one. It's a big textbook. It says options across the front. And you open it up, and there's all these math equations in it. So I was like, I'll read that later.
Okay.
But I went through a lot of the Tasty videos. I did Mike and his whiteboard, and I rewatched them. I took notes on them. I watched them over and over again until I got the hang of it, and then I just started trading.
That's great. I love the story. It's 2019. Do you mind if we say your age?
No, go ahead.
Because you're 51 today now, so you were about 45 then, about 6 years ago.
Yeah.
Great. And so you start trading when you're about 45, knew nothing about options.
No.
And what did you do? Like, what's your first? Well, let me put it this way: how much did you fund your account with?
Well, it was just going to be a test to give me something to do.
Okay,
So
that's all right.
my
That's
husband agreed for $5,000.
$5,000, and he's probably like, "What is this so-called Tasty Tray?"
Yes.
It's, exactly. And here's $5,000. Try to make it last as long as you can.
Yeah, basically, yeah.
Okay. And what'd you do?
Well, I started selling bull put spreads on Apple, and
Why was that your strategy or trade of choice?
the put spread allowed me to, well, one, it limited the loss, and two, if I didn't want to have the loss limited, I could sell the insurance put and then take the stock, and then just sit on it like it was an investment. So that was my backup plan.
Okay. So when you first started out, obviously you did it really small. And were you nervous? Like, I'm going to lose
Yes.
Oh, you were?
Yes,
Okay.
I was nervous, and I wasn't sure what I was doing. I was afraid to put in the first trade.
And you did, and And it worked?
Yes, it worked right away. So I put in the second one. And then I was really astounded because it was like...
It worked too?
Yeah, because it was like doing the crossword and getting paid. So
you making a couple trades in 2019. The market was going up. I mean, I don't remember everything about 2019, but the market was actually heading towards record highs actually just before the pandemic in 2020. So you caught that little move to the upside.
Yes.
Did the pandemic, what happened? Because Apple got killed.
I know. I was flying back from an art show in Baltimore right before we closed down. And I remember coming back and the market was crashing. And not only that is that they closed down all the gold suppliers, the jewelry suppliers, the art shows. Business was done.
Okay.
So, and I had been making so much more money trading with less physical labor than goldsmithing. But we did have the crash, and I had been very careful with my margin and my account, and I just simply rolled out the puts 1 year.
Oh, you pushed them out a whole year.
Yeah, I pushed.
So you went into some leaps.
Leap puts, I suppose. Yes.
Yeah.
Yes.
Yeah.
And then I waited, and then when they just announced that they were easing, I took all my cash or everything I had, and I bought back in.
Nice. Okay, worked.
Yes.
And that's 2020.
Yes.
And so by the end of 2020, let's just say, either you sat down with your husband or he came up to you and said, hey, you're doing pretty good.
Yeah, it wasn't like a mutual agreement. Just more money kept showing up in our account. Like he would just deposit more money in.
So he wouldn't even talk to you?
No.
So he just did it because why didn't he tell you he was doing it? Because he just...
That's the way we handled things.
Oh, okay. You don't talk about it. I like that, actually. I might need a little marriage advice. But so he would put more money into your account. And because, well, obviously he believed in what you were doing.
Yeah, he was watching the returns. He would look like every week or two.
Did you actually let him log into your account to see it? Or he looked over your shoulder? How'd this happen?
Is in computers, so I guess he
figured it out.
Yeah, he has access. I gave him access to
You gave him access to your platform.
Yeah, and the behind the scenes the
Got it.
Apex where you can pull the...
Sure.
Yeah.
So he saw the results, and for about a little over a year, you were pretty consistent. I mean, yeah, you didn't really have any drawdowns. He kept adding capital. You got, I'm not going to talk about the exact number, but you got up into the mid to high six figures, right? So that's where and that's kind of your starting point. Now where are we now? Where are we year-wise? We're kind of like 21-ish, 2022?
Yeah, probably about 2021. Yeah, or 2022. Probably 2021. Because after I came back on the end of 2020, that's, I think, when he put like the last infusion in, or it was the beginning of 2021.
Sure. So finally, and of the money that you guys had saved up, nest egg, whatever you want to call it, he was pretty committed.
Yeah, a really big chunk showed up in our trading account. It was a lot of our savings at the time.
That's a hell of an endorsement.
Yeah.
Were you nervous?
I was really scared, but he totally believed in me and supported me. And he said, "You're trading this."
That's unbelievable.
So,
that's a great story in itself. And so, because you don't, like, that's just a tough thing to do for you. It's a tough thing to do for him. But what's interesting about it is you didn't change your style, right? You kept doing the same stuff.
Yeah.
And 2022 was a pretty nasty year. Market sold off pretty good, 2022, because we had the rally after the pandemic in 2020. We had the whole meme stock explosion in 2021. And then in 2022, we kind of had this little bit of a nasty sell-off.
Right.
How'd you survive 2022?
2022 was tough. So I sort of survived by rolling things out.
Yes.
I did get into a sort of bad habit of rolling things wider to still get a credit. And that worked along just fine for a long time. And so 2022, I did not make as much as the other years, but also my account wasn't on mark to market yet. So there was a tax.
You mean you weren't portfolio margin, you hadn't switched to professional trader or mark to market?
Yes, I had to switch to mark in 23.
Got it. So now at this point, what you're mostly selling put spreads. How wide are your put spreads? What is the duration of your put spreads? And what is the underlying product that you're using?
Okay. So I would try to keep to the tasty principles, though I know you're not supposed to roll them wider.
Okay.
A little bit of cheating.
That's okay. No, whatever works for you, of course.
So I would sell them 45 days out. I would sell them 10 wide to start, sometimes 15 wide. And I would usually do like 10 contracts. And it would be on an underlying stock. And I think sometimes at that time I also did the indices like triple Q,
Okay.
stuff like that.
But did you mostly use equities?
Mostly equities.
And how do you pick your equities?
The stocks that are going up. They have to
Very sophisticated method, right? Yeah. Done.
They need to be large liquid stocks in the S&P 500 and keep it to a small handful that you watch very carefully and you do.
How many positions would you have on it once?
I would have like maybe 10 to 15 symbols, but I'd have a lot of trades within each symbol. So maybe like at that time, maybe like 50.
So 50 positions.
Yeah.
So give me an example. Let's say we took a liquid stock like NVIDIA. Did you trade NVIDIA at all?
At that time, probably.
Okay. Let's say it was a liquid stock like NVIDIA. So you would do multiple 10-lot put verticals, sell multiple credit spreads, like up to what,
Well, I would try to keep my margin, leave a reserve of about 50%.
Okay.
So that
So the total capital you're using was about 50% of what you had, capital. But how much would you commit to a certain underlying? Like how many different, you said 10 different underlyings at least, or?
Yeah, it was a lot. I mean, the core trading strategy would allow me to really concentrate on certain underlines that I wanted to bet on. And so,
Can you give me some examples of some of them? Like what names?
like Meta at the time, it's usually the big tech stocks.
And how far, what was your short delta? Like what strike would you sell generally?
I would usually sell the 20.
20 delta?
Yeah.
So that's your default. Now, did you ever do the call side?
I did the call side in 2023, but I didn't quite follow it exactly, and I never did naked calls.
Okay.
And I would have been better off, ironically, if I had done exactly what you had taught to do, the naked calls, because the insurance call would cut into my profit margin too much.
Got
it.
So, but mostly you were selling put spreads. Occasionally you'd sell some call spreads. And how often were you trading? Like multiple times a day, I assume?
Yeah, I was.
Are you pretty much a full-time junkie?
Basically, I am now.
You are now. 122% profit in 2023, which is amazing. But 2023 was a very bullish year because we came off of 2022. And if you're selling put spreads, it works. And like that's probably more money than you'd ever made before in a year in anything, right?
Yes, it was a whole career's worth of money.
Career's worth of money.
Yeah.
Were you wondering like what's going through your head? Like, why doesn't everybody do this? Or why doesn't what's going through your head?
I was wondering why, yeah. And I was trying to recruit other people to do this.
And nobody would they?
They were scared.
Yeah. Yeah. At that point, you have an unbelievable year in 2023. Like I said, up 122% on a significant amount of capital. What'd your husband say then? Like,
He was really happy. He retired recently. So I guess I make enough money for both of us. So
that's incredible. And so you've been disciplined enough to keep doing the same thing. Like you haven't changed.
I change according to market conditions.
What does that mean?
So I've noticed at some point the premium is, in some days, the premium is not high enough to justify the risk that you're taking for selling. If the premium is artificially low, I will buy leaps. And the leaps do really pay off. And then when the premium is really high, I'll just sell the puts.
Got it. So you're kind of legging some of this stuff a little bit.
A little.
Okay. In 2024, because I think people kind of want to know the progress, because you know, this is remarkable that you started, you know, with a $5,000, let's see what you got, to now you're basically, you know, supporting the family. I mean, you're just, it's an incredible, you're a rising star. But it's make 47% in 2024, which again, I'm going to go through a lot more of the details in a second, but how's 2025 going so far?
I have to beat the S&P 500 every year. I mean, that's what I set for myself.
That's your goal?
Yeah. Yes, I must beat the S&P 500. So I am beating it fine so far this year. I think I'm at 12%. S&P's at 2.
Oh, you're up 12.5%.
Mm-hmm.
That's great.
Mm-hmm.
Are you still using in 2025 now? Is it mostly equities, or have you gone back to some of the indexes? Because we had that vol explosion in April. So does that change the way you think?
I haven't been doing the indexes because it seems to me that the leverage, the momentum on certain equities is a lot larger than the momentum on the index only, and that the returns are better if you pick out the largest stocks in the S&P 500 that are at a higher momentum and higher profitability than the slower moving ones, rather than you just cherry pick off the top most liquid, most profitable stocks in the S&P 500 and trade that instead of the whole SPY.
Maybe that's why I don't make money a lot of times, because I'm doing the exact opposite, looking for the stocks that are going up so much and then trying to sell them. I'm a contrarian. But it's really interesting to me that, because what happens a lot of times is that people that have a similar approach to you, they get, it's very hard to check your ego, because you start to think, okay, well, why am I even buying the wings? Why don't I just sell the puts? Why do I even need to spread it off? But I guess by spreading everything off, it gives you just so much more capital to work with that you can.
It does give you more capital. It cuts into your profits.
A lot. Yeah, sure.
Yeah. And so sometimes I do sell the naked puts, but I am very careful with the naked puts.
Are you conscious of your overall deltas? Like, do you look at those? Like your
I used
beta-weighted
to in the beginning, but then I just.
You don't look at your beta-weighted deltas now?
Not anymore.
Okay. And do you look at the amount of theta that you've collected? So you're just thinking about it, just you're a pure premium. This is how much extrinsic I've sold.
Yes. This is how much I can extract and premium.
This is how much premium I've sold. This is how much I can extract. And what percent do you think you can keep on that?
Well, I know I can keep more than the 50%, but I usually close it at the 50%. So when I sell a spread, I close it at 50%.
Got it. And what happened in April of this year?
This is like a
early April when we no. When the market had when the whole tariff thing came into play and the market sold off. We sold off from let's say where we are now, a little under 6,000, all the way down to a little under 5,000. So the S&P sold down 20%.
Right.
There is no strategy that you can have when you're short put spreads where that works.
Right.
So you must have taken a lot of heat in the beginning of April.
I do. My strategy does take big drawdowns. What I did is I split the time frames on my account.
What does that mean?
So I bought a bunch of leaps at the bottom. A bunch, yeah, call leaps. Yeah, I bought them, and for 1 and 2 years out, like like Palantir and stuff like that, and
Okay.
Nvidia and stuff. So,
Because you thought these stocks were cheap.
oh, they were cheap. Yes.
Well, in hindsight, they were cheap, but at the time you didn't know that. I mean, you
kind of know because the macro picture, the larger picture for these stocks hadn't changed, right? And so
100%, but you still don't actually know.
you don't know for sure.
Yeah, right.
Yes, it is a
So you bought a bunch of long-term leaps,
yes.
and it actually worked out.
Yes, I'm still holding the leaps though, and then I took my freed up cash and I short-term traded with that. So I have like a long time frame, and then I have a short time frame within my portfolio.
And on the short time frame, your short put spreads must have lost money
They do.
on the way down.
They did. I closed them out, and I usually don't do that because I didn't want to take a really big drawdown. So I closed them all out early because I was like, the macro picture has changed. We cannot follow the same rules. Just close them out. And I saw your video like last week, and I was like, I shouldn't have closed them out because I was looking. They would have, if I could have rolled, I could have rolled them, and I could have not taken that loss. So
Well, you in the last couple of years, well, since you've started, you've got to experience, virtually every market condition. You've had bear market, you've had bull market, you've had extraordinary, binary events like the pandemic, meme stocks, the tariff thing. So you've basically seen everything. Are you trading any commodities, any futures options?
no, I'm not trading futures options. I am experimenting with the metal futures. I feel more comfortable with that because I used to be a goldsmith, and I
So
trade.
you think because you used to be goldsmith, you can trade gold? That's a very okay. Got
That's
it.
exactly what I think.
So in other words, you're buying gold.
No, I'm actually sort of trading it, so I'll buy and sell it.
Like
But
futures,
no, micro,
the micro futures,
really small.
the MCG,
Yeah, but I also do. Most of my money is in GLD.
GLD.
Yeah.
Okay, and so you're basically short put spreads in GLD and scalping micro gold futures around it.
Yeah.
When you kind of plan out your days now and everything that you do, like, are you pretty much in front of the screen all the time?
Yeah, it's hard to tear myself away. There's always something else to learn, and I still feel like I'm at the beginning, and there's so much more to find out about.
There is.
I know.
We're still all learning.
Yeah.
Have you been experimenting with any other kinds of strategies?
I did experiment one with I would buy a long straddle on the VIX.
Oh God. Oh, man.
And it did turn out, but the conditions I don't think are not there where I could repeat that right now.
Got it. When you put your positions on, and you have a lot of positions on, do you ever take losses or do you always roll out?
I used to not take losses, but I take losses now.
Okay, so you found it a little more effective to take losses. You don't put stop orders in. You just take losses. They're mental stops.
Yeah, mental stops. I will take losses if I think that it's not going to come back, or more importantly, if the macro condition has changed, like tariffs or something like that.
So if you're short a put spread in XYZ and the market starts to go down and you think the conditions have changed, it's ugly, you would close that position out rather than sell a call spread against it?
Yeah. I would just simply, with something like a very large macro change, I can't be sure, exactly what's going to happen. I have sold call spreads out before against the put spread, and that actually does turn out pretty well. It's just recently, this is the first time I've done it. I just took them all off.
That's wild. I like it. So, right now, what % of your capital are you using?
Right now, I am using 95% of my capital.
95%. So you're all in right now.
Mm-hmm.
Got it. And mostly the same kind of positions?
Yeah, the large liquid S&P stocks where I cherry pick off the best ones, and then I accelerate the trade by putting options on it on top of the stock.
Because since the meltdown in, early April, May and June have probably been pretty good for you.
Oh, they've been really good.
Yeah, I was going to say, yeah, they've probably, for your style, they've probably been great. What's the game plan here for the rest of the year?
Well, we'll have to see. I'm thinking it may be time to take profits at some point.
Lighten up a little bit?
Yes. Yeah.
Do you ever lighten up a little bit?
Oh, yes, I do.
Okay. So you are comfortable taking profits?
Yes, I will take profits and then I will sit back, but I usually will keep something on in the core positions.
You have to have something on, otherwise you will go crazy.
Yeah.
It's not possible to wipe the slate clean.
No.
Yeah. Is there anything that makes you nervous?
Yeah, I think the idea of undefined upside risk makes me nervous.
Undefined upside risk.
Yeah, though I know, and I think that's more emotional that's the last hurdle to get over than actual mathematical. Though the market does go up 1% more,
Is there anything like trading wise, nuance wise, know-how wise? I'm not saying it not intellectual, but just it'd be know-how, product wise, that you feel uncomfortable with, or you think like, hey, you know what? I understand all this.
Yeah, I pretty much do. And if I have a question, I could just go back to the videos and watch them.
Got it.
So,
well, that's been a lot of fun, Emily. This has been, your story is amazing. And like I said, we need more women like you. And we need more stories like yours, because this is great. So thank you so much for coming.
Thank you.
Welcome, everybody. And it's time for another episode of Rising Star. Ross, how are you?
I'm good, thanks. How are you?
Welcome to Chicago.
Thanks. Good to be here.
You are kind of, you live in the middle of nowhere.
Kind of, yeah. I like it there. Yeah, small town USA.
Small town USA, yeah. That's what I like about this story. It's, you are a Spanish teacher.
Yes.
Well, you were a Spanish teacher.
Yeah.
For a long time.
Yep. Slowly evolving out of that.
Why Spanish?
Actually, I was a history and biology teacher, but then they found out I spoke Spanish. And they can find history teachers anywhere, but said, you just
how do you speak Spanish?
My wife's from Costa Rica, so.
Oh, so you learned to.
I was
okay. So you're forced to learn.
Forced to learn. I had a good teacher.
Okay, got it.
Yeah. I had good motivation.
Got it. Perfect. Now that all makes sense. So, and you've been doing this for a long time.
Yeah. Yeah. We got married in Costa Rica in 93, I think.
You better get this right.
Yeah.
Hey, don't mess this up.
Yeah.
Okay. You got married in Costa Rica in 93, and she teaches Spanish, you teach Spanish, or taught Spanish. Also, just giving some background so everybody kind of knows, you also coach sports.
Yep.
And this is all on a high school level at a prep school.
Yep. Boarding school. So you're on the clock. There's no such thing as a weekend at a prep school.
Yeah, you're always on.
Always on.
Kids are always there.
Yep.
They never go there. You turn to your left, there's kids, same kids.
Yep.
To your right, they're everywhere.
They're in your living room and your kitchen. Yeah. They're everywhere.
So take me through kind of your financial, just the challenges. I mean, I know I have no idea what a teacher makes at a prep school, things like that. I don't really, it's not part of the story, but it's, you're not making a couple $1 million a year.
No.
Okay.
No.
And so, you guys are grinding. You and your wife, you're just basically, you're working your butts off and you're doing things you love. And it's probably a good life in upstate New Hampshire.
Yeah. Good place to raise kids and dogs.
I don't know what your history in finance is. I don't know kind of what got you engaged in financial markets, stock markets.
Zero. I've never taken a finance math course or any of that. It was my dad saying, I don't have any money to give you. If you want some, you better figure out how to get it.
Yeah, but there's a lot of things you
could have
robbed drugs, you could have robbed banks. I mean, what?
And then him encouraging me as soon as we were married to say, hey, put some money in a mutual fund.
Okay.
And encouraging me this basically passive long.
So what did your dad do?
He's a pipe fitter, installed sprinkler systems.
Okay.
Yeah.
Got it.
And he didn't start until his 40s maybe. So he was figuring it out later in life going, oh shoot, if I want to retire, I need to start saving some money, and not just saving it, because you're not going to build wealth by saving.
Sure.
But investing it.
Sure. So you did what at first? You started buying a mutual fund?
At the school I was at, their retirement account, you open these 401ks and they give you funds to choose from.
A box to check.
Yep. Check 4 boxes.
Yep. Sure.
And when I got the prospectus, I guess at the end of the year, I looked at the top 10 holdings and they were virtually the same in 4 different things. So I thought, why not just buy these things? Things like Home Depot, Microsoft are in there. Sure. So I started, my little bit I could save each month is what I would buy a share and another share. Or
how much money could you save each month?
Maybe $50.
$50.
Oh yeah, you're
$50.
You're not a lot. Not a lot.
So you're literally buying one or two.
Yeah, one person working, kid, and
yeah, you have to
trying to get a life going.
Yeah. So, but you're literally doing this one share at a time.
Yeah, 1 or 2 share, and of course the fees at that time are you're paying $10 or $20 to buy your share.
That's true. I forgot about that. Yeah. In the 90s, we still charged commissions.
Yeah.
With a minimum ticket charge.
Yeah.
So you weren't gifted a few $100 million.
No. And then .com wipes a lot of that out.
Sure.
Start again.
Well, the early 2000s was tough on any portfolio.
Yeah.
But you hung in there.
Yeah, hung in there.
And then, so what happens, let's say 25 years ago, 2000 to 2000 and through the financial crisis of 2009.
Yeah.
You don't get disillusioned?
No, I just hung in there, just putting it in and not really looking at the passive long thing. But it was
true passive long.
True passive long. I know taking some interest in the stocks, but
how'd you pick stocks?
There was no system there. It's whatever caught my interest or what I thought was, had the idea. I thought I knew something.
Were you doing it yourself on a self-directed platform?
100% myself. Yeah.
Okay.
Yeah.
Yeah, because those platforms were, they were pretty basic. Right?
Yeah, they were very basic.
Yeah.
Yeah.
And so you're working your way through the entire process. I mean, 2008, 2009, survived?
Survived, but, you're passive long. What can you do? You take your beating and keep on going.
And you kept doing the same thing through?
Yeah. Until I don't remember the year, 2016 maybe or 17, somebody on one message board somewhere says, hey, check out this Tasty Trade. And I don't remember if it was Dr. Jim then, but he's the one I found anyway when I first came there and watched the words.
So you found a Dr. Jim doing Where Do I Start?
Yeah, with Brittany. Yep.
Oh, God. Yeah.
And just walked me through. And it was the opposite. Like I'd heard about options before, but the only idea you had was, you buy this thing and hopefully it turns into something. And that was the opposite side.
So you really knew nothing about options?
No.
And you sit there, you have a passive long portfolio. At the time, how much was your portfolio worth?
Maybe $500K.
$500K. I mean, you're doing it $50 a time for 20 some odd years.
It's pretty good. It's pretty good. I was feeling good about it. I was feeling very good about it.
That's awesome.
Yeah.
I mean, that's in itself, that's impressive.
The snowball was growing and I was feeling like, it's starting to grow here. Now it's starting to build, build.
So when you're watching Dr. Jim and Britt and you're sitting there and you're saying, well, this looks kind of interesting. Were you thinking about it as like a cost, like a basis improvement type of potential, or were you thinking of it as an opening trade?
I was thinking of it as both. Like this is if I want to be cautious, this lets me reduce my cost basis to start with and see what happens. That kind of selling the put thing that you can start with, and that's a good way to start people on what you want to do. Well, the price is 100. You could sell a put at 90, and then you get paid if it doesn't do anything, and if it comes down, well, then you get your shares cheaper. So that kind of selling point was very interesting to me. Who was thinking buy low, sell high.
Or were you going to sell calls against your existing portfolio?
That was later. But it definitely started with the selling puts.
Okay, keep going.
So
now 2017.
I got my accounts over to Tasty Trade, Tasty Works at the time.
Yeah. We opened in 2017.
So I must have been pretty early then.
Okay.
And yeah, I got my accounts over there, and then I start trading against the positions that I have. So I've got some stocks there. There's 100 shares. Why are we not reducing cost basis and selling covered calls? If I've got a position that I like and I'm thinking about selling puts, but I'm not too sure, maybe ratio spreads then, and I start expanding into jade lizards. And
so hold on, let's so at that point, 2017, 2018, you're starting kind of like a core portfolio of or a bunch of different strategies you're testing the waters with.
Yeah.
You tried everything.
I tried everything. Yeah.
Defined risk, undefined risk?
Defined risk, mostly defined to start with. And even if it was undefined, it was a put that in my mind was cash secured, even if it wasn't really cash secured.
Got it. How much time did you spend doing this?
Well, whenever I could, which was between classes and things. So, maybe an hour or two total a day.
Okay.
That'd be on the high side because you're just busy as a teacher.
Anybody think you're crazy?
Yeah, there's a couple people who are into investing where I am, but as soon as you talk about derivatives, they just see the loss. A little bit. I've just to scalp them just to test the waters, and then they're like, geez, this is really big. Yeah, I shouldn't be doing this.
No option contracts in the futures?
Yeah, I've done that, sure.
Okay,
yeah,
of course.
Yeah.
Okay, so you've really done. So I mean, I'm not going to fast forward.
I got to try everything.
But you tried everything.
I've tried everything.
You basically tried every product, every strategy.
Yep,
everything.
And you find out quickly some I don't really like, and others you just kind of gravitate to, going, this is good.
So, as you were starting to figure out strategic trading, what kind of products did you like?
Well, I was originally picking stocks, so I was going with my original assumptions and opinions and saying, well, I like this thing, so I can now reduce cost basis in it, or do some other trades around that position to maybe expand it if the price comes down a little bit.
Yeah.
So I was going with those, but then I'd expand into the ETFs and SPY and gold and GDXJ and all the different ones, all the little ETFs that are pretty liquid in the
all the underlyings that you never thought you needed to know.
You never heard of trade at GDXJ, but
yeah.
Yeah.
So then how did you start to incorporate all these different strategies? The same approach, like I'm going to try all these different stocks, but now I'm going to try all these different strategies?
Yeah. Some would be on what I'd hear here on Tasty Live is you talk somebody talking about, the broken wing butterfly. I'm like, what is that? Wait a minute. How can I take this this ratio spread and define it? Or how are they doing a long and a short spread together? I got to test it. I got to do it. I got to just see what happens.
So what strategies did you ultimately gravitate to? Like what worked the best? What did you feel the most comfortable with?
I love jade lizards. I love short puts. I love covered calls, covered strangles even, to kind of do everything. And ratio spreads a lot. Put ratio spreads or broken wing butterflies in bigger puts.
Those are all relatively high probability trades.
Yeah.
Did the probability aspect of this, was that a big part of it? Did it come into play for you?
It does. I want to win. Like, any day you can say, how's it going? Even if I'm winning 90% of the trades, that 10% is in my mind. That sucker.
So on a daily basis, what do you watch? Are you watching your P&L? I mean, what do you watch?
Yeah, I'm watching. Well, that's
you watch individual P&Ls?
Yeah. Okay. Individual. The overall is where I'll start, but then it's individual.
How many different positions do you have on at once?
Ooh, maybe average of 50.
Oh, so you have a lot of positions.
Yeah.
A lot of positions, 50 positions, a lot of positions all over the place.
Yeah.
You have any problem watching 50 different positions?
When I'm busy, yeah. But now I have a little more time. In the summer when I'm not working, it's a lot easier.
The exciting thing here is you're basically able to, you called it semi-retirement.
Yeah.
Which means you work part-time still.
It's freedom. Yeah.
Yeah.
I can do what I want to do.
Right. So semi-retirement, and you've turned, a $500,000 portfolio into a couple $1 million.
Yeah.
And it's essentially all through trading.
Yeah.
And so what you've done is you've essentially used the world of strategic investing. And by the way, since 2017, there was a down move in 18, there was a down move in 20, the pandemic.
Yep.
There was a down move in 2022, and there was a down move in, recently.
Yep.
So I've had like 4 or 5 down moves, pretty significant. I mean, the market's higher, obviously, but you've navigated all those down moves, and you also, increased your account fold, almost 4x.
Yeah. Only one of those was my net lick down.
Which one was that?
22, I think.
On that
but I still was able
prolonged sell on.
Yeah, but I still was able to generate a good return with the trading.
Yeah. So you've been able to generate. We backed into it, but it looks like you've basically been able to generate about 20% a year over the last half a decade, let's say, and that's really impressive because that's, I didn't find any of those years essentially easy. I mean, some were a little easier than others, but I didn't find anything easy the last 5 years.
Right. Especially after the past couple of weeks. Yeah.
Yeah. Especially the last couple of weeks. I definitely didn't find that easy. That's pretty damn impressive. You're not really an amateur.
It feels pretty good to do, but sometimes you don't know because you're in a vacuum. It's not like you guys have a whole floor of people and everybody's kind of doing the same.
I used to think that was helpful, but maybe it's not.
I don't know.
Maybe I should be locked in a room somewhere in central New Hampshire.
Yeah.
It is fascinating though, isn't it, that there's this stuff out there that 99.9% of people have never heard of.
Right.
It's interesting.
Yeah.
It's strategic. It's challenging. Do you find it what's the most challenging part? The economics of it, the math part, what's the most challenging part?
I think that right now it's that it's bigger and I've got more things to do.
Yeah.
And I've got to start to compartmentalize, have a sort of a defense category and then the offense category. And, I've got to keep it more compartmentalized so that I know, given what happened the past couple of weeks, I'll live to fight again another day, no matter what.
How did the last couple of weeks, what did you do right?
Well, if we had been sitting here 2 weeks ago and you'd asked me what my biggest struggle was, it would have been, I don't trade big enough. I still will start with one lot and then decide what to do after that. Now, I'm pretty happy that I traded that size.
The best defense is to stay small enough that you don't have to worry about it.
Yeah.
It looks like that's what saved you.
Yeah, staying small is really important.
It's so, people used to say to me, it's so overrated. Okay. And I'm like, when we have the right kind of move, when we have that nasty move, you're never going to say it's overrated because a one lot can be, can cost you some money.
I survived COVID and I survived this.
Yeah.
And yeah, I had some things to do. Some positions got run over, but others did okay.
Did you put new positions on during this move?
A very few, yeah. Thursday I did on that down move, a couple. Friday was at a funeral and couldn't, and obviously those got run over, but.
How many trades, you went from 89 trades in 2016 to over 1,000 trades in 2019.
Yeah.
How many trades do you make now?
About 1,000. Yeah. I'm trading every day, a little bit. I try to do something every day.
4 or 5 trades a day.
Yeah.
Okay. That's very active.
But I'm slow to roll. I'm slow to respond to things. I don't like the whiplash.
Is that intentional?
So yeah.
Okay.
Yeah.
And do you manage things on an individual one-off basis, or are you managing the total position?
A little of both. Basically a one-off. How's this doing? How's that doing? But in these big moves, all right, time to get rid of some things and package some buying power together so we can do something else.
So who do you talk to?
You guys. I listen to you guys all the time.
What do you do? Talk to the screen?
I basically, my wife is a sounding board, but she's not really interested in what's going on. Just to be able to say things out loud. Oh yeah.
So she thinks watch you guys.
Where's the money? I want the cash on the kitchen table. That's how I just
like, who are these guys?
Yeah. Yeah.
But you don't have too many friends that trade, or?
My brother-in-law's trading now.
he's trading off Tasty, or he's just trading?
He's trading off Tasty, yeah.
It's great.
Yeah. He started paying attention to what I was doing and wanted to know some more. And
wants to learn.
Yeah, so he follows you guys now.
I love it. Now what?
Trading wise?
Yeah. Now what?
Yeah, now I think I compartmentalize and pull a bit of a chunk to be defensive. I think Tony from Mexico was on a few days ago or a week ago, and he talked about different components of his team. He needs to have a good defense. He needs to have an offense.
I missed that segment, but yeah. I can go back and watch it.
Yeah, he had some short spy puts the day before the things really crashed. So, but I think that's what I need to do, because I think I can trade bigger. I do want to trade. I don't want to keep trading. I definitely want to keep trading, but I want to package some chunk.
Of course, you're going to keep trading. Do you ever see a time when you're not going to trade?
No.
No, because this is what you do now.
This is what I do. Yeah,
and you can do this till you're 100.
Yes.
Yeah. I mean, there's no. Yeah.
It's very fun to have your finger on the pulse there, and you know what's going on in the markets. You see volatility moving and different things, and
how come you guys aren't teaching this to your students?
I would love to. I taught one course. They called it Finance 2 because Finance 1 is real, like balancing a checkbook.
Yeah. Stuff. Yeah, you can't.
And then when I went to Spain the following year, they didn't have anybody who could teach it.
Oh, I see. Okay.
Yeah, I gave them all the stuff, but yeah.
Would you want to teach that?
It's fun. I mean, to have kids that are interested in this.
Yeah.
And it's what if I wish I knew then what I knew now.
Yeah.
It's very powerful.
So, do you think you've done so well because strategically you've done well, or do you think you've done well because you've picked good stocks?
No, consistency is king. Consistency is king here. It means I gotta keep going. The math will play out, right? That's really is. I like to think I can pick good stocks sometimes, but I can't. And that's what's gotten me in. When I've had problems, they've all been times when I thought I knew something. So it's consistency is king. Keep doing this. Keep at it, and it plays out over time. And you see the dollars coming in and the returns coming in.
There is, when you get to a certain level, and you're getting there with the amount of capital you have, it gets a little more difficult to make the same kind of returns.
Yes,
because it's easier to make 15% on $10 it is to make it on $1,000.
Yes, ignores that.
So, so how do you scale?
I think I probably won't for a little bit, but then I will slowly scale. So I'm like when I was starting out, and you had a stock that would do well. I sell 50%, and then you're playing with the house money. So I'm thinking I will move some profits to the defensive side of things to sort of guarantee our quality of life and what we're doing and our plans for the future, and then keep 50% of whatever winnings and slowly scale up. So I won't scale. I'll scale up half the speed that I would if I were 35.
So, and what do you tell your son?
So we do talk about investing.
Yeah. What does he say?
He's interested, but he's more cautious. He's just buying things right now. Well, I've got something to buy this, but I tell him about, well, you're in this position. Hey, if you have the stock that's gone down, you could sell calls against it. You have the stock you're interested in, you're waiting for it to come down. You could sell a put spread and see what happens there.
Sure.
Yeah.
And does he listen?
He's listening a little bit.
A little bit. Okay, that's a good
Yeah.
start.
He's
That's a good start. So, growing from, you've taken this account from a couple $100,000 to a couple $1 million.
Yeah.
Now what? I kind of asked this before, but I'm really curious. It's because I personally find this is the most difficult.
Yes.
When you get to a couple $1 million, trying to scale that up to the next level is very challenging in a world of active trading.
Yeah. It definitely opens up the products that I couldn't consider before.
That it does. It opens up strategies and expensive indexes, things like that. But the reality is still nothing's easy. Dollars at risk is still the same thing.
Right. I like the idea of the zero TTs that they trade sometimes. I've traded a little bit of them, but I think that's more, like you say, an engagement tool.
Yeah.
Than
that's
than
definitely an engagement tool.
it's not a core position, but it's something to do to stay involved and to see what's going on.
What's your go-to strategy in this current environment?
I'm pretty bullish. I've got the long bias overall in the market, and that's so
You always have a long bias?
Pretty much.
Okay.
Yeah, I pretty much have that. And it may just shift from, well, it's not so much in this sector or that sector, but I like positive drift. I like to be in the boat on those things. So Jade Lizard is a good thing, or covered strangle if I've already got shares. I burnt on naked calls a few times, so that's got me cautious on those. So I love covered strangles where I'm
like, give me an example of a covered strangle. Like you buy a stock and then you sell what delta call and put?
If just starting out, 15 or 20 is good. And
on both sides.
On both sides, and that would give me room to be able to roll up if it slowly comes up. And I have a couple of those that I've been running for a lot. It's a base hit. It's not a grand slam.
No.
But it is just going.
How much capital do you commit to each trade?
I start small, so maybe 1%, but maybe it can grow from there.
Got it.
Yeah.
Got it. So you kept your size really small.
Yeah.
And how much capital do you use of your total capital?
For trading only, maybe 30%. I'd have to go and look exactly, maybe 30%. There's some big core stock positions that I will trade against those things, but I'm not really calling them part of my...
What's a core stock position like?
Like I've got Visa.
Okay.
And I love to sell calls against Visa. And
it's a little illiquid, but I guess you.
But if I've done it, I think I'm in the 40s for how many calls I've rolled against that. And
got it. Yeah.
So if it blows through the calls tomorrow, I will have made money more than if I just held the stock.
Got it.
Yeah.
Do you trade mostly liquid underlyings, or do you also trade?
No, I have some illiquid junk too, which some of those have been losers.
Yeah.
I do like to hold some of those in my portfolio just to look at it and go like, don't do that again. That was a bad idea.
I got a lot of those.
Yeah.
I got like a lifetime of those for it.
Yeah.
Yeah. But when you do in the overall portfolio, how much of your portfolio is like kind of your core positions?
Maybe a third again.
God, that's not that bad.
Yeah.
When I think of kind of like where you've come from to where you are today trading wise, what could you incorporate into your trading that will give you kind of more vehicles to use? Like, is it futures options? Is it?
Oh yeah. That's a good one. I think so. I've tested everything. I found that I really like puts, covered calls, Jade Lizards, that type of stuff. But there's others that I know I've done and just haven't really gotten deep into using them regularly and trading them a lot. And it's futures options. That's definitely the next layer that I'll explore more.
What's the key? Was it like commitment? Like, well, was it your discipline? There's something.
Yeah.
What you did is very difficult to do. Like, not that many people are able to do it. Why you?
I don't know why me, but I think consistency is king here. You've got to keep at it. But most people
listen because of your discipline.
The things I've been successful at, that's what I've done. It's a small step today, another small step. Just be better today than you were yesterday. Tomorrow, all you got to do is be better than yourself today. And if I can't compare myself to...
Yeah, but the problem with the markets is you can be as great as you want, but sometimes the markets just don't cooperate.
Right.
You need cooperation from the other side as well.
You do, but I think so. For me, it's the smaller, higher percentage over time, the base hits over time than the people going for the home runs.
Sure.
That temptation is if I buy that 5 delta call and it goes up, the money I'm gonna make. That temptation is the lottery tickets.
Yeah.
Right. But what if you're selling those lottery tickets, and if you're just getting consistent over time? Not the lottery ticket is probably not a great analogy because I don't want to, when I get the pennies in front of a steamboat.
No, right.
But I want that consistency, those base hits over time. Just keep going, just keep grinding it out, and don't rely on luck. What was the title of Julia's book?
The Unlucky Investor.
Yeah, that's it. You don't want to be lucky. I mean, you want the luck, but luck will teach you the wrong lessons. And you won't be consistent.
In any business or any trading or whatever, you need a little help.
Yeah.
Like, I mean, something's got to break your way.
Yes.
You know, like that's just the nature of success. Something has to break your way. But the rest of it that you control, when you have, you know, when you make that all work, that's on you. You own that.
Yeah.
Do you feel like, I'll end it on this. Do you feel at this point that you own your success?
Ooh, that's a good question. I mean, I like to think so.
I think so.
You know, I like to think so, but I'm not sure. I know I haven't been lucky. I've just been disciplined and
I mean, personally, I think you sound like you own your success. I think the whole key for me when traders get to a certain point is you have to own your own success, you have to own your own failures.
It's definitely had some failures.
Yeah, well, we all do, but it's like, but a lot of people think it's on somebody else.
Yeah.
Like, you know, and when you finally own both sides of it, that's kind of when you get successful.
Yeah. It's been good. It's been really good. It's not just setting up the trade, it's to manage. What do you do from here on in? You got it. It's hanging out there. And now how do you handle this thing?
Well,
yeah,
that was awesome, Ross. That was a really good story. I mean, it's kind of like, it's a played out success story. You know, it's really cool.
Well, thanks.
Thank you.
It's been great to be here and see everything live.
Thanks.
Yeah.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. Do you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on?
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
Like a
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm
Oh,
here
yeah.
in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal. Look at
that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens And then he's still doing this.
Snow. Let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Glenn Freiberger, G-Money, in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, Tasty FX, anything else? Come pop in the YouTube chat. Anything is fair game with Glenn.
Anything goes.
Good morning, sir.
Good morning. I'm fired up.
Yeah?
Venti Starbucks coffee.
Ooh.
You know that I'm buzzing like a chainsaw.
I love it.
Did you know that the Ventis, they have over 400 milligrams of caffeine? Just the drip.
Yeah.
Who knew?
Yeah.
Did you know that?
Sank it.
Did you know that the daily recommended cap is 400 milligrams of caffeine?
That would make sense. I feel like any other combination of drinks that you can order, purchase, even like drink from like the bottled cold brew, it's hard to get to 400.
Yeah, that's good. That's a good day.
If you're making an espresso drink of any variety,
Yeah.
you're either paying like $13 to make it a quad,
Oh, yeah.
or you don't even get close. So, yeah, this is
I like that.
special occasion. It's Super Bowl.
I go venti
It's
as well.
Fed Day, baby.
This is the Super Bowl. I was explaining that to James when he was asking about if we had anybody coming on the show today, and I was like, well, of course we do. We have G Money Glenn in the house, Tasty FX, for the FX Super Bowl, which is today. Is that where do you guys have like some music going?
I'm just playing, NFL on Fox all
Just
day.
repeat.
Yeah.
During the 1 o'clock announcement.
The pick is in.
Yeah.
Do you read the minutes?
No, I read the Bloomberg summary, and then I bounce around. You're not going to be quick enough, to.
Yeah, you're so Gen Z. Can't read the actual. You just. Thank you. You just go headlines. You know.
Usually have.
Your brain is just too. Your brain rot.
Oh, you know what I do? I read the emoji summaries. I have a.
Yeah, do you have that?
I have an algorithm that just compresses the meeting notes into emojis.
Yeah.
Like, oh.
J Pow.
Bye.
J Pow go burr.
Yeah.
Rocket ship.
Yeah.
That's your.
Piles it into one meme.
Yeah.
And I get the sentiment. I get the.
Oh, that's good. We got all the soundboards
I
here.
know exactly what each dot in the dot plot is.
Yes.
From those 6 emojis.
You look at which Fed rep is, where they are on the plots.
No. There's strict anonymity.
Ah, yes, but you know the ones that have
Everybody knows.
have
Everybody
kissed the ring.
The dissenters.
The dissenters.
It's the way the world works.
It's almost like the Dementors.
Ooh. Harry Potter.
What's up with you guys today?
Ooh.
We're in the same boat too. We're just waiting, just like the market. We're just waiting for the 1 o'clock hour to see what happens with this little announcement here.
Got a little chop though on the open.
Yeah. People placing their bets. Placing their bets for the day.
Very interesting week so far in the Forex realm. A surprise to me is, the run-up we're looking on Friday, packed dollar bags, all, except for retail sales, all data points are out, they're in. We're, consolidating into the Friday close. I thought, this is it. Wait till Wednesday. And we've seen even more dollar weakness, even more of a slide leading up to this meeting. Monday and Tuesday, a huge move in the euro, and practically every major currency, Swiss franc as well, but definitely euro led as people actually position for this event. It seems from everything I'm reading that now people, the prices you're looking at now are very neutral in terms of sentiment.
Really?
In the options world, we're getting a lot of bullish options in for the euro. People liking that psychological 120 level that we are, a lot closer to now that we broke out of that kind of 117.5 to 116 chop that we've been in for month and a half. Broke through that. Now we're at 118.5, 120 in sight. A lot of people putting bets on for that and taking off maybe a lot of those shorts.
It's not good for me.
It's not, but trying to get more neutral.
That's what I like. I don't go with the crowd. Okay, the crowd.
Not like everybody else.
Yes. Contrarian. Cool. Yeah, cool. Exactly. Yeah.
Not like everybody else.
Yeah.
Yeah, I mean we've blasted through the upper Bollinger Band.
Ooh.
In the euro dollar.
Yeah, let's pull up the.
We're just resting.
Well, let me give a quick little market update. We'll get to your stuff in a second, okay? Okay. This option trading concepts live, okay?
Understood.
E-mini S&P 500 futures are down 8. It's kind of the low of the session here, just about 4 or 5 points off the low. Very tight 20-point range today. Been a couple days of very tight chop. Especially in the opening session, a little bit of movement in the overnight session, but really the opening sessions have been chop. NASDAQ down 120. It's the biggest mover of the group. A little bit of weakness in some of the big name stocks. I've been looking at NVIDIA today. It's down at 169. It's down about 10 points-ish from the higher end of the range that's been in. You had Tesla blasting off the last couple days. I wouldn't call this a down move, down $2 and change. Amazon giving up a little bit of of the gains it's had. Google as well, which has been super, super strong. It's down $3 and change. Some of the secondary stocks like your Palantir down $5 and change here. I was looking at AppLovin, one of these kind of high flying, high beta stocks. It's down a handful today. So a little bit of a rotation out of the NASDAQ into the Russell, which is bucking the trend today. It's up over 1%, 27 points. The Dow up 300. So the Dow and the Russell much, much stronger than the NASDAQ and the E-minis, kind of the rate cut trade, so to speak. We'll see if that holds up into the middle of the day today. Oil has had some two-sided action today, about an 80-cent range. We are right in the middle of that, 64 basically on the dot here. Volatility futures have been coming in throughout the session, but the premium in the shorter dated stuff, SPX specifically, has really stayed bid. So it's really longer duration, the 30-day implied volatility that has come in. Short-term vol has continued to stay bid into the announcement we have later today. Bonds up 4 ticks, 118. We have gone through the 118 handle. Gold and silver have been relatively choppy as well. Gold basically unchanged today. Silver actually moving down 59.60 cents now. And then Bitcoin has had some two-sided action. It's had a nice little run up from the 110 handle-ish to the 115 handle, but we're chopping between that 120 to 110 range for the better part of the last couple months here. Spot down 400 and change. The futures down 1,200. That includes the overnight session as well. And then Ethereum has kind of done the same sort of thing here. $5 to the upside, basically unchanged. So it's been a lot of rotation, a lot of choppiness to start the session.
What have you guys been doing in iBit? You had a plug and chug strategy going for a while.
Yeah.
How's that going?
It's great. Mikey's just printing.
Oh,
I mean, it's just been this. It hasn't gone anywhere all year.
But I feel like it's lost some
mojo.
Some mojo.
Yeah.
Not from a price perspective, but it feels like the range has gotten even smaller.
I think Bitcoin's the big mover this afternoon.
Oh yeah.
Ooh, upside?
What? Yeah, are we talking moon balls?
I would think upside, but I think in general, I think it's been there's a move coming.
I need 100-point sell-off in gold.
That'd be,
that would be, you would probably have to have Jay Powell a little hawkish.
I think that's the coin toss right now.
Yeah.
Hawkish cut.
We need Jay Powell to come out with a spacesuit on. Be like, this is where the market's going. Yeah.
This is Powell over.
Yeah.
Yeah. That would be.
Yeah, I don't think I'm gonna get it in gold, which is very unfortunate.
Yeah.
That kills my streak of winners in there.
What time horizon?
8 days. So now or never.
That's some time.
It's not ridiculous.
It's not crazy. I mean, gold has moved $100 in the last week.
The chart looks like it's too early to call the top, but yeah, we've got some event risk right here.
Mm-hmm. Yeah, market's still pricing in 45 points in the E-minis for the rest of the day. So we do have some implied movement here.
Yes.
I was looking at the JP Morgan scenario analysis.
Oh, God.
As one does.
Oh, God.
So what's
so funny.
What is
it's the best job in the world.
Yep. If this happens, S&Ps could go up or down a full %.
Yes.
If this happens, we would expect up or down 0.5%.
That stuff drives me up the wall.
So awesome.
I just think about some Joe Schmo that was gonna say a bad word
and
sitting in a suit at Goldman Sachs with his comp package significantly high for what this entails, and him just going
sipping on a little espresso.
Yeah. And then being done for the day. Oh, I'm out.
It's pretty good.
See you next rate cut.
My favorite is they threw in, line at the bottom, 1% rate hike, just to really cover our
Oh,
bases.
yeah.
This just in, if that happens, they expect down 2%.
Oh, yeah. So do I.
Yeah.
Just had to include that in the table just in case. So you don't want to be wrong.
That'd be crazy if they did something crazy here. If we gave us a 50 basis point today, market's crashing.
Okay, see that was their up or down a full 1.5%.
Was the 50 basis?
Right.
So
You
50
could react
basis
positively, or you could say
Yeah.
"Oh, we're on stilts."
So it could go up or it could go down is basically what they said. That is profound.
Anything else you'd like to know?
Yeah.
So let's do a little round table here. I think they do a 25 base point cut. I think they signal for more cuts at a rapid pace.
Rapid.
Wow.
Yeah.
So dovish.
Yeah. And I think you see a downside move in the markets.
Yeah, I don't know. That was
I think we're down.
That was
I think
kinda
we're down.
hawkish.
I think we're down over the implied move of 44 points today.
Ooh, on a dovish sentiment. Because the dovish sentiment kind of indicates money print to go burr, buy a dip.
Historically speaking.
Historically speaking.
But if it's too fast, if it's too fast because they're trying to catch up.
Ooh, okay. See, I think it's gonna be the 25 base point. That's done. That's the easy one. I think Powell comes in a little bit hawkish, not as dovish. You have a little dollar strength. You have a little bit of a market sell-off. I agree. I think, nothing huge.
I think the result is a market sell-off regardless.
Yeah, it's a dip buy. You buy that dip. You always buy the dip. But
you know this.
The initial move is inside down. I think 50 handle is probably a good move. 40, 50.
Yeah.
Dollar strength. Bitcoin, big move. I think gold probably big move too.
No.
Upside.
We need down, big down.
I think you get if you get hawkish cut. I don't know if that bolsters gold.
I don't think so either, but I think it just makes
has
it.
so many things going for it. I don't understand it.
Yeah.
It's crazy.
But gold, it's kind of a fear thing. I think it's a move on the fear.
Or does that go to dollar?
I think dollar too. That's what I'm saying. Dollar.
Enough love to go around.
Yeah. So
I'm gonna ask
but
you chat.
You scoopy that dip.
Yeah.
So you don't think it's an insta scoop. You think we still finish down on the day. It's
I think
not
we finish down on the day.
Meeting, see it. Powell says nothing really, and so we're buying into the close.
Yes.
And unch.
No, not that.
Still
I
down.
don't think it's unch.
Okay.
I think you gotta get a little fear. That's why I think gold is gonna go up as well, because I think it's gonna be a little spooky. Spooky season.
I have been surprised at the veracity to which markets have been pricing in this cut every meeting this year.
Yeah. We actually had a great cherry picks, not to cut you off.
No, please.
About rate cuts and moves afterwards, and a lot of them are on.
I think the rip in gold was a prequel to what we are about to hear today. I think the money was already entered into the gold realm, preparing for some scary stuff this afternoon.
So if you're thinking, buy the rumor, sell the news, you think that would be most apparent in the gold market?
Yes. I think if the
says the guy who wants 100 points.
Yeah,
in 8 days.
Speaking his book, no doubt.
I need gold down 100 points.
Yes.
Which could happen if the move that we saw in gold over the last 2 weeks was in preparation for something scary, and then it's not scary. Maybe you see a big gold sell-off and a big market rally.
I mean,
which actually wouldn't hurt me, because I'm bullish in a lot of other things. But
yeah, gold like dollar was something that in this run-up surprised me as to where we finished on Friday, and you're like, okay, gold I think has settled pre-meeting, and still was managed to put in 30 more. Points there, and now is pulling back a little bit.
If we get a 100-point ripper in the E-minis, gold has to be down 3%.
Even if it's on more cuts, gold non-interest bearing.
Yeah, I don't know. I'm just preparing for max pain, which is gold
mentally.
Which is gold staying above this level here. But yeah, it's going to be very interesting. Can't wait. Gonna have it on the old monitor.
Yep.
See what color tie he's wearing. It's purple. It's gonna be purple.
Yeah. No, he's dispelled the tie.
But will you be able to see the purple tie under the spacesuit?
Ooh.
What tie you got going on?
Yeah.
Like it.
What's that color over there? So, Tasty FX.
Yes. I'm locked and loaded. This could be a lot of pain. We've increased size. I talk about staying small, but we've added a little bit more in the euro.
Okay.
I'm long the dollar via shorts.
Yeah.
The Aussie dollar, New Zealand dollar pairs. And then I'm short the Aussie dollar CAD. I took off the New Zealand dollar CAD.
I was going to say, one of those I thought would
that
have
one
been
worked
in your
out.
favor.
That one worked out. But yeah, I'm down like $20 overall on these pairs. But
on your opens.
Do I double down, or do I keep the size where it's at? Or is there a like what pairs are you looking at for this announcement? Euro dollar.
So yeah, given how much euro moved this week in preparation for this event, I mean, you can see it both ways as to, majority of FX traders will have some sort of dollar positioning heading into this event.
Yeah.
We saw, institutions or whoever these market players are reposition to be more net neutral. And so all that's saying to me is that we could get any surprises from this meeting could lead to higher elasticity in this euro dollar pair and across dollar markets. And so that could speak to you and say, there's time to play catch up. If I'm not worried I'm going to miss the 0.5% move today, and I want to pick directionally before, there could be enough elasticity in these markets in terms of a reaction where you have the ability to see the result, hawkish, dovish, what have you, and react after and still be able to, get enough of that move without being positioned beforehand. But if you're going into this long dollar, I wouldn't necessarily lever to the gills just in case, because then you're not.
Oh, well,
you're not.
I'm levered to the gills. Trade once, trade huge.
That's the new phrase around here.
But yeah, I mean, you also have kind of the functionality baked in with the different dollar pairs, to where if you have positions on you want to keep, you can trade around them using different dollar exposure. If you're just waiting for the reaction.
And from a dollar standpoint, this is about the lows. I just pulled up a monthly chart at DXY. I mean, dollar is very, very weak.
Yeah, so
it's
dollar yen, which is, I think a decent 20%, 25% component of that index, has been staying in relatively strongly compared to the kind of swings we typically see in that. But yeah, euro's stuck at a 4-year high dating back to September of 2021. Last time we were there, we were coming down from like 120s.
Yeah.
If this holds, technical analysis says there's room to the upside. There's some bullish cases, but with event risk like this, there's a scenario where technical indicators, you can throw them out the window.
Yeah.
In terms of direction, and there will be a complete.
How high can the euro really go?
I mean, if you look back, I mean, even what?
What's the all-time high on the euro? 1.3.
We've got monthly data going back to 2008. We were up almost at 1.60.
Wow.
So that's pretty high. That's some room to run. What's more surprising, more rarefied air, I mean, I keep saying this, but it's not moving in the dollar's favor at all. Swiss franc broke through 79 yesterday to the downside.
Okay.
Now that's trading at a 10-year extreme. We didn't even touch that in July. July we bounced pretty hard off of 79. I think we touched it for an hour. We traded there yesterday and a slow grind to around 0.7860. So that one's really stuck. Tailwinds of euro and some risk sentiment not going in the dollar's favor.
Yeah.
We'll see if that pressure's lifted, but
isn't France a mess right now?
Yeah, the Swiss franc.
Yeah.
Is, EU
Swiss
removed.
Yes.
Yeah. So.
I'm just getting long all these. Like they're all paying me to hold these, and they're all at Bollinger Band lows or highs.
I mean, I say,
Just
it's true, but a prayer to Papa Powell, I think is also in order.
5 microlots. It's fine. It's still small, very small.
What's your get out point?
I don't have one.
Okay.
Yeah.
So
I only get out
diamond hands.
I only get out if it's profitable.
Diamond hands.
So yeah, I would say that the one part with this kind of elasticity is if things run against the dollar further, I mean, you have a ton of people recalibrating on a weekly, quarterly, yearly basis here, all the way from retail traders to countries. So that's where that kind of snowball comes into play.
So
but historically, yes, mean reverting over the long term.
Is the rate cut baked into the currencies already?
Rate cut,
would you
very much priced in, and the most likely. I mean, I track the FedWatch tool from the CME.
Yeah,
that
it's in.
We're looking more so priced in 3 cuts end
this
of the
year.
year.
Yeah, it's a cut every single
most
one.
likely scenario. So
we have 5 or 6 pretty much into early part of next year. I mean, by
150 basis points over the next 12 months.
By this time next year, they have us, rates basically cut in half. It's essentially 25 basis points every single.
You might be able to refi next year. Sub 5%.
I'm looking to survive, like the end of the year. Next year, it's a millennium away.
Yeah, so that is the path right now. And you saw, if you're looking at historical evidence, last year we got jumbo cut, and pause. So that, may speak to some people saying, once they've taken so long to resume cutting.
Too late.
Some would argue too late. That they might cut successively.
That's what I'm saying.
Realign.
Yeah.
You're saying that
So
they do the same thing, jumbo cut to get ahead of it.
Mm-hmm.
But if you're speaking to 2025 on, it would be surprising for them to not only start cutting but commit to successive cuts.
Yeah. If those cuts like middle of next year come off the table, it would or at least move forward. Let's say we do like move quicker, jumbo or something like that. You would, but less.
Right.
If Jay Powell's like, you know what, we're going to do the 3 here. Maybe we'll do 2 of them. Next meeting, who knows? But we're going to do this year, and then next year we're going to we're not doing anything.
Right.
That's got to be bullish for the dollar.
Yeah, and that's what happened in September of last year. We had kind of a snapback reaction of reacting to the summary, then Jay Powell coming up and dispelling that their cutting cycle would be as aggressive as you could probably read from that report, and dollar snap back in a big way. What we'll get today, who knows, but another wrinkle in this story is kind of the Fed members themselves, as much of a tabloid story as that is, of who's going, who's coming, who's leaving, who's getting removed, who's replacing. It does add a wrinkle not only to, when we get the dot plot, how scattered those opinions are, but also there is, when you're thinking about global markets like the U.S. dollar, there's a high percentage of Fed independence that you're baking in there too, of people along the risk sentiment saying, even though I'm risk off, I'm more comfortable in the Swiss franc or the Japanese yen than I am in the U.S. government, even as a result of the players right now, who's entering the Fed, who is going to say yes, Donald, versus how political the Fed is.
So speaking of removing the U.S. dollar denominator, non-U.S. pairs. What do you
you got one.
Non-US
You got
dollar
a goofy
pairs.
one for us.
Yeah, we're looking.
We love the silly geese pairs.
We're looking at Australian dollar, Japanese yen today.
Ooh.
Coming off of its year-to-date highs.
Do I have
You're
that?
looking at the daily chart. There you go.
The team they are
Mad
on
fire
it
today.
They're on fire today.
If you're looking at that chart, if you're going back, you're on the monthly. If you go back to the daily,
yes,
you'll see we're coming off of 2025 highs hit midweek last week. This is also, a purer risk sentiment play. Historically, Australian dollar more of a risk on currency. Japanese yen, that flight to quality. You also have the China strength baked in there. China on a tear right now. Also, some of that gold in there. Historical correlation between Australian dollar and gold, as they are a metals exporter. So some unique components in this pair that aren't necessarily U.S. dollar dependent. But then again, a lot is resting on that Japanese side where you haven't seen a ton of confidence. So you could play the reversion there on two accounts of, that the gold in China, maybe the run up too fast.
Yeah.
Or
as a short play to play.
Yeah, or on the account of Japan doing something. We also have Fed's a big deal, but we've got this morning we had Bank of Canada cut. We had overnight tomorrow morning we have the Bank of England meeting. I think they're expected to stay, and we have Bank of Japan tomorrow night. So action-packed economic calendar. We've got the economic calendar on tastyfx.com. It's a pretty good one. It gives you all the analysis.
Nice.
For all global macro events.
So that makes sense. I think that makes sense as to why there is a 50-point expected move today, but still a 70-point expected move through tomorrow.
You're talking SPX?
Yeah. They must be pricing in the additional meetings throughout the next 24 hours.
Yeah.
I would assume.
So, Bank of Japan, I think they're looking at a hike eventually. They're also prone to surprise, not as telegraphed.
We know.
Yeah.
As good old Jerome.
That was a generational dip buying opportunity, by the way. That was a 2-day, 10% sell-off.
Yeah.
V bottom, the most acute angle possible.
The Liberation Day was pretty close too.
That was good.
Yeah, that was.
Man, if I wasn't only.
If you only what?
It's like, yeah, we could buy a share of Microsoft.
Oh,
here.
yeah. Which you were going to say is if only you had $100,000 in cash. That's what you're going to say.
Yeah.
Did you guys, shave anything off in anticipation of today? Any exposure? Are you sitting more cash?
Leverage.
Well, I mean, as we were talking, I just added 4 more FX positions. So, but my total exposure is 30 micro lots. So it's nothing crazy. Unless they all move against me in a violent way.
Yeah, it's only like $30,000 notional.
But no, I do have a put diagonal spread on in the Qs.
Okay.
But I also have a call diagonal spread on an IWM.
Which is working.
It's working well.
Today.
That pair I put on, long IWM, short the Qs, that pair together is up like $200 almost. But yeah, I've got some other stuff that I would love to see go down, like gold. But yeah, I think if we get a big gold sell-off, that must be paired with an equity rally, like rip. Like we're going to 7,000 tomorrow type rip.
Type rip.
Yeah. Type rip.
Good stuff.
Just want to answer Andrew Cortado in the chat before
Sure. Andrew, shout out. One of our peeps.
Canadian dollar closely correlated with oil, and similarly, Australian dollar is it gold? Yes, historically called commodity currencies. That Canadian dollar we've seen definitely less impactful in recent months and years as U.S. As an exporter has started to ramp up as well, but it's just historically Canada's a fairly high percentage of its GDP was reliant on oil exports, so you see some correlation in their currency there. Similar with gold, I think their highest export is other metals like iron ore. Plays through gold in the metal market. Also very high correlation to China, Chinese equities, as it is its largest trade partner. So Some stuff to read into there, but correlation is always updating, always changing, and especially for all of these pairs, you have two sides of that. So we've seen recently a lot more move with the U.S. dollar side of things, and less back and forth on the individual other countries' risk or events going on.
Mr. Glenn, thank you so much for joining us.
Thank you for having me.
Really fun to have you. I'm excited for you. Get the applause for you too. Yes. I'm excited for the Super Bowl for you later this afternoon. Please
load up on pita.
A different kind of bowl.
Yes.
There you go.
That. Please
different kind of Super Bowl.
Please keep us in the know of your take on the J-Pow taking the stand.
Yeah, keep us abreast of the
if I come running
JP
over.
Morgan Chase summary.
Yeah. That's what
I won't do it.
But it'll be good to know.
Yeah.
Thank you guys.
Good stuff.
Good.
right.
Thank you, Glenn. We're going to get rid of Glenn and get to some of your YouTube questions. If you got some in the YouTube chat, post it there. We're looking for some trade ideas. If you got some, E-minis down 10. High, or the low of the session, just about.
Hashtag crashing.
Crashing. 10 points. Crash.
Just got some amazing info. David, we need to go to the State Fair, Texas State Fair, when we come to Dallas, if it's still open. And boy, is it still open.
Is it?
Yeah.
Where is it?
Through October 19th, downtown Dallas.
Oh.
Or near downtown Dallas.
Okay. Yeah, let's do it.
That's really great. That's really great stuff.
Yeah.
That's the kind of stuff we
I want
need,
a
David.
fried Twinkie.
That's what you're going to get.
Or fried Oreo.
Yeah.
Some brisket.
Yeah.
Yeah.
Some Kentucky, no, what is it? Chicken fried steak. That's
Chicken fried steak.
That's where I'm at.
Yeah, no.
Love that
I
stuff.
just go for the
Or you can just do the regular steak.
Yeah,
whatever you need.
brisket.
But yes, thank you for that.
Yes.
Yeah, so added a bunch of positions here in the Tasty FX account. Still small though. Like I said, these are 0.05 size, 5 micro lots for each of them, and I've got 6 different positions, but
yeah,
nothing too crazy. I do have my eye on some other stuff. AMAT rallying today. Something that I will have my eye on is this Roblox position. I have a 130, 135 short call spread expiring this Friday.
Nice.
Teetering. Getting some value back today. But if the market sells off and so does Roblox, I will be looking to close that with 2 days to go. Everything else, though, is more long-term in this portfolio. Nothing. My Google Iron Condor, that's done.
Yeah, I have a call spread as well.
In Roblox?
Mm-hmm.
Yeah. I looked at rolling it out to next week for like small credit, but it's a 5-point wide. I'd rather just see if we can get it today. I think we might. I think if this market sells off, Roblox isn't one that's going to reverse.
Mm-hmm.
If I were to guess. So.
Yeah.
That's where I'm leaning.
50-50 shot. It's a tough. I mean, I'm looking at my position. I'm thinking I might even just close it. Like when you look at the change, like how much you made back today, and when you look at this position, pretty deep in the money yesterday at 135. It was basically fully in the money. I made back about $200 today, which is significant.
Indeed.
To throw on a 50-50 shot.
Yeah.
I might have to look to roll that. I'm gonna chill for a minute.
Fair. Are you doing anything in SPX short-term products for this thing today?
Yes, I have a call spread.
Short call spread.
Into the end of the week.
Wow.
I did this in my Johnny Trader account too. I did this at 225, so this has actually come in pretty nicely here. I did this one at 230, so I'm up about 40 cents on it. Every time I think that it's already baked in, and then we get these 100-point rallies. So maybe I do take this money and run.
You're up $100 or
no, I'm
$50?
up like $50.
I mean, you still have 100 points almost to the upside.
Yeah.
But you could get that in 10 minutes. That's the problem. But if it sells off, it'll come in nicely.
Yeah.
I put out a YouTube poll. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. J-Pow result, up 50. What do you think the percentage is? There's 82
50
votes.
points.
Up 50.
I think it's going to be so perfectly normally distributed. No? Everybody playing for the upside?
It's pretty good.
Yeah.
But what do you think?
I'll go 25%.
9%.
9%.
Yeah. Down 50.
I was going to say 25% there too.
27%.
Okay.
And then within 50 points, 65%. So almost perfectly one standard deviation.
Yeah, that was downside skew. That's what
Downside
just
skew.
demonstrated normal distribution. It's beautiful.
The people out there are giving us the normal distribution with that's literally the downside skew in SP.
Yes. Yes.
So basically,
it's unbelievable.
It's crazy.
Yeah.
But within 50 points is interesting. I think if he does the 25 cut and then he's just like, well, we'll see what happens in a couple weeks, you'll get your 50 within 50. But if he says something more aggressive, I think you get outside of 50. But that's public knowledge, I think. But yeah, we are about an hour and 20 minutes away from the release. Exciting stuff.
Yes.
Does today's announcement have anything to do with fear? Not yet. We'll see.
I mean, there's not much fear in the market. You have the VIX at 16 and change. I mean, it's
exactly.
There.
So I think if you're this is how I would look at it. If you get a market sell-off, fine. That's your step one for fear in the market, is a market sell-off, obviously. But if you get a VIX pop, if the VIX goes to 20 today, that is legit fear in the market. But if you get a sell-off of 50 or 60 points and the VIX doesn't move, that's a buy the dip for me. Yeah.
Okay, so 20.
20.
VIX 20 is your.
VIX 20.
That's your indicator. That's
VIX
when
20 with some movement in the VIX futures also.
Okay, so that's when all else, or what's your phrase? Until proven otherwise.
Until proven otherwise, you can put it away.
Yeah.
But if you get a sell-off, sizable sell-off with no VIX movement or relatively no VIX movement, that's an until proven otherwise, and I will be throwing on some bullish positions.
Okay. E-mini's down 17. We're at the low. Low of the day.
Uh-oh.
They leak.
Was there a leak? Yeah.
Is there a leak?
Is there a leaky faucet?
Do I take my $50 in this account?
Why don't you bring it down to 60 or 70 and see if you get filled?
Okay.
There you go.
I'll do 60.
Yeah, let's do that.
I have this on the Johnny Trader account too. So we're gonna leave that. That one we're not touching. But we'll put it on here.
Can you open a Forex account as an international customer? Ooh,
no, I know this. So the interface in the platform is only for US-based customers through TastyFX, the US entity. The IGFX products are for international customers.
Got it.
So TastyFX just US-based.
Lovely. Donna taking a nap to build up strength for the huge rally that I want to trade after Powell cuts rates.
Woo.
That's a.
All right, I like it.
That's putting your money where your mouth is.
Yeah.
Reddit seems quite the odd timing of the Google deal when the stock was losing short term.
What is this? Reddit?
Reddit down.
Yeah, it was down. Down like $10 from where we're trading now. It's had a little bit of a bounce back. What's Google doing?
So playing for 230 is what Taif Tozi's saying. Play for 230 in Reddit. So another 30 points.
Today?
I don't know about today, just in general.
Okay, so that's what but we're taking some short delta here.
Yeah. So
how about
I mean, it's still expensive because you have high IV and a $300 stock, but you can get into, vertical spread. You could do calendar spread at 230, long November, short October. That's in the earnings cycle. So you're getting a little boost in extrinsic value and implied value holding on to in the November cycle. Still expensive though. Short call spread?
Yeah, that's what I'm trying to get in. 225. I'm in October. 290, 300.
Sweet.
So I like it. It's a little too expensive to do a calendar or diagonal spread.
Yeah. $1,000 for a Reddit is.
I would rather have the out of the money short position.
If the market starts to crash, are you going to pull the fire alarms? We probably have some fire alarm sound effects for the 1 o'clock hour. But yeah, again, I think if the market sells off, it's got to be paired with a big volatility increase for the market to be saying we should take this more seriously than a short-term dip buy. So that's what I look at, because there's 2 rules in life. You're not going to see an E-mini sell-off of 20 or 30% unless volatility futures go into backwardation.
Okay.
Generally speaking, especially short-term.
Okay.
Every time that has happened, the Japanese yen unwind, the tariff stuff, we were in backwardation in volatility futures.
That's after the fact, though.
Yeah, but it's on the way down.
Yeah.
You could see 5% with backwardation, and then you get the continuation and a steeper backwardation.
Sure.
And then the flip side is also after the fact a little bit is once you hit the bottom, if you start to rally and volatility futures come out of backwardation and go to a steeper contango, that's when you are back on your way to all-time highs, or recovery, you should say. So volatility, the curve of volatility futures is very important to look at, especially if you are buying dips or avoiding buying dips. Like the volatility futures curve can tell you a lot about the implied future movements of the markets. It is a lagging thing though, like Nick said. So like you'll be in backwardation, and then once we go from backwardation to contango in vol futures, you would have already gotten a 5% or 10% recovery in the E-minis. But still, paying attention to that can help kind of guide your strategy or the size you're using, whether you're defined risk, undefined risk, that kind of thing. So that's what I'm looking for. If there's a market sell-off, I also want to see a big pop in the VIX. XSP trade for the Powell special? Sure, let's do something here.
I got my trade on, so I'm locked and loaded. What are you thinking?
I'm just gonna do a downside diagonal.
Yeah.
5-day, 2-day.
5-day, 2-day. Okay. What are you thinking?
660, 655.
So right at the money.
Yeah. Just 50-point sell-off for Friday.
Friday. Are these PM settled?
Yeah.
All of them?
Mm-hmm. Yeah. Okay. So September 22nd, long the 660. September 19th, long or short the 655 for 225. Yeah. So yeah, I'll throw that on. And then if I get my face ripped off with a ripper to the upside,
so be it.
It doesn't really matter because I've got other bullish positions on. But let's see if we can hit one of these. 230 I was filled at. Cool. TXN strangle, November 160, 200.
TXN.
Texas Instruments.
November. What are our strikes here?
160, 200. $7, $1,800 in buying power. This is in the earnings cycle, so it's not something I love to do.
Yeah.
I would rather just wait, especially with you've got a lot of macro news coming out. The markets could move in a big way. Selling a strangle in the earnings cycle is going to prevent this thing from decaying rapidly until after earnings. Yeah. So I like the idea, but I would just wait for earnings.
Yeah, I don't mind it. What do I do with my gold butterfly? Right here, at the money. 335, 340, 345 into the close of this week.
I mean, I think it's got to be up, right?
Yeah.
I think you take that thing off.
You take the money and run?
I think gold has to move. Right?
At $1.66, we're pinned at 340. That's what I'm saying. You know, you got a couple $100 into.
So what? You can make another 270, or
330. Make another $3 and change. 5 by 5.
I don't know. I think gold moves.
I'm gonna leave it on. We're gonna
Have some fun.
Roll the dice.
Yeah.
Come on.
Don't listen to me.
Yeah.
What do I know? I have a deep in the money gold butterfly.
No, your position
terrible.
is speaking for you.
Yeah. Marvel?
MRVL. Okay, what are we thinking? This one has not participated with the rest of the chippies.
Yeah. Interesting play here.
Mm-hmm.
It's rallied from the lows, which is nice to see.
What are they thinking? They have a trade idea, or?
Just says marvelous. But yeah, if I were to play a place trade in here, it would be to the upside.
Mm-hmm.
Just from a general stance perspective.
Mm-hmm.
These are cheap though. You can do a 70-80 November, October for $5.
Yeah, maybe I do that.
I'm gonna do that.
November.
Into this ripper. Yeah.
I'm gonna do the 75-80. A little cheaper.
I was instantly
$3.
filled. Oh god.
321.
540. Yeah, 540 filled. Long November 70, short the October 80. I like those.
Yeah. I was looking at the short. I think the short puts are interesting too. The 65, you could do it at $1.58. Gives you a break even, down at 63-ish.
Mm-hmm.
It's kind of the lower end of where it's traded. I imagine this was earnings.
Yeah. Gold call broken butterfly, 2 days left. 335, 340 in GLD. 335, 340, 345. Oh, that's one you just had.
Yeah. It's a classic 50-50 shot. I mean, you can see even the expected move is a $50 on gold, 5 points here, move in either direction. So this could be fully in the money, fully out of the money is really what the coin flip is. Or you can be inside that. And if you're inside that, probably have a couple dollars more to make here.
Yeah, so why is it only plus 100? Because we have a binary event that could move gold.
Yes.
You could, if you wanted to, you could close the call spread, but you're leaving $150 of hedgeability on the short call spread.
Yeah.
If this was trading for $450 instead of $350, I would say, yeah, take it off.
You just take the trade off, yeah.
Yeah, you probably, because you'd be up another $100 anyways.
Yeah.
But yeah, if you close the long spread, you're giving up $150 of hedgeability on the short call spread. But if you close the long spread and then gold sells off, you're double doinking and it'll be a nice trade.
Yeah.
But
that's
you're adding risk.
Easier said than done.
You're adding risk if you close the long spread. If you roll the short spread out, then you're kind of accounting for that, but you're leaning bearish as opposed to neutral. So a lot of questions there.
Yeah. I also have another one that's out in the 30-day. 340, 345, 360.
There you go. 350 for the gold wing. So you have the broken wing butterfly. 335, 340, 350.
Maybe buying the risk.
Yeah, you could do that.
40 some odd cents. You sell out of the 350, buy the 345, and
I like
have
that.
this butterfly on for
40 cents, 60 cents.
Yeah.
That's what I would do. So you have a broken wing butterfly. If you move the 350 to 345, it costs you 40 cents. Right?
Yeah.
And you will be legging into a free butterfly.
I did the same thing. I did it at 44 cents on the 15th, so 2 days ago. It hasn't really moved. This roll. So I have this butterfly on for 67-cent debit.
Oh, okay. Then yeah, you keep that. But if they're legging into it for a credit, a net credit.
Yeah, then you for
I
sure
would definitely do that.
Yeah, you take $500 off the table, and
you would remove your risk.
Yeah.
As long as you collected more than 40 cents, 44 cents, as we're showing here is the roll cost.
Yeah.
If you collected 50 cents, you're locking in a 6-cent credit. Doesn't matter what happens, you don't lose money. But if you pin this area, you can make more without having risk. And you free up the buying power of $500, which is important as well. So yeah, thanks for calling that out. That changes things. Are you selling calls or buying puts if you believe there's going to be a sell-off? I like defined risk if you're playing for big moves. Because this thing could rip up 150 points, and now you have a 3 standard deviation move, and you're on the hook for short call losses. I think you can structure something where you can make more than your short call premium, like a downside diagonal spread, like the one I just threw on an XSP. It's $250 of risk and about $300 of max profit, I would say, tomorrow or today, if it goes in the money. Because you'll get the vol crush in the short 2-day option, and the long option will hold on to some value. So I would rather do that than just sell a naked call with a lot of upside risk.
Yeah. Short calls are not really bearish. Like, they're short volatility.
Yeah.
I mean, if you want to lean bearish, do a put diagonal or a wide butterfly. Like, those sort of trades are directional.
Yeah.
Short calls or short puts are neutral / slightly directional.
Yeah, because you don't get paid.
Yeah, you don't get paid.
short call.
You're playing for chop. You're not playing for a big move.
Yeah.
Even if you're selling calls, you're not playing for a big move lower. You're playing for, realized volatility to come in light.
Indeed.
Yeah.
Is LEN liquid enough? Earnings 918 after hours. Rate cuts should help the stock.
Markets don't look horrible.
Yeah, they're not too bad. I mean,
they don't. It doesn't look like there's a ton of volume here. The weekly has a couple hundred contracts.
Yeah. It's not terrible, but it's not something I'm seeking out.
Yeah.
The good news is these earnings are tomorrow after the close. So you could wait and then throw it on, but if you're trying to play for a pre-earnings move, then I think you got to do it before the 1 o'clock hour. So within the next hour. But yeah, it's not something I'm gonna do. Hims for the win. 1 standard deviation naked put been my go-to. I mean, this thing's had extreme implied volatility for the last year.
Yeah,
and
I
it's
got
$50 stock.
another butterfly here, right at the money.
Oh. So related to the short call related to the market sell-off, they were asking, are we selling puts or buying calls in the VIX if we believe there's going to be a sell-off? 100% buying a call in the VIX.
Yeah. If that's, yeah.
Just because we know that if there's a huge upside move in the VIX, the volatility of the VIX will increase. Unlike the E-minis, if you see a big rally in the E-minis, you see a volatility contraction. With the VIX, if there's a move to the upside that's outside of expected move, you're going to get a volatility increase in the VIX, which tells you the VIX price is going up, which means extrinsic value everywhere is going to be higher. And if the volatility of the VIX is going up, that also inflates extrinsic value. So a naked call benefits from increase in the VIX price, increase in implied volatility in the VIX, and it's cheap to find risk. So yeah, we would be buying a call in the VIX if we believed it was going to pop in a big way. But you're not holding that. You're selling out of that if you are right.
Yeah.
Because we also know that volatility reverts pretty quickly these days. Okay, a couple minutes left here. We got a little boost, up 50, 10%, down 50, 26%, 64% within 50 points. So the majority of the YouTube chat, 140 votes, within 50 points.
Very nice.
I'm in the down 50 realm, but But yeah, just a quick recap here. The FX positions on the Tasty FX tab, I added a short Aussie dollar. I have a short Aussie dollar, short New Zealand dollar, short an Aussie CAD, short a euro dollar, and then I'm long the dollar yen and I'm long the dollar franc. All those are 0.05 size, and they're all basically long the dollar, ultimately.
Cool.
Sweet. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Freibarger with an A. And yeah, we've got an hour and 2 minutes until everything's released. Market will be moving. Press conference is at 1:30 Central, I believe.
Yes. Minutes come out at 1.
Yeah. Cool. We'll see what happens. We'll see how these currencies move. We'll see how the rest of the market moves. But yeah, if you're looking for a sell-off, keep an eye on the VIX and see how that reacts as well. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
It's option. Jive. Jive is right. Sosnoff, go. Even the S&P is unchanged, up 50 cents. Actually, all 4 indices are up right now, Sosnoff.
Yay. Yay.
Yay. One more time.
Yeah. I don't think I think it's going to be a little bit of struggle this morning.
Struggle bus until 1 o'clock Central?
Yeah, probably. Yeah. Right until Dylan and I start. Told Dylan, give me 1 minute after the opening before we start.
It does seem to be that way all the time, but yes.
Yeah. This morning, silver was down $1.20, so I thought that was kind of ugly. Now it's only down 76 cents. Gold was down about $25, but those are the 2 things I've seen that have moved.
That's correct.
Pre-market. Nothing else has really moved much. Yeah, I do like Russell today versus NASDAQ. I'm going to stay with that. Haven't done the trade, though.
Okay.
We got a lot of stuff going on today, so thanks for spending your morning with us. Before we head out of town, we're going to cover some meme stocks. We got a little Jacob Perlman coming on, and we're going to do a little what's your assumption. So should be a pretty busy, Tasty will be a pretty busy day.
Mm-hmm.
Let's see, we got the first one. Okay. This is a tough one. I mean, I know you're thinking that meme stocks, this should be easy, but what we did was we turned our research team loose and we said, can you quantify meme stocks and market kind of mania, like all the crazy stuff that's going on? Because there's so many people out there that like talk about things that, that just drive me insane. So one of the things I love about what we built here at Tasty is that we keep everything, mathematical and everything pretty much as quantifiable as we can. It's pretty hard to put meme stocks into a quantifiable bucket, but we challenged our research team to do the best they could, and they came up with some pretty interesting stuff. It's a little heavy, warning you in advance.
Okay.
It's a little long, it's a little heavy. You might want to go check it out later, but it's a really good piece on meme stocks and market mania. Let's take a look. So what are meme stocks? And again, this is a very subjective, there is no real definition. Stocks that surge due to social media hype rather than fundamentals. Stocks driven by retail investor communities such as Reddit, X, TikTok, often feature extreme volatility, short squeezes, and irrational valuations. Retail driven, narrative based, prone to volatility. Some examples could be GME, GameStop, and AMC in 2021. Open Door and Kohl's in 2025, right? Fair?
Sure. Now, Kohl's has been around forever. Some of these other stocks have not been around forever. But this
AMC's been around abroad.
Yeah, but this is a recent phenomenon, right? I mean, it's an
2021. First time I ever heard the term. Let's go to the next slide. So, some key signals. Social media buzz and trending tickers. explosive trading volume. You saw that the other day in open. It was like 330 million, whatever.
Yeah.
High option activity, high short interest, over 20% of the float, narratives appealing to retail investors, meaning they're usually cheap, price disconnect from fundamentals, volume 3 to 10 times the average daily volume, option flows where the call put ratio is greater than 3. That means 3 calls trade to every 1 put. Sentiment scores rising on, rising mentions on Reddit and like stock twits. And this is something we don't really look at much, but technicals with the RSIs over 70 and Bollinger Band expansion, that's just kind of
We're trying to encompass everybody.
Yeah, we're trying to throw everybody in there.
Stocks. That's all.
Throwing everybody under the bus.
Yeah.
Let's go next slide. Okay, so what's important to note here is that no single indicator is sufficient to determine whether or not it's a meme stock. So these are quantitative indicators for early detection. So you need to combine at least 3 of these signals for higher probability setups. The best trade occur when technical, social, and options flow align. So what we did here is we put together some kind of really cool statistics, and we said, okay, well, you need 3 of these, right? So you got option flow, volume spikes, you have Reddit mentions, borrow rate, and IV percentile, or IV rank, it doesn't matter. And you're looking for something that is a score of greater than 5. And so we put kind of how we figured out all these numbers here. So it's kind of cool. And what's interesting is if you look on the right-hand side there, it says lead time. You don't have much.
Yeah, no, you don't have much at all.
Yeah, you don't have much. And we explained things here, like, the volume over 10 million shares usually. It's usually way more than that. The AI sentiment, options activity, short squeeze setup, which is kind of hard to know when it's happening.
And subjective, right?
And order flow, man, that's hard too. It's hard for a retail customer to look at, kind of figure out order flow as you're watching it. That's not easy. Let's go to the next slide. These are not easy, but it just explains things. So we put some recent examples of meme stocks here. Open Door, 500% surge after the CEO change. Kohl's, 90% intraday spike on short squeeze. Krispy Kreme, 32% short interest. Beyond Meat, 43% short interest. These are recent ones, September, July of 25. Reddit, which is probably the most expensive stock we're going to look at here, just had an unbelievable move, 50% gain. EVGO, which I've never actually traded, 33% short. And GoPro, which, God, I haven't traded that in a long time, but 54% surge. So some big...
These are not tells that the stock is going to do this.
No, these are not tells. These are just examples of recent meme stocks.
Okay.
In 2025. Let's go next slide. So what we did here is we looked at the fade strategy, okay? Premium selling analytics. So when you look at the implied volatility, how it fades from peak to normal in just a few days. That's what's interesting for us, okay? You can see the peak, and then you can see day 1, 2, 3, 4. I mean, it crashes pretty fast. How do you know what to expect when you follow the fading of meme stock volatility? So we decided to take a look. The win rate for selling the 30 delta credit spread, 73%. The win rate iron condors at the 20 delta, 68%. This is if you were able to sell these, into the powerful up move. Put credit spread at 61%, diagonal call spread at 77%. Those are just win rates. We have average credit, we have max loss, we have the Kelly criterion, and then we also have the Sharpe ratio. We're just throwing all of the, things out there.
Yep.
So we put down on the bottom of the page an expected value formula. This means a positive expectancy if you just be a little bit patient of 27%.
Okay.
I mean, it's a positive expectancy with a 27% loss rate. It's a net positive expectancy. I take it's not 27%. It's with a 27% loss rate. it's a net positive expectancy, which is good. That's all you can ask.
Great. That's all you can ask for. That's what you want. All's well that ends well, I guess.
I mean, I've never seen anybody put together this kind of analytics on meme stocks. There's a lot of research. By the way, they wrote at the top here that this was the IB Crush timeline, but it's a composite of 50 different meme stocks. So it's not just like looking at 2 or 3
stocks we mentioned.
Yeah. Let's go to the next slide. So let's also look at the following the meme stock. So this is the momentum trading. So we back tested the performance from 2021 to 2025, and we used 237 different meme events. Now, this is when you see a stock go up, you try to jump on it, okay?
Ride the wave.
Okay, well, look how great riding the wave did. Your win rate, 28%.
Not so bueno.
Expect
average hold time's only 2 days. Less.
What?
Average hold time's only 2 days.
Yeah, average
Really
hold time's a little less than 2 days. Expected value 23%, not bad. The sample of typical execution timeline, and we just put, T plus 0, T plus 2, 1 day, and 2 days. And again, the shorter the time frame, the best.
Yucky.
I mean, this is basing your trade on a volume spike and the social media mentions.
Yeah, but a lot of stocks get social media mentioned that don't do anything.
I understand, but we have to start somewhere.
Yeah.
Let's go to the next slide. Okay, so this is really good. These are actionable insights. So the do's: identify catalysts and sentiment for follow strategy, fade after signs of exhaustion, falling volume, always use risk management like stops or position sizing, mental stops, and diversify to avoid wipeouts. No hero crap. On the don't side, selling naked calls can be a little risky sometimes in some of these meme stocks. I can tell you from my GME days, it's very risky. Averaging down on losing positions.
That actually ended up working for you, though.
Yeah, I know, but it took more risk than I wanted to.
Mm-hmm.
Averaging down on losing positions, don't do that. Using margin for meme stock, just be careful how much leverage you use.
Mm-hmm.
And holding through earnings or other major catalysts like binary events, not really a meme stock thing. For capital allocation, define risk spreads, max 2% per trade. Medium risk, long stock or long calls, max 1% per trade. This is what our recommendations are. And high risk, naked options, we don't suggest that, like naked short options.
Wouldn't be our first go-to.
Yeah, the 2-20-50 rule for meme stocks, which is really kind of fun. 2% rules never risk more than 2% of your account on any single meme trade. The 20% rule is exit any position down 20% from entry, no exceptions. And the 50% rule, take off half when up 50%, let the rest ride with the trailing stop. Mental stop.
Mm-hmm.
But you can just take it off also.
I mean, those are all kind of...
That's good.
Yeah, but they're all...
2-20-50.
Right, but they're all kind of not common sense.
Yeah, they're common sense.
But like they're...
Common sense.
Yeah.
They are common sense. But again, this is more geared for...
The size is
actionable insights for meme stocks. Let's go to the last slide, John. Some of the takeaways. Meme stocks are sentiment-driven and risky. Meme stocks are not investments. They're short-term trading vehicles. I would 1,000% agree with that. Diversify your exposure and your size positions cautiously. Follow early with exits or fade after overextension. And use data-driven signals to avoid emotional trading. That's really good.
I agree. Let's take a quick 90-second break. We have an unchanged market. We'll be back in 90 seconds. We've got more Tasty Live at the opening bell now.
Unchanged.
Unchanged, Sadnaf. Unchanged. We are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With what's your assumption?
Please, Hammer, don't hurt Reddit.
Don't hurt Reddit. You want Reddit to go lower.
Please, Hammer, don't hurt Reddit.
Reddit down $11 and change now. Reddit trading near its lows.
Yeah, finally we have an uptick in Reddit. I'm Tom Sosnoff. He's
Tony. They have an uptick in Reddit P&L, a downtick in the stock.
Yeah, and to be fair, it's not a profitable trade.
Yeah,
it's
I
an
understand.
uptick.
I understand.
There's a big difference between a profit and an uptick.
We got AVGO down $8, Nvidia down almost $4, Palantir down $3.
Yeah, like I said, Nasdaq down 50 today. Russell up. That was
Meta down 6, Tesla now down 10.
Good night, Tesla.
Amazon down 2. Yeah. Got some of the high flyers taking a little bit of a breather here so far.
Yeah, they're coming for the pigs a little bit.
Coming for the pigs or the Russell, as you eloquently said.
I need Google down. Can you make Google go lower, please? Again, I'm Tom. He's Tony. This is Tasty Live. Thank you for spending your morning with us. And hopefully you're going to spend Friday morning with us in New York City.
Love to have you.
Love to have you at Webster Hall.
Mm-hmm.
We're gonna
see us.
We're gonna have a fun crowd. It's gonna be a fun event, and
New York always comes out strong for us.
Yeah, it's gonna be great. Doors open at 8 a.m. Show starts at 9 a.m. We are on wait list only right now, but just put your name down. You'll get in.
Mm-hmm.
We always open up stuff when there's some cancellations at the last minute, so you'll be able to get in.
Beautiful.
Anyway, that's it.
Anywho,
what's your assumption?
Let's do it.
Now it's 8:43 in the morning, and thank God we're not doing a live trading show today, because if we were, I would tell you that for the next 3 hours, S&Ps are going to be unchanged.
And they are unchanged.
Yeah, unchanged. Let's see what our viewers sent in. Assumptions. Ray. Hold it. From Burnish. What, Ray, where is this? I think it's I think it should be Alabama, not Alabama. What do you got here? Microsoft, you're bullish. I am not, Ray. I am so sorry. Microsoft pops to 530 this week. They can get TikTok. They already didn't, but they own 100 billion of OpenAI, which is becoming for profit and losing their nonprofit status. I don't hate any of your logic, except that I am currently short Microsoft. And what's Microsoft doing this morning?
Microsoft was down small.
Yeah, I think so. I just don't.
Down $1.77.
Down $1.77, right?
Mm-hmm.
Yeah, I'm not a huge bull in Microsoft. What's the IVR in there?
12.
Yeah.
Stock is off of its highs of over 500, but it is 507. Well, off of its maybe mean over the last year or so of 440 or so.
Yeah, I'm not a bull, Ray. A little nervous.
Ray.
Sorry, Ray. I mean, I appreciate the suggestion, but it's all yours, dude. Go for it. Let's go next slide.
Probably defined risk trade.
Yeah, I'm a little short Microsoft. That's why. Abhishek from San Mateo looking at Pepsi. He's bullish. Nov timeframe. Price dropped, and IVR is 92. Any news coming, or is this a great chance to sell premium? I don't trade Pepsi very much.
Me either. Pepsi IV rank is relatively high at 97, Sosnoff. I would say it's high. Earnings are October 9th.
I mean, Pepsi does have a really high V rank, and the stock's up. You made a nice call, Abhishek. The stock's up $1.70 today.
Mm-hmm. Stock's fallen from 150-ish to 141. This is the first uptick of $1.60 it's had.
Yeah, I think it's an okay stock to sell some premium in, actually. And I think you can even go to November, because this seems like one of the better long-term plays.
Mm-hmm.
Markets are about 15 cents wide on the options. So if I do let's see where we can do here. What's the expected move? $10.
$10 for what time frame? You're going out to November?
$10 in November.
Yep.
You can go 125, 160. It's a little bit, yeah. That's probably what you do for $2.
Okay.
High IVR.
Okay.
Let me see if we can get a fill here. I don't think so. Looks like it's going to be a little worse. Maybe a lot worse. All right, we're going to work it. I'm going to
working it, boss. I'm working it.
Pepsi's a tough one to fill, just so you know. I'm going to work. I was way off. This price is actually lower. Forget that $2 discussion. I don't think I'm going to get filled at 192.
Oh no.
Let's see what you got next. What's the next slide? I'm working at Abhishek. And they're hitting the premium as fast as I can put an order in. They're lowering
the premium in
Pepsi.
In Pepsi.
Yeah, they have the mid price down to 190. Oh,
you filled 190.
190. Not the fill I wanted, but whatever.
Not the price you wanted, the fill you wanted, of course.
It's the fill I wanted, not the price I wanted. Let's go to Oracle.
Let's go to Oracle.
Brian from Denver, Colorado is looking at Oracle, and he says Oracle still has great IV to work with. I'm neutral to slightly bullish. Iron Condor or Jade Lizard, maybe. I'm not going to do Jade Lizard in there, but I do have an Oracle position, small though.
Oracle down around $5.50, $6. IV rank of 68 is actually upticking.
We have currently the 270, 360 strangle. I would be happy to add to that, but I want to roll those calls down. So let's just see. I'm going to roll the calls down to 350. I'm going to roll my calls down to 350, and then I'm going to add more to that position.
Let's do it.
All right, so we're going to sell let's go Oracle, October. We're still in October here. What I say?
October.
270 puts, and the
you could certainly go to November here too, right? I mean, I know.
But I'm not. I'm going to stay.
30 days.
Yeah, I'm going to stay. And God, no getting fills in Oracle this morning. That's
Pepsi
weird.
pays a big percentage dividend, by the way.
What?
My peeps want to know that Pepsi pays a big dividend, but it doesn't come till December.
Yeah, I don't think that'll matter. Okay, filled in Oracle. I rolled my calls down and I sold more strangles. So I have the 270, 350 on. It's completely delta neutral. 270, 350. Thanks, Brian. Let's go next slide.
70, 350.
Natskis. Sunny Pasadena, California. I actually am a big fan of Pasadena.
Are you?
Yeah. I like
because of the Rose Bowl?
No, I just like downtown Pasadena. It's kind of a cute little town.
I had no idea you were like.
Have you ever been to Pasadena?
No.
It's nice. It's a cute little downtown.
I'm sure it is.
Tesla.
I've never heard you talk about the architecture of a town before.
It's not the architecture. It's just a cute little town. It's not architecture. There is no architecture. Have you ever been to LA? There's no architecture.
What's cute about it?
Some of that. But there is no architecture in LA.
Okay,
LA is the weirdest architectural city. Like Chicago has beautiful architecture. Other cities have some really cool architecture. LA, it's a mishmash of everything. It's like Houston. It's everything. They throw the kitchen sink at it. Those are the only two biggest cities in America that have the weirdest architecture, LA and Houston. Tesla, 30 days. Stock buyback fueled by the latest rally, completely ridiculous. Oh, bearish. But the problem here is stock's already down $6 today. I'm with you. And if the stock bounces back up today, do we whack them and how?
Well, the stock's down $6, but it was down about $16 just a moment ago, traded down to 409 and change. And Tesla's just a skosh off its highs of 425, $10, off of its highs that just made. I mean, it's not horrible.
I am very comfortable selling some more call spreads in Tesla. So let's see. We have some October short call spreads. We are short the what are we short? We are short the 455, 490.
Sure, you don't want to buy the dip here? Volatility's contracting. Market's catching a bid everywhere.
No, stop talking to me. Stuff. Where's the expected move? $50. Stock's 415. We will sell the 465s. That's $50 higher. And we'll buy the 475s.
Mechanical, easy. Go into the expected move.
Scoop of chocolate, scoop of vanilla. $1.80, right at mid price. That's what happens when you get liquid underlyings.
get filled at mid-price typically.
Let's go to the next slide.
Okay.
Sean from Hong Kong, neutral in Baidu. Baidu's overbought short term. Well, not this morning, dude. I know you put this in yesterday, but thank God we didn't do it.
We made this trade up $8, Baidu.
Yeah. So we're short right now the 125, 135. I do not like it. Let's see what we can do here. Because I'll sell some premium in there, Sean. I think it's
IB rank of 67.
IB rank of 67. Let's do some interesting stuff. Let's go to the expected move, which is $15 from where we're currently trading. So let's trade the 350s, and we'll go down to the 120s. That's about the closest we can get.
50s, 120.
350, 120, and let's sell it. 150, 120. I'm sorry, I said 3. Okay, good IB rank, and let's see where we can get a little fill here. I'm working it, dude. Sean, we're probably gonna be filled in a couple more pennies. I'm squeezing a little bit. I don't love
your squeezer.
I'm trying to get filled. Nothing done yet. Man,
I'm trying.
Today's a little rough.
Volatility's contracting down 30 cents now.
Russell, the Nasdaq's almost back to unchanged.
Yep, down 6.
It was so nice.
Stop talking to me.
It was so nice before.
Stop talking to me. You told me.
Stop talking. Yeah. Ruining everything.
I mentioned this to you 10 points ago. He said, stop talking to me.
All right, what's next? Sean, I'm working it. We'll be filled. I'm just waiting for them. I'm waiting for them to come to me. So far, they're not. Let's go next slide.
So far, you're on the do not mind list.
Austin from Boise. Tom, sell as many iron condors possible, market open.
Boise from Austin.
Take 10, 20 or 10 before the Fed announcement. Quiet morning guaranteed. Guaranteed, the dude said.
Well, it was guaranteed if you put it on earlier this morning for sure. It's almost 9 o'clock though. That's your time frame.
Let's see. 0 day. Austin, let's see. What's the expected move right now? It's 40. So it's not bad.
No, it's significantly higher.
We're currently at 66.12. So we're going to go up to 55 on the call side, and we'll go down to 55 on the put side. We'll go $50 away and fill it at mid price, 1060. I did not do an iron condor.
You just did a straight strangle.
Yeah, God, why can't I get filled in Baidu? Am I doing something wrong here? Let's go next slide.
Usually you are.
Sorry, I'm trying to fill this order.
I mean, the natural's $1.50, $3.50.
Zach.
Baidu's not the most liquid.
No, it's not the rest. Zach from Allendale, New Jersey. CVNA, less cuts in the future than expected. Halloween. What does he want to do here? Sell the 375s, buy the 370
put, sell the 360 put. Looks like a
reverse trade lizard.
No, these are call put. That is correct. Yep, reverse trade lizard. Selling the call, that was where all the risk is.
If you want to get bearish, Zach, today's the day to do it in here. So let's see. What do you want to do? He wants to do Halloween. So that means November.
Well, Halloween's the end of October, so I guess November. October 29th is earnings. His time frame's 15, 30 days, so it's October 17th is where he's going to.
Fine. So what does he want to do here? 375.
He wants to sell the 375 calls, which...
Well, you're not going to sell those, dude, because you got to go to the expected move, $40.
Well, and October only has $10 wide strikes too, so... Yeah,
so you're at 370. You're going to go up to 420. That's just outside the expected move. And then on the put spread, you're going to sell $40 lower the
Well, it's not a classic jade lizard.
It's a reverse jade lizard. Selling at the expected move. selling the 420 calls and the 330, 320 put spread. Like, man,
Okay, so you would collect $10 as a classic Jade Lizard.
I don't care about classics.
$7.
I don't care about classics. I care
You're
about
not a classic kind of guy.
Baidu finally filled, and
266,
and Carvana filled. So I did
703.
I did the reverse Jade Lizard, Zach. So we'll see what happens. Let me just see something. Okay. All right, let's go next slide.
Next slide we go.
Moo, neutral. I want to short it, but it may be too early. Being cautious, selling premium without much bias. Kevin from Charlottesville, Virginia. Let's check this out. MU.
Check it out.
Moo, moo, moo. Moo, 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 moo. October. We currently have on not a good position. We currently have on a small strangle in there, and it is not working. Let's go to something better. Stocks trading at 160. We're going to sell the 180s and the
Mercedes
and the 140s. And we'll do it small because I do not like this stock and I have not done well in here. And it's going to trade around 815-ish. I don't know.
You're going to try.
I'm going to try. I'm having a little trouble this morning with some fills. We're going to come back to it. Hopefully we'll be filled in a couple seconds.
Hopefully.
813, 2 cents off.
Filled. Good job, buddy.
Yeah. Let's go to the next slide. John. Jack from Philly, PayPal. We have not traded PayPal in a while.
PYPL.
I have no idea where the stock's trading.
You're going to find out momentarily.
It hasn't gone anywhere. 67. It's been here forever. PayPal. It really has not moved. Jack from Philly is a little bullish in PayPal. All right, Jack, I got no position on there. Ivy rank is 12. I mean, there's not much to do.
No, not much.
Expected move is 371. I mean, do you sell the 65 puts naked? I mean, that's really all you can do, Jack. They're going to trade around, I don't know, 113, 112. 112. That's about it. There's not much to do in there. The downside, okay, gets back to 65.
Mm-hmm.
No, you said bullish.
He's bullish.
Yeah, but it says PayPal getting back to, meaning that it's down near 65.
That's correct. That's correct.
Okay, let's go to the next slide. Taking a look at my SPX position.
Your SPX position.
Yeah, because we sold off a little bit.
Yeah. It was up 10 cents, down 10 cents.
Yeah, I know. I can roll the calls down. See, that's what you do.
You could.
Have a little fun. Starbucks, Mike from Salem, Oregon. I kind of like Starbucks here. I agree with you. I have not bought any yet. SBUX. It's definitely on its butt, even though it's rallied a little bit.
A little bit too tree.
The IVR is just okay. Yeah, it's too cheap for. You can sell. I could sell naked puts in here. They're not very. The naked puts are cheap, but the 80 puts they're like $1.20. I have a small position on in Starbucks already. We'll add to it. Tiny. I don't know where to get filled. These puts are.
Puts or schmutz.
Puts or schmutz. It's the last one, huh? Oh, filled. 117. All right, Mike. Just added a few puts to our position because we're already a little bit long Starbucks. Fine.
Okay. Fine.
S&P's still wrapped around unchanged.
They are 6666.
Russell up 22, looking really strong. NASDAQ down 60, looking really weak.
I don't know about really.
Can't do any better than help you guys out that way.
What's that?
Can't do any better than helping you out that way.
You're a giver.
Just a giver. Let's see, what else do we got here? I'm going to make one more.
Did your Starbucks?
Huh?
You filled your Starbucks.
Yeah. And I'm going to make one more adjustment in that SPX. We like to have some fun in there. I love adjusting trades because it drives everybody crazy, myself included. All right, there you go. See, the only problem with 0DT today is I don't know if premium's going to come in at all.
Not going to come in until right at the number.
Microsoft, we did nothing because I was not going to get long it. Pepsi, we sold a strangle. Oracle, we sold a strangle. Tesla, we sold a call spread to get a little short. Baidu, we sold a front month strangle. SPX, we sold the 0 day. Carvana, we did a reverse Jade Lizard, John. It's reverse Jade Lizard. MU, we sold a strangle. In PayPal, we sold a naked put. And in Starbucks, we sold a naked put. So a couple of short positions, a couple of long positions. Everybody's happy.
Everybody's happy. Mixed bag of tricks.
Totally.
Good job.
9 out of 10.
Good job out of you, my friend. We're going to take a quick 90-second break and come back. What do we got coming up next, Oz?
Got our boy.
We got
Jacob
Proman in the house.
We're going to look into the mind, yes, of Jacob Proman.
Back in 90 seconds with Tasty Live. Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, with the skinny on options math. My man Jacob in the house. Jacob, how are you, my friend?
Good morning. I'm well.
Glad to hear that.
I'm well. How are you two doing this fine day?
We are spectacular.
Mm-hmm.
We are living the dream, Jacob. Living the absolute dream.
It's not a nightmare for you then?
No, it's a dream. Today's the dream. We're traveling tomorrow, so we're living the dream today. Beautiful day in Chicago.
Right.
Everything, market's cooperating. It's all good.
So far, so good. We'll see, though.
Good.
Things can change. They usually do quickly.
All right, what you got for us today?
So today I wanted to talk about the risk neutral measure, which is sort of a complicated concept that comes up a lot in financial math, but is very hard to, I think, get non-probabilists on board with.
I don't know. I don't know if we're ready for a complicated. I don't know. I don't know where our heads are at today, but
So the key thing here is that it sort of requires ignoring the realities of risk premium, because we need to do mathematical models. And so we're going to assume that you can always perfectly hedge away your risk, right? You have a complete frictionless market. And we're going to sort of see what the results of that are and how you can then derive upcoming probabilities from current prices. It's this like very powerful mathematical trick, but it's really so that we can use the tools of more widespread tools in mathematics in these sort of less, in these more psychological, the market's just not really a perfect mathematical setting. Because in fact, it has a lot of people in it who behave irrationally. And so we need to come up with some assumptions that we're going to make that can get us around this idea and let us do mathematics to get an idea about what's going on. And then at the end, at like the last possible moment, we can try to adjust our calculations for how people really are, as opposed to how math says they should be.
Okie dokie.
Okay.
So let's get into it, and we'll see where we're going. So the key thing in almost all of this are what are called martingales, which we've talked about a number of times. It's a probabilistic property of a random variable that gives a technical term for what it means for that random variable to represent a fair game. Right? So if we're going to flip a coin, and if the coin is heads, I win $1. If the coin is tails, you win $1. That's a fair game. That's a martingale. And even if we play it repeatedly, even if you come up with a strategy like, you're going to stop after you win 3 times in a row, it doesn't matter. We've got very powerful theorems that say the combinations of martingales are martingales. Any strategy you come up with how to play a martingale is a martingale. And this gives it a lot of really robust mathematical properties that let us express this idea of fairness, and also fit with the idea that you would have an efficient free liquid market, right, where everything could be exchanged at any time, so there really shouldn't be a distinct advantage to one side or the other. Right in the middle here is sort of the formal mathematical definition, which is that the expected value of a martingale at any future time, given any amount of information up to some earlier time, will just be the exact value that it only depends on the value at the end of that earlier time, and is exactly the value that it had then. Those are the properties that make a martingale, and mathematically this makes it very nice. It makes it very easy to work with. We wind up with sort of this whole theory based on it. But in fact, reality isn't full of martingales, unfortunately. Brownian motions with no drift are martingales, but if you have any drift in the system, then it's not a martingale because it goes up. In fact, even just cash isn't really a martingale. Let's go forward one, and we'll talk about that. The need for the risk neutral measure is because even cash isn't a martingale, even though it feels like it should be, right? If you just have cash sitting, that seems like it should be fair. So it should be a martingale, but it isn't in reality, because we have this risk-free rate, this future discount factor, this idea that money today is better than money tomorrow. All of these are the same concept. And so we need to sort of invert that idea so that we can do the math of martingales, even though the realities are not martingales. So let's go forward one to the risk-free rate, and we'll see. John? Yeah. Money today is better than money tomorrow, which is often summed up by the fact of the risk-free rate, right? Which would mean that you would get a return on a zero risk asset, right? So you would have something where its present value of $1 tomorrow will be worth a risk-free rate more amount than that, right? Its expected value in the future is exactly what its value will be. And so the risk neutral measure is a way to account for this, rather than saying, oh, well, we give up, we can't do all of these powerful mathematical techniques that rely on everything being martingales. We say, no, the market really should be fair, and it's just this like time distortion going on that's throwing us off. And the risk neutral measure is going to be a way to try to incorporate that time distortion into our viewpoint so that we can continue to use the math of martingales. Let's go forward one. This is the most toy example. It should be pretty straightforward. And the idea here is that if we have, the simplest of the binomial models, right? We've got a stock price at S0, and at one point in the future, it's going to either go up with probability P or go down with probability 1 minus P. Right, and these factors could be that down is exactly 1 over up, but it doesn't matter. It's up by some factor, down by some other factor. Then we get that the expected value. Well, there's two ways I can compute the expected value. One is I can take the probability of each outcome times its value at that outcome. So P times its value if it goes up, plus 1 minus P times its value if it goes down. Or I can say, well, I could hedge this with exactly cash. What would the value of cash be if I just held it that long? Well, it would be the risk-free rate. It would have gone up by the risk-free rate. So 1 plus the risk-free rate times its current cash value. Solving this equation, I can find P. And finding P, I get that it's this value that depends on, the higher the risk-free rate, the more likely you to go up. The bigger the difference between an up move and a down move, the less likely you are to go up. That increases the denominator. And also you get this important feature here, which is in order for this to be a probability, you see that U has to be bigger than 1 plus R and D has to be less than 1 plus R, right? Which is to say that the risk-free rate has to sit between, right, this S0, which is this risky asset, has to have its ups and its downs spread around the risk-free rate. Otherwise, you would get, a negative number there or something, which is not a probability measure. And this is exactly saying that there isn't an arbitrage to be had by S0, which is exactly a theorem for risk neutral measures, which is that the risk neutral measure exists if there is no arbitrage, and is unique if the market is complete. Complete meaning that all options are at all expirations and all strikes are priced.
Following him, Saz?
Yeah, I follow, but I still don't understand why. I still don't understand why cash isn't fair.
Cash is fair. This is the whole point. The risk neutral measure isn't saying that cash isn't fair. It's saying that cash measured just in dollars doesn't look fair, right? Because you have $100 today, and a year from now you have $105. That looks like it wasn't fair. And so the risk neutral measure is a way to reshift our view of the world so that cash is fair.
Okay.
It's so that we look at $105 a year from now, the
Yeah.
same as $100 today.
Yeah, I understand that.
Right, to make cash fair. That's the whole point of the risk neutral measure is to make cash fair. And in fact, in the Black-Scholes model, where the Black-Scholes differential equation drives all your prices, so that they've got that upward drift of R plus the volatility term times the Brownian motion, all in a geometric sense, where everything has a factor of that. Then when you do the risk neutral measure, exactly what it comes out to is all future values get discounted by e to the minus RT. It's very straightforward that way. Other more complicated models can have more complicated risk neutral measures, but in the Black-Scholes model, which is the one that we sort of found our understanding on, it is exactly what you're saying. It is you discount everything by the future discount of cash. It's so that cash looks fair. Once cash looks fair, everything looks fair. The model works lovely.
Okay.
It does run into this one thing, which we're going to talk about in the next slide, where I don't have any words. I just have a picture and a discussion point, which is there's a contradiction in how we talk about these things, where we say that everything should be fair, that it should be an arbitrage-free market, that it should be the risk neutral measure should obtain, but we also believe that you receive a risk premium. And this causes a confusion to me, to traders at home, to viewers who write us emails, right? How can, if everything is a martingale and the whole market is fair and there are no arbitrages, how can you get given an edge for taking on risk?
Well, it's not necessarily an edge. Taking risk doesn't have to be edge. The only way you can do it would be, and I don't think this is what you're looking for, would be scale. But I don't think that taking risk has to have edge.
So that's the thing, right? In the models, taking risk does not have edge, right? Everything's a martingale, everything is fair, right? Your selling options does not give you an inherent advantage. But in the reality of the market, where there are market participants who are primarily risk averse, right? They are not risk neutral, right? The risk neutral measure is what happens if everyone is neutral regarding risk. They don't care. As long as the bets are fair, they'll take them. They don't care if it's more dispersed or less dispersed. In reality, most people, and particularly investors, are willing to take a small loss to their expected value to have increased consistency, right? That they're risk averse in this sense, which is why there's like a long-term advantage to being a lottery salesman, a lottery ticket salesman, or an insurance salesman for health insurance, not disaster insurance, because those are so highly correlated. But if I sell 10 raffle tickets and the prize is going to be $10 and each one is $1, that's perfectly fair. But I know but I'm taking on risk and everyone else is sort of having a negative risk, right? They have a chance of making a bunch of money and a large probability of losing a small amount.
Right.
So in fact, I can possibly sell these raffle tickets for like $1.10 or $1.05. Right. This is the idea of the risk premium that you get paid on, is that, and by selling 10 such raffle tickets, I've completely hedged away my own risk and taken in my risk premiums. The difficulty is that the risk neutral measure forbids this, and the mathematics don't account for this. And I think this is one of the most important things for people who start getting into the weeds of the mathematics, right? If you go and you read Shreve's financial modeling book, you can get lost in thinking that there should be no arbitrages, when in fact, because many people have non-risk neutral utility functions, there are in fact risk arbitrages. They just can't be accounted for properly in the models because, like we've said many times, once a model has arbitrage in it, it's hard for it to do anything else because it will always just prescribe you should do the arbitrage, which really reduces the value of it as a model.
Yeah, I understand that.
Perfect. Then I think we're good. We can go to takeaways or have a more full conversation. Yeah, this is just my reminder to discuss the fact that people take in risk premiums, and this is the death of models. But yeah, let's go to takeaways. Martingales are the mathematicians' formal way to define fair games, and they correspond exactly to a no arbitrage assumption. But due to the risk-free rate, however, in like a pure dollar sense, not even holding cash is a martingale. And so the risk neutral measure is this just probabilistic tool where you take current prices, you invert them to come up with probabilities, and in these new probabilities, everything is a martingale again. if you had theoretically perfect hedging where you could liquidly trade anything you wanted at any time, then the risk neutral measure would be unique and inevitable. In a sense, the fact that there's spaces between strikes and spaces between expirations means that there's sort of a range of possible risk neutral measures. And I think that to one extent, you can view market makers' bid-ask spreads as them just taking those ranges of risk neutral measures, right? They say, well, we don't know exactly the risk neutral measure because we don't know all option prices, right? There's no 59.75 calls being traded, so I don't know those prices. And so this means that there's some uncertainty in what the true risk neutral measure is. And then they just go, well, there's an upper bound and a lower bound, and they use those as their bid and ask settings. In the Black-Scholes model, the risk neutral measure is very simple. It just is discounting everything by a constant future discount. In reality, we believe that market participants demand a risk premium. So different assets would need to be discounted differently, but mathematically means it introduces arbitrage to the models and sort of throws out all of the math that you're doing. It's one of those cases where we can recognize that the math runs into its limitation, but rather than trying to do more math at it, my counseling is you should just recognize that you've run into the end of where math can help you when you run into places where you have arbitrage or non-risk neutral trader preferences.
Very nice.
Very good.
Very nice. That's a most.
Tom says it's very nice. It's very nice.
It's the heaviest explanation of risk neutral I've ever heard, but still, it's good.
I don't want anyone to, not be confused.
No, thank you, sir.
Very good, my friend. We're going to take a quick 90-second break. We're going to come back side off. We've got Johnny trades coming up next, followed by your phone calls, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. We'll open up those lines momentarily. Give us a buzz. We'll be back in 90 seconds. It's Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, well, how much did I pay for it originally? As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
So annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you had to swap jobs with somebody else in this office, who would you pick and why?
Oh, if I had to swap jobs, I kind of like the idea. I might go for Tori's job because I really want to be the one responsible for ordering lunch. I would love that responsibility.
Maybe somebody on the other side, on the brokerage side. I'd probably swap jobs. I'd probably swap jobs with Clink. Clink has a lot of cool looking tools that he looks at day to day, a lot of that risk management stuff. It's kind of interesting to me. I'd probably be honest.
Oh, I got to go, Scott. I mean, he's only here a couple months. Goes back to Arizona, plays some golf, Tokyo. I mean, that's a great gig. Why? How do I get that one?
Oh, I think Ryan Sullivan's got a great job, man behind the camera. He does a lot of cool stuff all around the office, from videography to written content. So he's the man.
Ryan, would you want Glenn's job?
Absolutely.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I don't know how to do magic,
but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the US dollar collapses. Shall we begin? TheFacebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest. Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform: printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so. Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people, because the people at the top were making their money at the expense of everybody else. It's connected. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. We are back. I'm Tom Sosnoff here with Dylan Radigan, and it's going to be a fun one, Mr. Radigan. The Fed just came out. They lowered it by a quarter. Nothing, no surprises. You can hear the suckage right now coming out of the options in our world. So you can just
the vol crush. Is that what they call it? Is that what the kids call vol crush?
It's a vol crush. Yes.
This is like a layup for old school tasty 101 iron condor before the news, clean it up after the news.
It wasn't that easy. They pumped about $3 in premium, into the SPX strangles today, and then they just took them back out. So, I don't know if they took it all out, but they took some of it out.
So I'm Dylan Radigan here with Tom Sosnoff.
All right, Dylan. Sorry, so sorry about that. I'm ready to go.
No, well, so I want to pick up right where we are because you said something about this. I don't know, it was 2 or 3 weeks ago. We were in one of these discussions.
Yeah.
And in your conjecture, it wasn't with great conviction, so I'm not going to assign any grand, sort of a credit, a responsibility to you. But your conjecture was that the market's going to see the rate cuts, and then they're going to realize that the rates are getting cut for the wrong reasons. And meaning that the rates are getting cut because of Fed concerns about slowing growth and labor market softness. And we're basically speculating about the next interval for market weakness, and especially when you consider, and this goes to the broader discussion today, but when you consider the market levels, the way we're behaving, records, near records, Russell, this, on and on and on. Do you still think that this represents a potential inflection for the momentum, and then more largely, when you not forget the Fed rate cuts because of concerns about slowing growth, and they say they've got a couple more cuts in them if you believe today's note between now and the end of the year, but you have a rate cuts for concerns about growth and the labor market, but at the same time the market is at or near all-time highs. How do you reconcile market levels, not just in the context of rate cuts? Why is the market so strong if the economy is slowing? And then I have a string of other rent payments are delinquent. I can start rattling off things. We all know the political reality and this and this and this. But let's start with the Fed and sort of work our way through the market versus the world, basically.
So this question is the flavor of the month. I believe the other day on Hear Me Out, I asked you, I said, something to the effect of, how would you rate the Trump economy? Because on the one hand, the stock market's at record highs, and on the other hand, there are a number of indicators that are falling apart, and the market is, obviously doing its old thing, riding the wall of worry type thing. But, how do you reconcile all that? And then after asking that question, I noticed that there was an article in the Wall Street Journal. There was an article in the Washington Post. There was a bunch of articles that had the same headline. How's the market at all-time highs when all the news is so bad? And, so the real question here, Dylan, is does something have to give? Like, does something have to give in order for all this stuff to make sense and to normalize? Or, it's been a long time since everything made sense. And since we don't care about fundamentals, never have, I don't care that nothing really makes sense. But I will argue that there is a lot of stuff underneath this market. And what scares me the most is probably the weakness in jobs. And how long can a crappy ass dollar support the stock market where it is right now? In my opinion, the reason the stock market is where it is because
it's a dollar adjusted number, basically.
It's a dollar adjusted number, and you have a number of companies right now that are, in past sell-offs. Like if you go back to 2008, 2009, if you go back to 2001, 2002, or if you go back to 87, we didn't have like this core group of stocks that were that much bigger or that much more untouchable. Remember they used to say, however General Motors goes, so goes the market, and stuff like, whatever IBM does, that's your market. That's not the case anymore. And the new, the mega monopolies, as you would call them, mega tech monopolies, are so dominant with respect to the amount of capital that's tied up in those. They almost have this too big to fail arrogance in them. But like all the things you just mentioned, credit scores and job losses and inflation,
and delayed rent payments,
everything.
Or late rent payments. But can I ask a bigger question? I mean, we'll come back to all this and we'll do this, but when obviously the underlying economy is getting weaker, the largest central bank in the world, which is the Federal Reserve, has codified that by initiating a rate cut cycle. That's not simply this one rate cut, but it's also additional rate cuts. They're saying another half a point over a couple of meetings between now and the end of the year. We'll see if they do it, but that's what they said. They're doing that for a reason. That's a slowing growth. We can run the other statistics, blah, 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 blah. What does the stock market reflect? In other words, this is going back to sort of like, as IBM goes, so goes the market. There's also a conventional wisdom that is, well, the stock market is a measure, it's an indication of the overall health of the US economy. And that the U.S. economy, that a healthy stock market is a direct response to a healthy labor market and a healthy demand cycle and a healthy investment cycle and a healthy productivity cycle. And if the stock market's doing well, it means that new factories are being built and new products are being sold and all these things. And at the same time, we have all this evidence that jobs are not being created. We have all this evidence that bills are not getting paid. We have a new technology that is an existential threat to at least some sliver or larger sliver. I know we can debate this, but there's a job issue, I believe, at least at entry level things, and we'll come back to that. Anyway, what does the stock market reflect if not the economy?
Well, first of all, I would argue that the stock market is forward looking, not reflecting the current economy, but it's reflecting.
No, of course. I know that's generally accepted. It's a discounting mechanism of the future.
I wanted to be clear about that, but I also want to point out something that's really interesting. If you remember the end of 2007 and 2008, we were having this exact same discussion about covered call closed-end mutual funds and credit default swaps. Who is writing these credit default swaps? I sat through meeting after meeting when we were when
you're saying this is 06, 07, 05, pre in the sort of in the heyday of credit.
This is way closer to 08. And okay, for first 6 months of 08, we were pitched nonstop. Because remember, so let me just give you a little context. So when you run a brokerage firm, you have a lot of customer capital. Like
you have a balance sheet.
There's cash, because customers that come to Tasty, customers that used to come to Thinkorswim, they bring in cash and they trade with the money. And when they trade with the money, we're not a firm like Schwab where everybody puts the money into some 20.
So there's a cash account that exists inside of it.
The money stays in cash and it gets used to trade with. So there's a lot of free cash. And in 2008, we were solicited and tortured and shown at least 25 different ways to improve the return on our customer cash balance, like through credit default swaps, through
instead of 4%, you can get 6%. Instead of 6%, you can get 7%. Do this, do this.
Instead of 3%, you can get 6%. Instead of 5%, you get 8.5%. It makes a huge difference to your bottom line. Tom, you're the only firm out there not doing this. E-Trade's doing this. Merrill Lynch is
interactive.
No, but it was more like, Schwab's doing this. Every firm that they're laddering out, they're doing credit default swaps. You're the only firm that's not doing this on your customer cash. And Scott and I were like, you know what? We've always run our business on the foundation of, if it looks too good to be true, then it probably is. And so we didn't touch those. We kept the customer funds in the lowest, just the safest overnight repos and just treasuries, and that's it. And a couple of months later, remember, E-Trade out of business, basically. I mean, stock went down to $1. I mean, Merrill Lynch, stock went down to $3. You know, Bank of America, stock went down to $5. I mean, it was a complete meltdown in the financial space because everybody scrambled for these ridiculous returns because nobody thought there was that much risk because everybody was doing it. So fast forward to 2025. I mean, the red flags were all over the place, but, you know, when things are going good, you know, and the stock markets are record highs.
Easy money, baby, easy money.
Yeah, well, remember the market was at record highs in 2008. Volatility was at record lows in the summer of 2008. So there was no indication that, oh man, you know, the shit's going to hit the fan type thing. We just didn't like the story behind. It was too easy. Hey, you could get 12%, Tom. Why are you messing around for 3%? And I'm like, how much risk is there? And there's like, yeah, there's no risk. Don't worry about it. We're like, no. It doesn't work like that. Risk-free rates are what they are because if you're getting 3 times risk-free rates, then you're taking risk. That's how the fucking world works. Okay, don't try to tell me something different. And right now, it's not the same situation at all with respect to credit default swaps or any of that kind of stuff. But what is interesting is that the stock market in 2008 was not able to have the foresight or the predictability to know what was going to happen. It was wrong. And so occasionally there's a bunch of red flags, and the red flags, you know, they prove to be, they're pretty damn good. And I'm nervous right now because there are a ton of red flags. And you just mentioned much of that list. I added jobs creation to that list, which is the worst it's been in like 5 years.
Well, not to mention, I'm just going to make things worse with the job thing. The only place jobs are being created is in healthcare and in the government. Like if you look at, and healthcare and the government are the 2 least risk-seeking, 2 least productive. I mean, one is a racket, basically a monopoly being healthcare, and the other is a racket being the federal government.
And I also do not believe that, I mean, I do believe that most of the reason for all this kind of these bad economic numbers is all, you know, Trump's economic policy. But I also worry that he's so stubborn that he's not going to recognize until it's way too late, you know, that his trade policy is a disaster. And what comes with that trade policy disaster is, you know, is all these correlated effects on all these other industries and all these other markets and all these other economic indicators, which are just coming to the surface now, and it's going to boil over. And today, it's interesting because we kept saying all morning, they're going to cut a quarter of a point. The first move is going to be up, and then they're going to kill it. And that's exactly what's going on right now. The first move was up. Now they're hitting them a little bit. And because none of these rate cuts, this is not good. Like you're trying to push ahead inflation here. You got to ramp things up, you know, just to settle down all the risk. And I don't think it's that easy to do.
I mean, there's some stuff to reconcile here.
Sure.
Are you suggesting that there's as much risk now at these record levels as there was in 2008? I mean, obviously nobody knows that.
At all. And the reason I'm not suggesting that is because in 2008, the market was led by a bunch of stocks that aren't nearly as strong as the companies that are leading the market today. If you go back, you can go back as far as 1987, and the stocks that were leading the market in 1987 before we crashed were not that strong. I mean, just United Airlines basically crashed the market in 1987. When you go fast forward to 2000, the stocks that imploded in 2000, which is essentially the NASDAQ composite, went from like whatever 5,000 down to 1,000, lost 80%. And when that happened, those companies were fragile. Today's AI and chip companies and major tech companies, they are far less fragile, but there's a lot of risk out there. They have risk that if the dollar starts to get strong, their numbers are going to fall apart. And they have a lot of risk that these trade policies are going to finally catch up to them, and that the rest of the world would like nothing more than to see, you know, a lot of these big tech companies lose 25% of their value.
This is my concern.
Okay.
What's good for the mega techs is bad for everyone else.
I agree with you.
And so normally I would just be, if the banks are running, or if the home builders are running, or if the, you know, the, I don't know, the oil drillers are running or something like that, that's an indication of like the oil drills are running because there's a lot of demand for energy because there's a lot of moving product goods and services. And so good railroads and good oil means good economy, or, good banks means that people are paying their bills. The default rate is down and the credit cycle is strong and blah, 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 blah. But in this case, I feel like that we're watching now I want to say an extraction. What is good for the AI companies comes at the expense of everybody else. And so they're coming into a tale of two cities, to go full Charles Dickens on you here, where actually the strength in Meta or the strength in Microsoft or NVIDIA, or run down the list, the Oracle super bump recently, or the Tesla bump recently, are actually, or even the Google bump recently, that is evidence of actually greater risk to the non-tech economy. I almost wonder if there's a world where you're kind of short the Russell and long the Mag 7.
I think it's actually the other way around. I think it's where you're long the Russell, which benefits from the lower interest rates the most of any index, and short the NASDAQ and the Mag 7, because what the risk in the NASDAQ, in the big top 20 stocks, forget about the Mag 7, but just the top 20 NASDAQ stocks, the real risk is that there's a crack. And to this point, they've been—
there's a crack?
Yeah, there's a crack. Like to this point, they've been able to survive, Google, a couple months ago, Google being cheap relative to everything else. They were able to survive Apple being cheap relative to everything else. But it's a very difficult, that's a dangerous path. And eventually, if there's a few stocks that crack, they will drag everything else down with them, because these mega techs, they haven't had a correction in forever. And
not since COVID.
Everything corrects.
I guess, yeah, okay.
Everything correct. Tiger Woods corrected. Michael Jordan corrected. It doesn't matter how freaking good you are. Okay, you could be the best in the world. You could be the freaking
New York Yankees, the Chicago Bulls,
Tom Brady. Everybody has a correction period. Okay, it's how things work. And so I just bring this up because, these mega tech stocks, they are incredibly arrogant, because they should be. They're worth $4 trillion. It's easy to be arrogant. You can't. If I had a company that was
being an entry level, being an intern, you're worth $3 million just on your 1/1,000,000% of the options.
You cannot hurt a company that's worth $3 billion by
trillion.
It's really hard to hurt them. And so I think that there's something much different at stake here than we've seen. The last time in 2000, there were 5 companies that, Oracle, Cisco, Intel, there was a handful, I think there was 5 companies total, Lucent, and there were 5 companies that kind of dominated, but they were all a couple hundred billion. They weren't much bigger. Microsoft, they weren't bigger than a couple hundred billion. Now we're talking a couple trillion. We're 10xing them. We're 10xing them 25 years later. It's remarkable, and not that much has changed. Yes, the market's significantly higher and all this other stuff, but the same risks apply. It's still a game. It's still an exchange-based game, and a lot of the same risks apply. And you just can't be. We are.
But are you suggesting is the market detached from the economic reality? Is the market's discounting of the economic future detached from the data's indication thereof?
So let me give you a quick little story. So last night I went out to dinner with somebody, and who was friends with somebody that was at an event I gave a speech at last week, and there was a bunch of speakers. I was like one of 6, and my buddy says to me last night, he goes, "My friend saw you talk, and he said 5 people thought the market was getting ready to explode, and 1 person was bearish. Who do you think was bearish?" And he goes, "Well, obviously you." But he's like, everybody on the street is looking for like numbers that are insane. Like the amount of bulls out there, like there's not, it's crazy talk. Anyway, I bring that up because there are not a lot of shorts out there. There are not a lot of bears. And rightfully so. We haven't.
But is the market disconnected? You say rightfully so, but I won't go back to the Fed's cutting reasons. The Fed is cutting rates because they believe growth is slowing and the labor market is soft. They're going to cut rates 2 more times. Is it normal for the Fed to cut rates when the market's at all-time highs or basically all-time highs? The tariffs is a real thing. That's a real cost. The cost of everything. That's a real pressure. We don't know what's going to happen. I know the Supreme Court's up on that next month, but we don't know what's going to happen with that. Different measures of economic data. Late rent payments are up 12% year over year. That's not nothing. Political violence, which we won't get into that here, but it just, again, that type of social chaos is more present than ever. And the market is just dazzlingly strong.
Yeah, and that's why I said, so far nobody except the bulls have been paid, so there's no reason to say or think anything different. I just think sometimes, like I mentioned earlier, sometimes when things look too good to be true, you have to kind of just take a step back and look and think about what you're seeing, what you're saying. What the market's telling you. It's unrealistic to expect 30% returns every year. It's unrealistic to expect stocks to double every single year, every 6 months. And, just put that in the back of your head. That's all. Nothing else.
Where does that leave you, especially when you go back to your 2008 story with the swaps and all that jazz? How do you reconcile that disconnection, or maybe this disconnection, if that's what this is, with your really fundamental adherence to efficient market theory, when the market was catastrophically wrong in 2008? And maybe the market is very wrong right now. I won't say catastrophic, but it could be wrong or very wrong.
I think outliers keep us honest. I think outliers keep us honest. When we say we adhere strongly to efficient market theory, we also recognize that it can't be right 100% of the time. So what we're saying is that it's the majority. It's 70, 80% of the time, maybe even more than that, 85%. But there are certain periods of time when things just don't do what you think they do. And I think you brought up a good point. I can't remember the last time the market was at record highs when we cut interest rates.
It seems crazy to me. I don't understand how you can have rate cuts with a market at record highs.
Well, because you have an underlying, because the Fed is doing what the Fed should be doing, which is matching the current price of the bond markets, the various debt markets, and B, not caring about what the stock market's doing. They should be caring about what the economy's doing. And so I think if you look at it that way, you can make a pretty strong argument that we talked about, just the number of things out there, the number of flags, the number of indicators, the number of scary things. And, I think that's a reasonable leg for the Fed to stand on. Also the Fed can't be that much different than the current market. And the current market already built in these rate cuts. So the Fed has to come into line. Otherwise, there's a...
Well, do you think there's political pressure on that? Do you think that do you think the Trumpian pressure was a factor here?
There's obviously political pressure on the Fed, but the other side to that is they know they're all gone. Like they're not getting reappointed. Okay. So if you knew you were gone, there's not that much pressure on you. You're more in like a, FU mode than you are in a pressure mode. Like, you're just not in a pressure mode because
they know they're all toast anyway.
Right. Exactly. But I hate the fact that the Fed is being politicized. And I hate that fact, because what's going to end up happening is, everybody will get fired. They'll put in, a bunch of lackeys. They'll do whatever he says. And then the next president will come in and he'll fire all those people, and they'll go back to kind of like, normal picks, real economists.
Right. But it's sort of like, it's the same thing. It's like politicizing the Supreme Court. The final frontier is the Board of Governors at the Fed.
Of course. It's a little bit of, it's a dangerous combination of things. When you politicize anything in any kind of, one of the reasons that America's always been the strongest, have the strongest economy and been such a, and been such a pool of liquidity is because it's been very difficult to politicize too much. Most of the stuff gets kind of worked out in some kind of bipartisan agreement, but it's very hard to politicize everything. Trump's changed the game. So now, the game's going to be changed forever.
Because you think that basically both the Supreme Court and the Board of Governors will become a political arena from here on.
Well, the Supreme Court already is, and
do you think it will remain so? It's not like we'll never go back to some world of the scales of justice and the sort of independence of thought and logic of esteemed gentleman or gentlewoman of the court.
Well, if you talk to judges and you talk to very smart attorneys, that's their biggest concern.
Is that the judiciary is less of a scales of justice and more of a who's your buddy?
It's broken.
I mean, isn't that the distinguishing characteristic between the United States and every other country in the world? And that it has valid courts and reliable contract law, which allows the flow of capital between counterparties?
Most countries with a parliamentary system, it works pretty well. But in most countries where there's, a real democracy, it kind of works pretty well. But yeah, I mean, when you talk about some of our biggest competitors like Russia and China, it doesn't work very well.
Mm-hmm. We kind of just skated up against this, but it's perplexing to me, and I'm interested to hear a little bit more about it. One of the places where you and I think disagree a decent amount as it relates to the AI conversation, which I think is a component of this, in the liabilities of AI. I think AI is a big job killer, specifically for entry-level finance, entry-level programming, entry-level marketing, entry-level communication. I would say those 4 job types are the most at risk right now, which is entry-level comms, marketing, finance, and programming. You tend to be less concerned about that.
I wholeheartedly disagree.
Why?
Because I think it's used as a scapegoat. I think that's a good reason to trim your workforce and to bring down your costs. Say we're moving to AI, and we're moving to a more AI, an AI type foundation, and we're going to lighten up our workforce. I think it's a very good excuse. It's an easy way to pull off, reduction in your workforce. I think that's number one. And number two, I've only seen AI create more opportunity, not take away opportunity. I have not seen a case where I've seen AI replace valuable people. I've seen the exact opposite, where it creates more jobs.
More jobs because, or by way of?
By way of the fact that it makes certain people more efficient. And it also means that there are sometimes you don't need the same level. Like you said, it takes away entry-level jobs. Well, I would argue that entry-level people are far more valuable because of AI than they were before AI. Before AI, there was a massively long training process. After AI, since AI's launched, now the training process is much shorter. So I would argue that the entry-level people reap those advantages.
I also mentioned in this discussion that I think what is good for the mega techs is not great for the rest of the market, and you agreed with me when I said that.
Okay.
Why do you think that's true? Why do you think what's good for mega techs is not necessarily good for the rest of the market? Or did I misunderstand you?
I don't think I said there are certain things in the megatech world that I think they can get away with that other companies can't because they can bury it. But I don't necessarily think they have any kind of advantage.
But do you think that the positive performance of the megatechs is an indication of suffering or weakness or troubles elsewhere, or do you think what is the relevance of the strength of megatech to the economy and the rest of the world?
Well,
is it a benefit? Is there a relationship?
Well, the relevance on paper is just market cap. So the relevance on paper is that everybody has rode the coattails of the megatech stocks. So you'd be very hard pressed right now if you go out and you look at any company, basically any technology company, it could be small cap, large cap, whatever it is, and you look at where the valuations of these companies right now, because of the valuations of the megatech companies, they're all at record highs. So when you start to look at this stuff, the first thing you say is, well, how could the megatech, explosion in market cap be bad because everybody else has rode those coattails and now they're at record levels. So I would argue that nobody's going to say, my company's trading for $3 billion. It's only worth $1 billion. I can't wait till they take away the $2 billion. They're going to. So the answer to the question is, I think it's been good for everybody.
How confident are you in your post-Fed thesis of would you short the NASDAQ, or is that a fool's errand because of the timing is impossible?
I'm already short the NASDAQ. I came in the last couple of days. It hasn't been a good couple of, hasn't been a good 2 weeks here, but I am already short the NASDAQ and I plan to stay short the NASDAQ. Interesting, since we've been talking, the bonds rallied up. Now they're unchanged on the day. So they haven't really done anything in the markets, down a little bit as we record this today. But I think the NASDAQ is the best short out there. The only index I'm not short is the Russell, because I felt like lower interest rates would help Russell stocks a little bit. But every other index, I think you can kind of sell.
Russell, you like though?
I like more than the others. I'm not long Russell.
What about dollar? Do you like the dollar? Are you a dollar? Can I get you into some dollars? Can I get you short the euro?
I would rather be long dollar than short it, but the reality is the dollar is in an absolute free fall. The dollar is in crash mode, and you don't hear anybody talking about this, but the Trump economy is destroying the value of the dollar. And so it's keeping the stock market at record highs, but it's absolutely destroying the value of the dollar. So I think that, we have more reason than ever to be nervous about the future of the dollar and the strength of the dollar. I mean, it's ugly right now. It hasn't had an uptick forever. I mean, I'd rather be long it here than short it, but I'm not long it.
Because you have no confidence that this is over. There's no reason because of the reasons you just said. Do you have an opinion on the insanity with gold, by the way? Not to go all market talk on.
I'm bearish on gold too, because I think gold and silver are way overpriced. I think that, again, rising tides have carried everything. Commodities, they've carried virtually everything up to kind of ridiculous levels. I don't understand the love affair with gold. And again, gold can easily go to $4,000 an ounce, but I feel like the pot odds and the downside in gold far outweigh the upside here.
I agree. I mean, I'm more tempted than ever. I mean, just going back to my sort of these overtime conversations. And again, I'm as credible as a flea at this point in terms of all these things. I've made money this year up because I was into the Mag 7, but anything that wasn't the Mag 7 just was questionable at best and maybe worse. But for the first time all year, I'm building at a point of view in my own brain that this could be a nice, lovely moment to get on the other, to get short gold, to get short the NASDAQ, to get short Oracle, all these names.
Well, you're not getting short them. You're not selling the bottom.
No.
I mean, there are a lot of concerning things. And I mean, just the concentration of consumer spending to such a small group, it's concerning. The amount of just the number of people that can't find jobs, it's concerning. I mean, this stuff eventually comes back, to scare you, at least. It does to me. But I don't trade on fundamentals. I just trade based on a perception of price. So it's nothing. So I'm not looking at any, crazy numbers or anything like that. That's all.
Is there a comparison? Is there a historical comparison for this moment if it's not 08? Because I don't think it is 08, but I do think there's a big distinct. I do think there's a disconnect between the real economy. I think there's a substantial disconnect between the real economy and the equity market.
I mean, I don't think if there's any kind of a comparison at all, it may be 2000, because the internet companies that laid the foundation in 2000 were, from a technology standpoint and from a vision standpoint, they were way ahead of the curve. But from a making money standpoint, they basically bankrupted them all. They just took on too much debt. They bankrupted all the companies. I think the AI companies today have so much more money and they're unlikely to bankrupt themselves. But I don't really understand where all this money is going to come from and where, how these companies are all going to get paid. I use a lot of AI I've never paid a dime.
You don't pay for ChatGPT? I pay a monthly fee to those bastards. You're not paying the $20?
No, I don't pay for ChatGPT because I mostly use Google.
You're a Gemini guy.
Yeah. And there's
Is Gemini an app?
No, I don't use the app. I use the desktop.
Use it on the desktop?
Yeah, I use it on the app sometimes. I use it on my phone sometimes, but more so, it's really just a search tool for me more than anything else.
It's just enhanced super search?
It's super search. It's like paying Google to search for me, I think. But I'm not paying them anything, so I don't really get how they're making any money on it.
Well, no, because Google is back. I can tell you how they're making money on it, because the same way they make money on normal search, Google, unlike GPT, and I'm sure unlike Grok or any of these other people, Google, because they're the king of monetizing search, they're going to embed, you're going to buy the word brokerage inside, like they're going to sell keywords inside of their,
of course,
and Gemini the same way they sell it on search.
Of course. So anyway, I mean, but I just haven't figured out how the AI movement is going to support the current valuations of these companies. I think it's going to be quite the challenge. And it's not so much that I'm not like super bearish, I think we're crashing type thing. It's more of, I just don't get the level of bullishness out there, and the level of like, I almost feel like nobody's seen this before, Like I've lived through too many of these where 99 out of 100 people are bullish, and and I don't care what the reasoning is, just 99 out of 100 people are bullish and everything turns a little south.
Just based on fundamental sentiment imbalance, basically. Like forget anything else. It's just that sentiment is so out of whack that the only possible outcome is a reversal of fortune. To your point about Tom Brady or Michael Jordan.
Show me one person. Show me one person out there that's talking, in financial media about anything other than, Tesla to 1,000, Bitcoin to 1,000,000. Show me somebody.
I might do it tonight on overtime. I might flip my whole position over tonight and just go with a big short prosecution. Although, I do think the most fundamental thing is I actually think that what we're really seeing is a dollar adjusted rally. If the dollar was at 95 cents, this level wouldn't be. This level is just a rotation out. It's a dollar adjusted level, straight up.
I think people need to talk about that, because I think people need to understand where a lot of this buying is coming from. And also, they have to understand I just don't think people appreciate pot odds. I think they understand basic risk, and I think they understand, a little bit markets and things like that. But I don't think that people understand, when you get to certain levels, how much, how difficult it is for trends to keep going into perpetuity, and how difficult it is to, defend when you're all in, to defend losses when you're all in.
I agree. Again, and I live in a multi-currency world, so I'm very specifically aware of it. But I just remember seeing from the get-go, this entire market rally this year, I bet my bet is if you were to actually bring the dollar back to whatever its high was at the beginning of the year, you'd end up right here. Like you'd end up basically the market would be unchanged. The market rally is, I think, almost entirely dollar driven.
Well, your purchasing power in Europe has gone down by, 15, 17%.
Exactly. But again, that's neither here. It makes me very acutely aware, but it also, how much has the stock market risen? 15, 17%?
Yeah, that's 13.
It's the same delta.
Yeah, that's it. That's the trade-off. We've gone basically nowhere, but whatever.
So at least I own stocks.
Yeah, it's a fun discussion to have. I don't think it's going away. I think things are going to get interesting. And I think this is a really good topic for debate. How is the stock market at record highs when everything else is going to hell in a handbasket?
It's going to hell.
Yeah. I think it's a fun discussion. And I think we've seen this before. And in my experience, okay, can't say for everybody else, but in my experience, And from all the years that I've been trading, it usually resolves itself to the downside.
I understand. I mean, listen, I'm flipping over. I'm looking to get short NASDAQ, short gold, long dollar.
But that is the craziest thing about this, that is, that's where we are now.
It's where we are, sir.
All right. I think we ran out of time. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. Dylan, look forward to seeing you next week.
I'll see you in 7 days.
Ciao for now.
Bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, the boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. That's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to today's assignment. Just off of a post FOMC announcement. Always back and great to be here with Dr. Jim. Dr. Jim, how are we doing today?
Man, what's going on, man? It's crazy, bro. Everything is dropping now. Everything is going down. Man, what's going on out there? Help me.
I don't know.
Help me make sense of this.
I don't know. All I know is you and I are here right now, alive and well. What's going on, chat? I hope everybody's doing well. It's a post FOMC announcement. I hope everybody took cover, but we're still alive and well. We're down at the lows right now, but it kind of feels like about time. That was my initial reaction, Dr. Jim. But what was your initial reaction right off the bat outside of what the actual decision was?
Well, I mean, I talked about this a little bit yesterday on From Theory to Practice, but I'll kind of share it with you too. Like, it was so funny, like yesterday, you know, everybody's talking their book. Like, everybody does it. I do it. You do it. Everybody does it. So, I mean, the Fed ended up going 25 basis points, which was, you know, that was the expected move and
That was
and
a
whatever.
safe
But it
choice. That was a safe choice.
yeah, I mean, you know, I'm not surprised by that, but it was just funny to hear people talking about the reactions to whatever the Fed was going to do, especially if they ended up going 50 basis points, which they didn't do.
Right.
But it was just so funny to me to kind of read the commentary yesterday where people were like, you know, all the bulls were saying, like, yeah, man, like, you know, if they go 50 basis points, like, I see it ripping higher, but everybody says it's going to go lower. And I'm
Right.
like, what? And then you look at the bears and they say the exact opposite.
Yeah.
They're like, I see it going lower, but everybody thinks it's going to go higher. It's like, man, everybody's just talking their book.
Right.
We all see it through whatever bias lens we have. It just makes me laugh. Nobody knows what's going to happen. I mean, everything is down today in concert. Now it's rallying back right now a little bit, but it's just, it's so funny, man.
No,
the whole thing is.
I mean, to your point, we have what? It's almost 2 o'clock. We got like an hour left of market open. I mean, we could close unched by the time we're off of this show right now. Right, so this
Man,
isn't your first rodeo. You know how this
could be up
goes.
125.
We could be a new all-time highs by the time we're off here today. And it's funny we joke about that, but it is the reality of the market and the reality of the market environment we've been in, right? So
No, it totally is. It totally. And I mean, right now, it's like, right now is always a very interesting time on a Fed day because Powell's taking questions right now. So this is the stuff that, like, the interest rate decision that came out at 2 o'clock, his prepared statement that came out at 2 o'clock, like the market has already had a chance to digest all of that. Everything that's happening now is going to be some new information potentially.
Yeah.
And so people want to see how he answers specific questions, you know, and like the tone of his voice. And obviously he went with the purple tie.
is that what it was? Do you know what tie he actually went with? Or are you joking?
I mean,
'Cause I'm
it looked
curious.
pretty-
I'm curious right now.
But no, I'll tell you what though, he did it again.
Okay.
It was super dark purple. So like when he walked out, like you couldn't tell. And it's like he's crafty, man. He knows what he's doing. He knows he's just toying with us. You didn't know for sure if it was black or dark gray or dark purple. And then he came up to the podium. You're like, yeah, that's just dark purple.
If he was
go-to.
walking up here with a black tie, this man was getting ready to cut a whole percent.
yeah. yeah.
If you see the
I'm
black
just saying,
tie,
dude.
Yeah.
Oh man, it's too funny. It's too funny. But yeah, you know, I mean, lots of movement, lots of activity. You know, if you're in the market, if you're scalping, if you're doing things kind of short-lived, I mean, these type of days, you have lots and lots of opportunities.
Yeah. With that being said, we'll go ahead and jump into these slides here. I know on the scalping end over the last couple of days, it's been really boring. For short-term directional traders, a day or two ahead of this FOMC rate decision, I mean, I call it the grinder. You're just going to get chopped up. Price is pretty slow. It feels like you're watching paint dry. And the middleman wins at the end of those days on days like that. So FOMC brief, Dr. Jim, I just wanted to go over some of the rate cuts, holds, and hikes that we've seen over the last 5 years. So put together a little graphic just for us to visualize where we were, where we've been, and where we're at right now. So we can just go ahead and get into this first slide. But it's been a long 5 years, Dr. Jim. I feel like, I don't know if it's just because I've been getting older over the last 5 years and I care about more of these things in the market, but I feel like over the last 5 years, interest rates, FOMC, this type of talk, it's on mine right here. This type of talk has been a lot more prominent over the last 5 years. So it kind of just feels like this is starting to be the climax of what started 5 years ago from what it feels like on my end. But here's a little visual, Dr. Jim. This is there's the chuckle. Right. This is the most important FOMC announcement today. You would have thought Dr. Jim made this slide. Am I right?
Yeah, I'm just saying. I mean, I've been trading a long time, a long time.
Yeah.
And what we are experiencing right now, I've never seen a more critical juncture in the history of the financial markets than what we are going through right now.
Yeah, absolutely. And that's why we had to remind everybody with the slide title of today. But this chart shows the dramatic monetary policy shift over the last 5+ years through the 42 Fed decisions that we've been sitting through. So you can see back at 2020, things were a little bit lighter, right? I know this goes from 0 to 6%, but this is just going to go from when we started hiking those rates, just to put that out there so we can understand how to correctly interpret what we're looking at. 2022, we really started hiking up these rates. These rates. I kind of wish now that I'm talking about it would have displayed the actual numbers so we can kind of get a better visual for where we were at. But one thing that you don't see here is we started to hike 75 basis points with consecutive months. So, I mean, we got really aggressive on that handle in terms of where the interest rates were lying right now. But we held a little bit through 2024. We cut rates a little bit through the end of 2024, and then we've been holding strong all of 2025. And then obviously the rate cut announcement from today is not priced into this specific graphic, but it will be for the next one. But this is where we've been. This is where we're at now, Dr. Jim.
Yeah, and you don't have the rate hikes or the rate cuts on here, but you can tell visually though, like you can see just how aggressive it was back in 2022. I mean, I remember when there was those 4 consecutive huge rate hikes.
I think it was about 4.
And it's like, yeah, I think it was 4 straight. And it's like, man, that was really, really significant. Like Powell was really, really getting after it there. But yeah, I mean, 2022 was pretty brutal in the marketplace.
Yeah.
But if you remember, I mean, it was like the end of 2022. I think it was October of 2022, maybe, where while the interest rates were still increasing, like they hadn't quite leveled off yet, the market started to rally. Like the market really started to move higher very quickly. And it's just a good example of how the market is so forward looking. Like the market, it's going to digest the current information so quickly, and it's moving on to 6 months down the road and 9 months down the road. And it's pretty remarkable, honestly.
No, I mean, it is. And we've been on this topic for so long now, I just can't even believe this many years in between have passed since we've been speaking about these interest rates and FOMC announcements. But with that being said, Dr. Jim, thought it'd be really interesting just to get a look back on the past on what's been going on when we were hiking these rates, why we still pay attention to it, kind of just where we've been. But we can go ahead and dive into the platform here.
Well, so what do you think? So as someone, you're 25, right? 25 or 26?
I'm 26.
26. Yeah. So you started trading, it was 2020, right? 2019, 2020?
So I started trading options in the first or second month. I believe it was the end of January of 2021. I started selling options for the very first time.
Okay. So, I mean, just looking at the graph here, like that was back when we were in a zero interest rate world, right?
Right.
Zero interest rate world, GameStop, a bunch of Wall Street bets, like all the crazy stuff, right? Now we're in a very different interest rate environment. What was 2021 kind of the first time in your adult life when you kind of started to pay closer attention to the economy and like economic news and things like that?
100%. I think being an active participant in the market really glued my eyes to those little details that I didn't before.
Yeah. So what do you think has been? I mean, being in both a zero interest rate world and now a higher interest rate world.
Yeah.
It's still not high by historical standards, but much higher than zero. I mean, what are some takeaways that you've kind of gleaned from that, being someone who's only 26?
Some takeaways. I think sentiment. I think by paying attention to these interest rates, the rise and fall of these interest rates, I think I see a sentiment shift because as I get older, I understand business a little bit better too. So I kind of see it from the top down a little bit more. And when these things happen on an economic level, I can kind of see the sentiment shift of, I would say, like very nuanced answer too, but like leaders of our society, like I start to see the bigger picture shift of how like companies act, how they posture themselves, how they position themselves, those kind of things. So outside of my own trading or outside of what I'm noticing in the market, I would say that's really what pulled my attention initially, is just the macro perspective of the effects of these interest rates going up and down. And little did I know this was happening my entire life. And then I'm in my 20s now learning about the effects of interest rates. And it's like, how did I, this is some pretty crucial concepts I was missing out on. So that's what I was drawn to, Dr. Jim.
Well, I mean, I wouldn't beat yourself up too badly. I mean, that's a very common. Yeah, it's very common. I mean, there are still a lot of young people in their 20s, maybe even in their 30s, that they still don't quite understand, kind of basic economic concepts that we take for granted because what we do for a living. So, a lot of it depends on what you do for a career and kind of where you spend your time and things like that.
Yeah.
But it's always so interesting to me to communicate with someone in a different generation, or at least, 15, almost 20 years younger than me, to kind of get a feel for, kind of how you feel about lower interest rates and higher interest rates and just.
I don't think I see the effect, though. To answer your question in a more straightforward way, though, I would say, in my day-to-day, and maybe I don't have a family yet, in my day-to-day, I don't see the effects. Outside of inflation in itself, I don't see the effects. Maybe that's because I'm not operating some large-scale business right now, or whatever the case is. Maybe I'm just not as affected by it. So again, to give you a second answer is I don't see much change. I would say I'm more informed now to see what's going on, but personally, Not much of a change. And I'm curious to ask you afterwards, Dr. Jim. Go ahead, finish your thought.
No, yeah. Well, I really feel like I feel like first of all, it's a very honest answer, and I think that's where a lot of people your age would probably cluster.
Yeah.
Because you're right. Like I mean, the simplest example would be if you owned a home. Like if you owned a home,
100%.
Like this is a huge deal, right? Like for instance, it doesn't matter which side of the home ownership kind of transaction you might be on. If you're looking for a home, it's obviously a huge deal.
I have another point to add, Dr. Jim, now that you brought this up. Go ahead.
If you're looking for a home, it's obviously a huge deal. But like even if you're in a home, like Autumn and I, like we're in this home, and it's a very average home, a very normal home, like 1,500 square feet, not flashy, just very, very normal, very modest. But it's like we got in there, I have a 2.99% mortgage. Like I've told Autumn, I said, we are not moving ever. Like I hope you like this
handcuffs.
home. That's what I'm saying. Like we're not going anywhere. And so when you start to do things like that, which I mean, 25, 26, that's a little bit young to be doing those kinds of things. And especially you're on your own and, you know, all that kind of stuff. And so, yes, you know, but even just to be informed. Right. Like my hat's off to you, man. Like obviously that's amazing to have the information now, and now you have a new appreciation for just how impactful these economic metrics are.
Right.
What were you going to say?
Well, also I think ignorance is bliss too, because after getting a little bit more informed on some of these things, I'm like, why was I playing football at recess in 2008, 2009, 2010, 2011? These interest rates were amazing. You know what I mean? Like, what was I doing at recess? Ignorance is bliss at the same time, Dr. Jim.
So you were 11? You were 10 or 11?
What am I doing?
Yeah.
I got eyes to see, legs to use, hands. I have an able body. I should have been locking in. But jokes aside,
Hold on a second. So you were born in 1999?
I was born in 98.
98.
Yeah.
Okay.
So I'm still a 90s baby.
Gotcha. Okay.
I'm one of the older Gen Zers. I would say that I'm like the grandpa, the unk of the generation. So I can relate to the Gen Z. I can vibe with, you know, the core of the Gen Z, right? I got that side of me, but also I can vibe with the millennials like yourself, Dr. Jim. You know, we're going back and forth here. But I will say though, I think the interest rates on the mortgages is what, to myself and my peers, I think seeing us jacking up interest rates like that, that's when all of us, for the most part, was like, yo, what's going on right here? Oh, snap, getting a mortgage now at 6% is way different than 3%. At 6.5% is way different than 3.5%. Now, whatever the case might be, and you see those effects and you see the direction we're headed, and you're like, yo, if we're still headed in this direction for the next year or two, I might have to push some of the plans that I had back 2 or 3 or 4 or 5 years. And I think that's also a taste of reality that you start to get and understand as you get older too. You start to recognize that there's certain economic factors that have to land in your favor for you to capitalize on it too. And it's just the luck of the draw, depending on how old you are, when you're getting out of school, what you're doing, how, you know. So, I mean, if you're graduating in 2008, that's tough, you know, and it really happens like that. It's almost like roulette sometimes. We live in a capitalistic society that's boom and bust. So if you happen to be at that bust as you're graduating or getting your footing in somewhere, it's just unlucky at the end of the day. So I think there's a lesson to be learned no matter what cycle you're in economically and where you get out. But it's nicer to zoom out a little bit and just kind of see how the game, for lack of a better phrase, is kind of played here. So
yeah, no,
refinancing is great, but dang, if I could snag that 2 or 3%, that would have been even better. So.
No, exactly. But I mean, but that's why these interest rates are so important, because I mean, a mortgage at 6.5% versus a mortgage at 6 or 6.25% is actually a big difference when you start to think about what that looks like over like a 30-year time horizon or a 15-year time horizon with like monthly payments and such. It's like, you know, there's going to be a tipping point to where people are going to finally start to, because right now it's still out of reach for so many people. You know, it's going to get to a point where 6.25%, 6, 5 3/4, whatever it ends up being, to where it starts to tip on the other side because of these small incremental changes in the interest rate.
Yeah.
No, that's right.
Cool. We can go ahead and jump to this platform here, do a little tour to market. We haven't been doing too much in NASDAQ, but we did take a little bit of a short position today. Dr. Jim, we were able to capitalize on that. Fortunately, we didn't. Oh, wow. The market's almost ripping up toward ripping up towards the day's highs. That was happening this whole time while I was going on that little spiel.
I can't believe. Wow. So the market's ripping back. So I'm curious what Powell said or didn't say.
Yeah.
But I'll tell you what, man, the metals are just getting steamrolled.
Are they?
Like,
are
I'm
you talking
very
gold specifically?
surprised. Gold and silver.
Okay.
I mean, they're both getting. I mean, silver's getting pummeled a lot more than gold. Gold's only down 1%. Silver's down almost 3%. I mean, that's a huge move in the metals. And yeah, that's really crazy stuff. But yeah, look at the market. It's ripping right back. And so, yeah, there you go, man. That's crazy stuff.
I think, Steph, earlier you were mentioning that NVIDIA position. It's doing well now. I don't want to speak too soon. As you can see, the market is reversing at the blink of an eye right now, but gold is down like Dr. Jim was saying. Dr. Jim, I do have a few positions on here. Gold it's helping me out on the day at least. This sell-off is helping. But even with such a significant sell-off, this is how far gold ripped against me. Both of the strikes that I have right now are in the money. So that's how far gold ripped against me, even after this pretty aggressive sell-off to the downside, right? So we got gold in there, and then we'll just go ahead and cover this micro NASDAQ position. This was it was about a 45-point short this morning. A very light, not very, very convicted trade just because of the market conditions right ahead of FOMC. So it was a trade that I liked, but also was caution of that binary event coming later in the day. Able to capitalize on that. And then we had Google. Google's an out-of-the-money call spread that we sold. Google is down almost 2 points on the day, almost 1%, but we're still going to need to take that one lower. NVIDIA's finally panning out a little bit better now, Dr. Jim. This was one that has taken a little bit more patience and is trading at those highs, kind of consolidating, hanging out there a little longer than I would have anticipated. I mean, I thought the bubble, whatever you want to call it in NVIDIA and that sector would have popped a little bit more by now, but you can see we're just hanging around at the highs. But this gap down and the continued sell-off is helping me for today. So we're up a little bit on that one, Steph. I know you had mentioned that one. And then we got QQQ. This is an out-of-the-money put spread that we had sold. This expires by the end of the week. These are out of the money right now. I can look to manage that a little bit sooner if I need to. And then I also have a longer dated out-of-the-money call spread that I had sold on QQQ. We need QQQ below 580. We have some credit on here.
So you have a long put spread and a short call spread?
I do. These were completely different trade ideas put on at completely different times, but it's grouping them together right now. But with QQQ, I sold the 580s. Not going to calculate the break even at this time, but I need this below 580. I mean, at its lows today, we were getting close to the 584. And 4 points away from 580, and now we've shot right back up to almost 590. So that's FOMC. That's the market volatility for you. I'm not complaining because I love to see this rather than watching paint dry. But RKT, this was another risk of the week. Kind of fun game we've been playing on Gus and I shows every Tuesday, Thursday, 4:30 Central Time. So that was a smaller cap stock. We were doing something with SPY. We had sold an out-of-the-money call spread on SPY. Sold the 640s, bought the 645s, collected about 274 for that, so a little bit more than half of the width on that one. And I need that below 640. Where are we at right now? 640, 640. So we're sitting about 20 points away. So again, earlier today, we were
So when did you do that?
This might have been...
It must have been a long time ago.
Some of these I've had these. I mean, I had to hold this one down to the wire. So I know a lot of the times if it's past 21 days and it's like says 16 days left till expiration, it's probably because it put me in a tough position 2 weeks ago and I had to hold it down to the wire. So we probably had that one on for some time now. I think.
Yeah. Well, because I was just thinking, I'm like, okay, if you sold the 640, 645,
right,
when that was out of the money, that was a while ago.
It's also it's also such a testament to how far the market has rallied. I mean, again, we keep referencing back the beginning of April, but we put the low in at the beginning of April, and it hasn't. I mean, April, May, June, July, August, September. Oh, dang, never mind. Time is flying. That is almost 5-6 months ago, but it feels like it was just yesterday. But no, I mean, the market just went on a straight tear upwards after putting on some of these positions too, Dr. Jim. But one that might be playing out a little bit more, going to be patient with it, is the in-the-money call that I bought on SQQQ. This is the inverse ETF for QQQ. So if QQQ is getting hammered to the downside, SQQQ is going to be going up and vice versa. This was one just to have a little bit, I was just being a little creative in here. Paid a debit. I could have easily put on more short delta in QQQ to express that continued short bias or what have you. But I ended up going in the money, bought a call on SQQQ. It's going to expire in December 19th. So if we do get a little bit of a correction or a pullback, whatever you want to call it, that should pan out at least before December 19th, if that trade thesis is even valid.
Well, so one thing about SQQQ, I don't know anything about that specific product, but it's a triple leveraged. They're all basically the same from the standpoint of you've got to be careful with that, especially with the super long term. the way that those products are structured, they have what most of them call a daily reset. And so what actually ends up happening is every single day they kind of reset the benchmark to what it means to be 2x, 3x, whatever. So like when you buy a stock, like how you perform in the stock over a period of days or weeks, it's not reset every day. It's cumulative. Right? Like it adds or subtracts. I mean, it's actually a geometric sequence from one day to the next. But because they're resetting it without even getting into the math, here's what that means for you. If this thing just chops around and you don't get the move lower that you want, it's a bearish, right? It's a short. Yeah. Right? You bought a call on a product that's going to go up if the market goes down. Is that right?
Correct.
Right. Okay. If you don't get that move, you're gonna get chopped up. Like the price of that product of the SQQQ is going to slowly whittle down over time, even if it's at the same price it was at when you bought the stock, or bought the inverse ETF 2 weeks ago. So you have to be careful because don't forget, you also have negative theta working against you. And so you got to be careful with those leveraged products. I think they're fine, but the next time you do this, or maybe even think about this trade and kind of reshuffle the deck, I wouldn't necessarily do something that's really far out in time like this. I would choose something that's much shorter in time because it needs to be a very short-term play.
I got you. What were you leaning towards or inching towards right away? Like some type of broken wing butterfly to the downside, some short-term exposure?
I mean, it could be a million things. I mean, it could be so many things. So it could be broken wing butterfly. It could be expected butterfly.
One thing I like to do is, for example, where would Dr. Jim lean towards? For example, I think everybody does something
and
great.
And then do the opposite?
No. The way that jokes aside, the way that I come at it is like, okay, for a short-term perspective, like what could I deploy? And it's like, okay, that's something I kind of take from Dr. Jim, kind of take that from Jamal, take that from Tom. I like that, take that from you. So that's kind of what I do. So that's what I'm doing to you right now, Dr. Jim. So when I am in a similar position, again, it's like, I'm very used to selling premium every single day, every single week. It's like if I do want to start taking advantage of these short-term directional positions a little bit more, like where does my mindset naturally shift towards? It's like, okay, Dr. Jim usually thinks about it in this way, so let me consider that. So that's really where I'm coming at. From.
I think that's good. I think that there's a lot of wisdom in that. When the show's over, though, I would go ahead. I would hop in Google. I would hop in ChatGPT. Hop in whatever you like to use, and I would look up the daily reset in the leveraged funds. And the people that are watching the show too, like we have so many people watching, like, man, if you guys are using these products or you're interested in these products, I would take some time to look at the daily reset. That way you better understand. And you can probably even find some examples. I've even done some examples on the network. I can't think of the name of the shows that I've done, but if you were to Google like Dr. Jim, Tasty, leveraged ETFs, you may find them. It's been a couple of years since I've done them. But I've gone through like mathematical examples, like showing like how a position like that can be problematic in ways that you weren't expecting.
Yeah, 100%. Maybe we can even dive a little deeper, maybe with Sahil one of these days, and we come back on the topic of these triple leverage ETFs and just talk about the nuances with using some of those products. I like that.
I think it would be good. Yeah.
Cool. Second dissertation piece, leverage products.
There you go. Hey, look at this market. It is literally unch now.
No,
look at this.
I mean, we're about to take the lows on SQQQ. Let's take a look at NASDAQ as we wait.
Man, wow. Metals are coming back. It's all coming
insane.
back, baby.
What a move. That's so, it's just like, it's such a dirty move. It's so filthy. Like, that's crazy.
It's all so made up. I love it. It's all so made up.
Yeah, it's great. It's great.
It's great because they're probably going to send them back down 200.
Exactly. Exactly. Exactly.
100%.
What's going on.
Oh yeah.
I played these games before. Games before. All right. Let's zoom out on the volatility index. Vol coming back in a little bit here. I'm expecting at least a 30 vol within the next 2 to 3 years, Dr. Jim. That would be nice. My sweet spot for when I got started. 2 to 3 years.
I sure hope we get it in 2 to 3 years.
Hey, I gotta give myself some time, right? I gotta go back, some extra extrinsic value. Give yourself some time to let it work. But
that's too funny.
No, vol coming in a little bit here now. I know we just got a few moments left. Let's check out NVIDIA. Anything else brought up by the interns or anything else you guys have been talking about over there, Dr. Jim? Anything outside of interest rates been catching your guys' eyes?
No. I mean, this has been the talk of the town. I mean, this is it. And now it's, I'm trying to think if there's I don't think there's really anything notable tomorrow or Friday. I mean, obviously tomorrow is going to be notable because, the day after FOMC. is usually pretty volatile in its own right.
Mm-hmm.
And I think one of the reasons why is simply because you have to keep in mind that when the U.S. market closes tonight, now Asia opens up and they get a chance to digest all this information. And then Europe opens up and they get a chance to digest all this information.
Right.
And so then the U.S. opens up again tomorrow and they're now digesting the digestions of Asia and Europe. And so there's a lot of, it's kind of a digestion, gravy train, if you will.
I hear you. The digestive gravy train. That's a new one for me, Dr. Jim.
That's a new one for me, too. We made that one up on the spot, man. There you go.
I like it. We might close the unch, so we'll see where we're at. We'll see what the market wants to do into the last 45 minutes of market open. Dr. Jim, anything else to add before we wrap for the day?
No, crazy stuff. I mean, It's been a super wild move. I'm very curious to see how the last hour goes here and to see where we do close them. And I may actually go back. I don't normally do this, but I may actually go back and actually listen to Powell's press conference.
Yeah.
Because apparently, there's some things that he said or didn't say that caused some pretty significant changes in the market structure, if you will. So I'm very curious.
I mean,
to see
that
what
doesn't
he said.
sound very far-fetched considering the price action we're seeing within the last 15 minutes.
No.
So we'll see what we get with that. Thanks for taking the time to hang out with us, Dr. Jim. As always, we always appreciate you having you here, getting your thoughts and insights on the market and on our portfolios. That's going to be it for today's segment. Be sure to stay tuned for more coming on next. We'll see you guys next time. Peace.
Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value is and so does volatility. Vega measures how much the option's price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Hey everybody. Well, last I checked, Pal was still speaking. I'm not sure if he stopped or not, but it has been a crazy, how long's it been? Hour and 17 minutes since the announcement. The market's been all over the place. At this immediate moment, the ES and NQ are in the red, and the YM and the RTY are both up. But yeah, it has been flashing red and green like a Christmas tree. Let's jump in. I've got a bunch of symbols today to thumb through on this. Now that we're past the FOMC, I always like that. Really clears the air, but the air doesn't really get clear until pretty much the next morning. So let's get started. We begin with the spider. And what I'm seeing in a lot of places is a breakout to lifetime highs, but a fake breakout. I'm not sure how close this became to a new high. It looks like it was a few pennies shy of a new high, but as you can see by these huge shadows, that's what they're called in candlesticks, a big range today and a lot of uncertainty. So yeah, it has been just a madhouse. The diamonds have been relatively strong today. They made a lifetime high. It remains to be seen if they'll close at a lifetime high or if the record we got, I think it was Thursday, will stay intact. At one point, it was like this huge shooting star, but it's regained some of that green. The IWM is particularly interesting. This is the small caps. Look at this. The former lifetime high on an intraday basis was way, way back, as I've mentioned dozens of times, around last Thanksgiving. We beat it today, but it didn't last. We are still in the green, but we still have, in this instance, it's not exactly a shooting star, but it's pretty close to that. Very tiny body here. Long shadows in either direction, but that was a bit of a fake out too, because if people assumed a new high on the small caps would mean all systems are go, well, they paid a bad price. IEF, which is the 7 to 10-year Treasury bond, is slipping a little bit, and I'm going to talk about bond funds at the very bottom of the show because I made a trade I did not expect to make, which turned out pretty good so far. As long as this remains above this gap that I've highlighted, it's okay. Break that though, and you've got a pretty meaningful failed bullish breakout going on. Jumping overseas, EEM continues very strong. This the emerging markets up about 2/3% on this ETF. More specifically, China is up about 3 times that amount, percentage-wise, getting closer and closer to this very long-term broken trend line, which still represents resistance. Lifetime highs, real lifetime highs were eons ago, many, many, many presidents ago. So at the moment, the key and the only element on the chart I'm watching is this long multi-decade broken trend line. I'm getting awfully close to it. BABA is one particular Chinese stock that's been doing really well, thanks of course to, you guessed it, AI. This was a long basing pattern that was forming there, pretty sloppy because it played jump rope with it a few times, but finally it decided to stay above that line and has been having a very strong few weeks since then. Now, precious metals is interesting. You may remember yesterday I sort of held my breath and I did my usual disclaimer and apologia about precious metals, but shorted GLD, shorted GDX, and I don't think I mentioned I even bought some dust, which is the ultra short on the miners. And I got a little scary there because after the announcement, gold and miners went screaming higher, but they're not screaming higher anymore. Here's GLD. And so gold itself is down a good $32 an ounce right now on GLD. And going back to the topic of fake outs, we had one right here. On an intraday basis, we had a new lifetime high on GLD, but it did not last. So we have lost all of yesterday's gains, all of Monday's gains. So we're hanging out down here. Nice reversal. And longer term, what I would love to see would be to get bounded down to this zone right here. I think that would represent a good new buy opportunity. So GLD in the red, and silver also in the red quite a lot, 2.37% negative on this. Even in its strongest state, it did not beat its recent high. Yesterday was a red day, a red bar at least for silver. But as I mentioned, shorted GDX as well, and that's down, not quite 1% as we zoom in on this. Lifetime high was Monday on this one, flipped that away on Tuesday and descending a bit more today. So this week, every single day, a little bit lower highs, a little bit lower lows. So slip sliding away there on GDX. I believe far and away the biggest miner is Newmont in EM. And this is an interesting trend line too. Look at this red trend line right here. Now for years that had represented support, but that's changed roles now. And so now it's resistance, and look where we're at right now. See that? So we came right up against it. You've got a little bit above it, but now we're starting to break down away from that. So in this instance, Friday's peak, which was its lifetime high, has still held. So there's, I think, plenty of potential downside there with Newmont. Our own little favorite here on this segment, even now, is green. DRD continues to keep thriving, so good. But I will say again how relieved I am to have taken profits on palladium, because it's just getting weaker and weaker. I sold it here, down, down, down. We did seal this gap, so it's maybe that's it. Maybe it'll stabilize now. In my opinion, gold is still so high that I'd rather not get aggressive with precious metals just yet, because if gold really started falling, I could see palladium start to hack its way through this level here. But I will say, to palladium's credit, we have sealed the gap, and we do have a pretty good cluster of activity right here to try to shore things up. Far as energy, XLE, shorted this one new today. And tight stop on this is right there. It's anchored to its recent high from a couple of weeks back, looks like. And yeah, so we'll see how that goes. I mean, strictly speaking, this gap is a more generous stop, but I'm keeping things on a tight leash still. And I do see the market, we're all green now across the board. ES, NQ, RTY, and the YM just flipped green. So maybe Powell's done talking, I don't know. Speaking of green, I pulled out a few charts which just have eye-poppingly persistent, strong performance. Just thought I'd share these. There's 4 of them, just kind of jumped out at me. Credit Core is one, BHP. And even from this like multi-decade view, you can see this astonishing rise. It's incredible. I mean, there's like barely a downtick in sight day after day after day. Grand Canyon Education, not as dramatic, but you can still see a very pretty bullish base here. And since then, a fairly steady series of higher highs and higher lows. HSBC Holdings, this one is astonishing because its own relentless uptrend has been intact pretty much for half a decade, almost to the day. You can see here moving from 15 to about 70. And one last one. Did I show this one earlier? Oh, I'm sorry. I'm repeating myself. There's BAP again. On the short side of the ledger, I remain in my own, I get 18 positions right now, most of which are down. No real stinkers in there to speak of. Here's a few that I wanted to share. You've seen some of these recently. Cleveland Cliffs, CLF. This one's down nicely, about 3.2%. This is this instance of kind of history repeating itself. We see here and here and here, these nice rounded tops. So this is turning away very well from that dashed red line. Hilton finally behaving itself. I've been very frustrated with Hilton because, as you can see, day after day after day, it just refused to budge. Finally, for whatever reason, and I'll take any reason, it's broken down cleanly beneath that long-term trend line. So a nice tumble on that, about 3 3/4%. Oracle, even with the NQ green, we've got some red going on. like so. This was the lifetime high. And of course, this was after that, I think, big news related to OpenAI. And yeah, so I've tightened up the stop on this like so. So that's Oracle. AMD down a little bit, about 0.5%. And kind of hello, Duke, a sloppy pattern on this one, but I've got a tight stop like so on that. A couple more of these shorts. Cracker Barrel's like making its daily appearance here, CBRL. In this instance, we've had a couple of nice down days in a row, about a 3% drop on CBRL, so that's turned into a relatively long-term hold on that one. And Palantir, very richly valued organization. And in this instance, the stop is not that far away, but hasn't violated it just yet. So we've got a couple minutes left and just a few symbols left. First, let's talk about tech for a bit. The cubes are green. The incur at the moment is up, not much, only about 20 points or so. But the cubes here, their lifetime high yesterday, still intact. There's this crazy long hammer going on right here. You can see just a tremendous range. It's probably just a coincidence, but it just happened to tag this trend line beautifully. Maybe it's not coincidence. Maybe it's representing support now. But we bottomed out about an hour before today's close, and it's been just rallying ever since. But at the moment, it's up very, very modestly, just a few hundredths of a percent. There was some news regarding NVIDIA. I believe China banned NVIDIA chips. I don't know if it's all of them or just a subset, but that harmed the stock. And for a while, the NASDAQ, NVIDIA's down about 2% today, and its own lifetime high was a few weeks back near the end of August. But this is flowed into, to some degree, SMH, the semiconductor sector, which itself looks a lot like the cubes in the respect that yesterday was the lifetime high, and we've got this long hammer going on right now with a lot of downside range, but presently very, very tight cluster between the open and the present price. But the trade I did not plan on, but kind of fell into today, was TLT, the bonds, because I noticed this really interesting gap, like so, from way, way back in April 4. And it's taken a long time, but we just about perfectly sealed the gap today. 91.10 was the precise level, and today's high was 91.04. And so I shorted it at a good price today, and so far it's one of the better trades of the day. Nice tight stop on that one, and we'll see if this is kind of one of those buy the rumor, sell the news kinds of events, because the ZB definitely shot higher after the news, but it is weakened. And we'll see if that sticks or not. So anyway, congratulations, you survived. The 6th FOMC of the year is out of the way, and we don't have to think about this for some number of weeks. Just a couple more left this year. Now we can turn our attention to non-Powell things. So I hope you're doing all right, and I'll see you here tomorrow. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grotta, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call.
Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. That means it's time for the last call. Let me get this in here before things change. Even the S&Ps are down 7, Sadnov. Now, they were down 50. They were up, 20. They're down 675 right now. NASDAQ down 36. Russell been the strongest of the group all day, as foretold by the great one, Mr. Tom Sadnov, up 8. Dow up 220. I know the market's been a story. I know bonds are a story, down 12. Interest rates reduced by a 0.25 percentage point. Volatility, in my mind, weak all day long, red all day long. I don't think it ever turned green on the day. Volatility, a big tell, given a little bit of this market, some upside action. Bitcoin, after trading under 115, is flirting with 116,000, still down 1,100. Ethereum is up $14. Oil's down 60 cents. Gold down 25. It too has had a wild range today, about $70 top to bottom, after trading over 37.40 and down to 36.80. It's sitting at 3,700. Let's just call it right on the nose, $1 away. Silver down 96 cents. That's a big move on a percentage basis, much bigger than the move in gold by, almost 3 times as much. Nat gas back down 2 and change. Sadnov, I know one stock that gave you fits today was Palantir, PLTR. It's back down $1.50. It was up just a moment ago.
Why do you say I don't even have a Palantir position on?
Oh, I thought you had a short Palantir position on. What did you say you had short delta on that helped you? Oh, Reddit. I'm sorry, Reddit. That's the one. I'm so sorry. Reddit. You had short delta in Reddit. I apologize.
Hey, Reddit, I didn't take profits. It was down 12 at one point. I didn't want to take profits.
It was under 250. It's flirting with 270.
I know. I'm sticking with my shorts because I know what's going to happen in there.
Of course you do, me lord. AVGO down 12, Oracle down 5, Coin down around 5.5, Nvidia down 4, Amazon down 2 and change. There's the E-mini S&Ps turning green again. A little bit of a wild day after the number for sure. Netflix up $29. Nikki got you long Netflix in your account. Hope you didn't butcher it. Baidu up 12.
Before you might as well tell the truth. I don't have any Netflix positions on, so he did not.
Oh,
get
you must have taken it up for a small profit.
I don't think so.
Like you should have done in that other stuff.
I don't think so.
I think so. But that's all I got.
All right, so let me tell you
all
the first.
four indices are green again.
So the most interesting thing about today was this morning we sold some 0DT premium early, and it's the first time I've seen strangles in there go up by $3 in the before a number came out, which was pretty interesting.
Intraday before the number.
Intraday. It was pretty interesting though because I haven't seen that in a long time. A expected move strangle, $40 out of the money, jumped by $3. Very rare to see that even going into a number. Really, really rare. It came back as soon as the number came out. And it crushed in 2 seconds. But it was very interesting just to see kind of the tape action on that whole process today. I thought that was cool. Other than that, I think that all day we had been pretty much saying the same thing, which is quarter point, maybe half, but quarter point.
I mean, the odds were quite large that it was quarter point by quarter point.
No surprises. The market's generally right. Market's generally right. And I thought that would leave bonds unchanged. They're down 11. They were up 11. They're down 11. No big deal. And I thought that they would, after maybe an initial bounce, which we had a little bit of, they just sold.
We were up immediately following the number.
Yeah, we were up immediately following, and then sold off, almost 60 handles, and then now rallied back to unchanged where we started the whole day at a big nothing burger by the end of the day. And
everything's good in America.
No, I think that this is actually more interesting to me now because now you've got this out of the way.
Sure, you got 2 more rate cuts coming allegedly, or
whatever. But I mean, you got this first one out of the way. Just get the process started. So you got the first one out of the way, and now I think the markets can kind of do other stuff. They can make up their own mind, not based on
natural forces instead of the unnatural forces that might be.
Well, you're basically done with earnings, and now you're done with the rate cut stuff. So now you can go back to just like good old, do we whack them and how, or do we buy them and how, whatever it is. And I also don't think that there's. We always talk about, on the Fed numbers, we always talk about like a little bit of a mean reversion, the next day or 2 days. I don't think there's any mean reversion here either way because we didn't do anything.
You're right. I don't think
so. There's no mean reverting story here of hey, we were down big, now we're up, or we were up big, now we're down. There's no mean reversion story here. I was surprised by the magnitude of some of these moves, like the Russell up 50 and now it's only up 9. I was surprised that got to turn the phone off, Tony. I've told you this 100 times.
I was trying to call you.
Sorry about that. When I saw what was actually happening, how whippy it was, I'm not sure there was, other than trading the indexes, I'm not sure what somebody would do. You know what I mean?
Yeah, I kind of agree with you. Volatility, and we continued to go down as volatility went down. It was the weirdest thing. It was one of those days where, I don't know, it didn't.
That's why I didn't think we were going anywhere.
Yeah, I agree with you, but it didn't work. It took time all day long.
Yeah,
it took time.
I didn't think when I saw that vol didn't even uptick, I was like, this is just a short-lived down move, but I didn't want to buy them, but a short-lived down move. I didn't want to sell them either that much. I did sell 80s. I sold 66 80s when the number came out,
and you bought yourself a Mercedes.
I did not. Made a couple ticks. That's it. I didn't love it, and I wanted to do it before we started our Truth or Skepticism, so I did that. Other than that, my screen is surprisingly a little bit leaning red today. Not huge. You know what? I'm gonna take that back. It's about even.
Yeah, I was gonna say it's pretty mixed. It looks.
Yeah, it's pretty mixed. It's pretty mixed. There's some tech stocks that are down, but the rest of the market's kind of like pretty mixed. It's pretty mixed. Take that back. About even across the board, and now we can focus on Now we can just focus on the positions we have on, maybe a little triple witching stuff coming into, for tomorrow's close. I don't know what the expected move is.
Travel day for the Sosnoff, not a travel
What's
day.
the expected move for tomorrow in the S&Ps?
Let's take a guess. It was over 40 this morning. What do you think?
I'm going to say 22
for the
tomorrow.
For tomorrow, oh no, much larger. 44, Sosnoff. 44 seems exaggerated. 44.
Huh.
That's the weekly options on the 18th. The 19th, you got a 53, which seems relatively low if you got a 44 for one day.
It's kind of weird. I'm surprised. That's more than I thought. Good. Maybe there'll be something to do tomorrow.
A $10 expected move expected overnight between Thursday into Friday. I guess that's the way to read that, because the September 19th options expire on the opening.
And the average expected move for the last 27 years has been 990.
Oh, there you go. It's right. It looks like it's right there. It's actually $10 right now.
There you go.
Yeah.
Hence the reason everything's always priced so perfectly. Yeah, I'm not gonna do anything here into the close. I'm gonna wait and see kind of how they react tomorrow. Dollar popped up a little bit, which is kind of helps us a little bit. But other than that, man, not much there. Not much.
Euro down.
Nut and honey.
Small, yes.
Nut and honey. I'm just looking through all the different stocks today, and yeah, nothing.
This is the big thing, Tom. Volatility again. If you didn't get paid if you were holding positions for the last couple of days, you got paid today, and I'm talking about in the ETFs.
Yeah, okay. I'll go there. I'll bite if you're short premium, but it was a tough hold today because they really pumped juice in earlier, and it had to make you a little nervous. Last time they pumped juice into an option series was Oracle, and they were right. So I looked at it today with my positions, and I was like, I'm not selling anymore. And today, it didn't happen. Nothing happened.
Yeah.
So, yeah, nothing happened at all. So now,
as we sit unchanged, what now, brown cow?
Now you limp into the close. Now you've got 15 minutes left in the day. Now it's a limper, and there's now you're just playing. Now they're just playing with you.
Even the S&P finished higher or lower for the day?
I'll take lower just for the hell of it.
All right, I'll take higher since the 50-50 shot. Although you have a $1 advantage right now, as even the S&Ps are down $1. You always have to have the advantage.
Okay, you want me to take up?
No, I'll take off. I'll take off.
Yeah. So I was pretty quiet today. I got to tell you, the last 2 or 3 days I've been very quiet, and I don't like to be quiet. I thought I'd be more active today, and I wasn't. I didn't really get a lot of trades on. We got some trades on. What's your assumption this morning? Actually, I got 9 trades on, but did not get as much as other stuff done as I thought.
Understood. Yeah, it was tough. I would say that too.
Yeah. Let's take a look.
It was kind of day where you just had to close your eyes, but it was a hard closing your eyes kind of trading day. Wouldn't you agree?
It's funny. You're going to hate me saying this, but I actually liked selling the bonds on the Fed cut more than I liked selling stocks.
They got up to 1821. They did.
I know they dropped a full point. I thought that was a better trade, but I just didn't want to lose on both sides of the bond, so I didn't do it.
You didn't want to get all verklempt when you were talking to your girlfriend Dylan?
Yeah, I didn't. I wussed out. I'm a little mad at myself because I thought that was the easiest trade. I'm not saying I would have sold.
You should be a bond trader, because I'm looking at your option trading. I mean, for being the king of option trading, kind of thing. But bonds, you kill them.
Yeah, that's not where I want to make my money.
I understand.
Just so you know, I don't want to make my money in the bond market. I like the trading bonds, but I don't want to make my money there. That's not my specialty.
Because your positions are smaller. Low volume all around, not even 3 million SPX options, low volume in Tesla and NVIDIA, even though they're having decent sized moves. Volume.
Yeah. I mean, Tesla was kind of nothing all day, and NVIDIA was just down. It was just soft all day. Nothing really.
Mm-hmm. Well, I mean, NVIDIA's been up all day.
Actually, Tesla's up now. I thought it was down.
Yeah, no. NVIDIA's down all day. Tesla's up all day.
Oh, okay. I thought Tesla was down earlier. I saw it down.
For a second.
All right. All right. What do you do here tonight to go home? I don't think you do anything.
Wow. I said yesterday, you know, if they sold them off nicely, it would be an easier buy. And if they really rallied them, I think it would be a tremendous sell. So doing nothing, they're just making it tough for you, Sadnov. You're going to just have to sell premium on each dip, and that's going to be a tough, tough trade.
I guess. I mean, I'm already short some premium.
I'm not talking delta short or delta long. I'm just saying you're going to have to sell premium when volatility pops is all I'm going to say. I mean, you've got volatility now 1767 down at almost 4% today on a nothing move in the market. I don't know. Bears look a little beat up to me.
Beat up? They haven't even gone anywhere.
I know, but yeah, you had everything that you needed. You got rid of the FOMC meeting. You only got a quarter point, you know.
Oh no, I think a half point would have been worse.
I agree with you. I think a half point might have been worse. I think it would have had initial rally and then a sell-off, which I think would have been such an easy thing to play. I have no feel now.
Yeah. Okay. All right. Well, I'm gonna play the Friday morning. I'm going to play it for a little bit of a markdown as of now. I don't know. I might change my mind tomorrow, but I'm going to play it for a little bit of a markdown. And
you're talking about Thursday night into Friday?
Thursday night into Friday. I'm going to play it for a little bit of a markdown tomorrow night, unless something changes. And I'm going to, we're going to come in relatively flat for our trading show on Saturday. I mean, our trading account will be flat. So we can start from scratch on Friday morning.
Mm-hmm.
And everybody gets to start from scratch on Friday morning. That's the good thing.
After expiration is over.
After expiration. Yep. Yep. All right, let's do it. Let's make something happen here. I got to make something happen. I don't know why. I just want I just want some action.
You're excited. I mean,
I don't want to watch paint dry on Friday morning. I'm okay for myself right now. I don't care. But in front of a lot of people, I like to see some action.
One of those stocks we've been trading is like the Baidus of the world now up $13. Is going to have to be a sale now for Friday.
I didn't sell. I mean, I'm flat Baidu here. Got flat.
IB rank is 75. Volatility is getting bid up there.
It's a crappy stock to trade. Did you look at the markets in there? They're crappy.
Yeah, you're right. I mean, they're 10 to 15 cents wide, but they don't trade too much in the middle.
They don't trade really in the middle at all.
Mm-hmm.
Kind of crappy. I just rolled up some puts in there. I can do that. But
got good volume, thousands on each line. But yeah, I hear you. I mean, even the dollar puts are $1.28, $1.51. That's kind of crappy.
I'm looking through all the different stocks today. There ain't a lot there. Let's see what else we got going. What time is it? That's 2:50. You know, the Dow's been strong all day. The Russell's been strong all day. The Nasdaq's been weak all day. I don't see any changes going into the close. I don't. And the S&Ps have been like,
no, probably not. I agree with you.
Yeah. Nope. I think they all close them right around here. If they're sharply unched today, what? Who had unched?
Not I. SPX going to be sitting at 6,600. So what do you think?
That's like a tie, by the way. That's like a tie in back rack. You know, you get 9-to-1 odds if you bet them inside of $10 higher or lower on the day. It's about 9-to-1 odds on a, whatever. No, it would really be like probably 4-to-1 on a 40-point expected move. Yeah, it'd probably be 4-to-1. And that's looking like where they're going to be today is nothing.
40-point expected move. You actually had about a 70 top to bottom dollar expected move.
The one thing I just want to caution people on is if you're short spiders, just be careful because there's a dividend on Friday. So if you have, let me just see.
The dividend's not on the dividend. It goes ex-dividend on the 20th, Thomas.
Spiders?
Yes.
No, it pays it Friday morning, doesn't it, on triple witching?
Ex-dividend on the 20th. That's Saturday. Yeah. So you're right. Yes, on Friday. So sorry. Yes.
So when you look at the October options, I'm assuming you already rolled from September.
Mm-hmm.
When you look at October options, I think the dividend's around $1.20 or something, isn't it?
Yeah, maybe a little bit more, $1.50, $1.60. I think it was $1.70 last month.
So you got to be careful, but you could probably you're probably safe all the way to the 6.15s in October.
I would say so. And if you're trading September, you're going to be pretty much every option, because with another day going by, you're going to have just about everything in between $2 away from at the money is going to have some.
If you're short in the money options in the SPY, roll to October. It calls. If you're short in the money calls, roll to October and roll tomorrow. Don't wait till Friday.
And if you've been short puts, can I have a loan?
You don't have to be. You cannot wait till Friday. You have to do it tomorrow. So if you're short in the money calls in September in SPY, you have to roll them tomorrow. Otherwise, you're going to lose the dividend. And then otherwise you're going to have to pay the dividend, or even a spread. If you have, you'll get hit for the dividend and not collect your dividend if you don't exercise your options. It's so much easier to just roll. The other one is if you're in October, you're going to have to be, I think, 6.15 and under is risky.
Tesla did open lower side, no 409. You were right earlier this morning. Now 423. I apologize.
Yeah, it opened down about $5, and then it was and then I think it was down 2 most of the day. Yeah. So anyway, I just bring that up because I think it's important to know about the SPY dividend. That's kind of the main thing.
Yes.
Let's see what else do we got here. Just looking, SPY's down 9, NASDAQ down 57. Kind of just trading. I mean, this is not a big enough move to have any mean reversion risk. This is just a move that everybody can say, look, nothing happened.
Yeah, this was a nothing. The market had everything priced perfectly is really what it comes down to. What do you think about Bitcoin these days? That doesn't seem to have the.
I hate it.
The upside that it's had. Now watch it rip by $5,000 in the next couple of days.
Hate it, but I don't have a position on there, so I don't really care.
Yeah.
So I don't really care. It doesn't matter to me.
It's a little heavy to me. It hasn't gone anywhere. I don't know why I say it, but it just seems a little heavy to me.
It can rip. All right, let's bring in Dylan, and we got Dylan and Ilya waiting in the wings.
Let's do it.
Gentlemen.
Hello, gentlemen.
Hello.
I had to go put on the full Harry Carey for the special edition of the overtime. I got to really take a good look at this Fed statement. So I had to.
You do know, Dylan, that the new face
Meta glasses.
The Meta glasses look exactly like your Harry Carey glasses.
Well, that's because I live in Milan, and Milan is this trendsetter for global style and fashion. And so I was a couple years ahead of. I mean, excuse me. San Francisco is known for many.
Don't choke on the complimenting of yourself, Dylan.
I know. I'm feeling very good about myself here. I got myself a little verklempt. San Francisco is known for many things, but they are not the vanguard of style. And so
not that style. I mean, we did invent what hipsters look like today in the 90s, but that's about it.
Yeah, but we tried to forget about that.
Let's just say
yet there they all are.
I like how Dylan's taking credit for the Harry Carey look in Milan. Full circle.
That's right. That's what's happening.
Now just grow you a beard, and then we'll have perfect symmetry here.
I tried to, I've tried, but it's all gray. It's all, I don't like it. I don't like it.
All right, boys. Well, we had a big Fed number. Dylan and I were doing truth or skepticism, and we kind of waited 2 minutes before we saw what was happening. Then we threw in the towel and said, okay, nothing. It's a nothing burger. What do you think here? Does it mean anything? I don't think it does.
Ilya? It's not a nothing burger, but it's not anything that the market is convinced about, because clearly the market didn't like it. I mean, just look at the wick, but then it came right back. So if you looked at the bonds, if you looked at the dollar, if you looked at the metals, you would see that this is not as dovish as the markets wanted this to be. If you look at the initial reaction from stocks, you see the same. But stocks came all the way back. They're basically closing unched. The dollar didn't run away to the upside, but it's stopped falling and come back in or come back higher. So moderately disappointing, let's say, and let's see what the dust settles like. But I don't think you extract any kind of strong signal here.
At 5 ticks off of all-time highs?
I mean, I think you have to look at this in isolation. It was 5 ticks off all-time highs yesterday and the day before and the day before that, give or take.
Right, and then you have a Fed decision, and
Right.
You would think if it was disappointing the market at all-time highs, that people would liquidate a little bit or lighten up on their.
And they did, and then it came right back to even. So if you look at where we are, we went pretty far down on the announcement and then came all the way back. I don't think the market is convinced about what this means, but I think if you look at it in context outside of stocks, which we know are biased to the upside, just generally as an asset class, I think if you look elsewhere, gold is down, yields are up, the dollar is up. It tells you the market didn't find this as dovish as they wanted, but they're not panicked. Nobody's running away with anything. There's no fire.
I kind of have to agree with the bat here, though. We're literally like, we're an inch away from all-time highs. It's not
absolutely. There's no question.
There's nothing.
And volatility collapsed by 4%.
Yeah,
this was a nothing burger, people.
Yeah. The fear is not. Does not
was
exist.
expected.
There is no fear.
Happened.
There's no question. If there was fear, we'd be closing at the lows where we spiked down initially. We're not seeing that. Russell gave it all away and is closing basically unched. NASDAQ, S&P closing unched. They'd be closing down if there was fear. There's no fear. But there is a level of moderate disappointment, and you can see it. We don't have a rally. We don't have a dollar sell-off. We don't have a bonds
I'm a bear.
rally.
You're going to have to do a better job convincing me that I can see it.
Oh, I'm not doing anything on the basis of this. I'm not buying or selling
Because my positions are not
different.
reflecting. My positions are not reflecting the. I can see it. I need some help here.
I mean, I'm still long the metals. I'm still on both sides of the dollar, short the euro, long the pound. I'm still a little bit short the S&P from yesterday's high. We'll see. I think you need at least 24 more hours to know anything. But the initial reaction told you the markets wanted something more dovish. And now they're going to figure out if they're going to not like that or not care in a more kind of significant way.
Dylan, you're the ex bureau chief. What do you think here? You've done 100 of these.
I mean, most of my favorite was what was his name? Anthony Del Giudice at the U.S. Treasury. They used to lock them in the bay. They had a room, and they can't imagine they still do this. They keep them all locked in the basement of the Treasury and would give them the decision ahead of time. And there's no internet, there's no nothing, so that all the wires.
I think you're thinking of Trading Places,
No, this is the thing. And they lock them in there, and they'd make them write up their story before, so that way when it comes out, they can put out a full 1,000 words because they have the statement in the Wall Street Journal and Bloomberg and whatever. But the bottom line is, I'm getting short now. I believe that this is the top for the year. I believe now is the time to.
Wow.
Now we're talking.
Wow, a little Dylan Radigan going out on the ledge here. I haven't seen
Ring the bell, gentlemen.
You haven't gone out on the ledge in a long time.
He started a little bit yesterday. He started yesterday saying it a little bit.
Yeah, well, I'm here. Yeah. I'm talking, use the low vol, just naked put buying. I'm with recommend it.
I love it.
Not a professional, and I don't call the lawyers, but I highly recommend naked put buying.
All right,
make your own decisions, people.
How untasty of you. Let me just tell you.
That is.
All right, we're gonna sign off. Tony is on air tomorrow morning, and I will see everybody Friday morning in New York City at our live trading show.
Amazing.
Enjoy, people. Have a great night. Peace.
Right,
ciao,
bye.
boys.
Bye.
Ciao, Boogie.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling the whole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And we are back. We have black t-shirts and glasses going on in San Francisco and in Milan. Obviously for me in San Francisco, for Mr. Radigan there in Milan. And then the face of happiness, Mr. Glenn Freiberg there in Chicago. Gentlemen, how goes it on this Fed day?
I put on my Sunday best, for Jerome and the Fed. But lesson learned, never again. It's black t-shirt, and I'll throw on my.
It's funeral attire only for.
Even if you just need to wear glasses with a non-corrective lens, just as a style point, Glenn.
I've got contacts in, so I just objectively made the wrong decision today.
Okay, it's all right. I mean, listen, I make probably 50 wrong decisions an hour. So.
Thanks for having me, guys.
If you only made one wrong decision today, you're doing very, very well.
Indeed.
Well, you know what made the right decision? It seems like every market priced it perfectly. What do you say?
Priced it perfectly. I mean, that was what we didn't get into that with Tom and Tony, but what I was thinking when we were talking was it actually speaks to both the Fed's good job on the Fed for sort of conditioning expectations to the point where they were on the pin there, and good job on the market sort of guiding the Fed to the pin. In the classical tasty trade world, this is about as good as it gets in terms of selling vol before the news and cleaning up after the news.
Well, let's take a look at the charts here because they are interesting. This is a chart of the S&P, and what I have here is a 30-minute chart. So one of these bars is 30 minutes, and obviously it doesn't take a genius to figure out this is where the Fed policy announcement is. But I would point out this long wick to the downside, which tells you what the markets thought of this. Now, without quibbling as to whether the markets wanted more cuts or fewer of them, I think that much is clear. I think you look at this and you go, well, it seems like the market was moderately displeased, but not in any kind of a way that mattered, at least for today. Because clearly what we have is, they cut. That rally doesn't hold. We then sell off aggressively and finish the day unchanged. So in my mind, the market priced this well-ish, but clearly this wick would tell you that at least in its initial reaction, the market didn't like it, or in essence wanted more dovishness than it got. If you consider the response from the dollar and from bonds and from gold, you also get some interesting dynamics here. So gold, similar story. It initially didn't like it because ostensibly it thought that this was less dovish than it wanted, but ultimately didn't go anywhere. While we're on the metals, let's take a look at silver here. More convincing of a disappointment, but it's silver. It's jumpy. Let's look at something that isn't jumpy, usually the euro, and for that matter, what that means for the dollar. And you find that, again, initially, good, rate cut, but then the dollar ends the day stronger. And you see that across sort of versions of the dollar. Here's the pound. It ultimately looks unchanged, but that's after it erased all of a very significant intraday rally. Here's the yen. It is down, having erased an attempt to extend higher. Here's the Canadian dollar, where we also had a rate cut today. It's a little bit more convincing, but of course, they also cut rates, and theirs was also expected. So it does seem, to me anyway, that the initial kind of response from markets was, this is not what we wanted to see, but we're not sure if it's anything we need to worry about. And so we'll see now where the dust settles. But ostensibly the readout from the markets is we wanted this more dovish than it turned out. Thoughts?
You're saying that because of the absence of, you're saying the absence of a rally is the evidence of that opinion?
No, I'm saying it's not just an absence of a rally. There was a sell-off. That sell-off just didn't hold. But the response, I mean, here's NASDAQ. What did it do on the news? It went down here.
Mm-hmm.
Now, by the close,
the dippers are there within an hour. I mean, it lasts nothing.
It will exactly. And so we end up unchanged. And so now we find out what all of this means with a day of digestion. I mean, this is the policy announcement. The response is negative. We then come back and ultimately end basically where we started. So on net, is this a market that's happy with the outcome? I think very clearly no. The question is it unhappy? And I don't think we know that yet.
Yeah, I think equities are harder to read from this in terms of sentiment, but what did surprise me is how unchanged or like the dollar is and gold as well, because we had the run up to a lot of key levels. I was looking at spot markets, but looking at, the euro hit 119, Australian dollar hit 67 cents. We saw a lot of ambition running up. And then when that was erased and the kind of outcome was, okay, dollar a little stronger, it did surprise me that we didn't then drift even stronger in the dollar's favor and in against gold as well, just because of the week we've had so far. Monday and Tuesday, kind of the run up into this announcement, felt like more of that dovishness was baked in, priced in, that it surprised me that we didn't even settle, as low as we started the week in the euro and gold. So
this is a very, very good point. I mean, take a look at what gold did here, in case you were wondering whether the market thought that this outcome was in line or not. I mean, it's not rocket science here. We saw gold rallying into the news. The news came. We see these large wicks here where the markets thought about the news. It went this way and that way, and then it resolved. And gold went down.
But what sentiment does gold represent at this point? I mean, I
think gold represents anti-fiat and anti-interest rate sentiment usually. And so if
you're saying the gold weakness means not as many rate cuts as soon as we would hope on the margins, and slightly stronger dollar.
Yes.
I mean, this couldn't be, we're shaving truffles.
Well, and again, when you look at where things actually closed, you don't have conviction. What you have is zooming in on what this is, which is a 15-minute chart and going, here's the market's reaction. They reacted in a way where they got something less dovish than they wanted, but they're not prepared to lose any sleep over it today. And the question is, does this calculus change tomorrow? While we're here, let's take a look at the actual forecasts and what the Fed actually said, because I think that's an important part of this equation here. And I'll put it up on the screen so that we can see. Here's the Fed's summary of economic projections, and I think the meat of what we need to focus on is right here. So take a look. What do we see for expectations? Growth expectations were revised higher, not lower. And you see it across the entire outlook here. Higher, higher, higher. The unemployment rate was revised moderately lower. Lower for 2026, lower for the year after. The inflation outlook mostly unchanged, but for next year a little bit higher, ostensibly because the pass-through of the tariffs continues. A little bit higher both for headline and core. And take a look at what happens with the rates projections, because this is fun. So we were looking for 50 basis points in cuts in June. Now we're looking for 75. And relative to this year, we still only have one cut that's priced in for next year, from 3.6 to 3.4. So the actual pathway from this year into next and into 2027 is completely unchanged. What we've changed a little bit is how many rate cuts we have on the menu for this year, which, by the way, to Glenn, to your point, the market's already had that third cut mostly priced in. If we take a look at what these expectations looked like, here's October, and you can see that for October, yesterday, 69% chance of a cut, today, 82. A week ago, 68, now 82. We knew the second cut was coming in October. It's there. Here's December. Here's the third cut. A week ago, 68%. Now more certain, but we're, in any case, looking at a situation where both of these cuts at these next Fed meetings were, for the most part, already in the forecast. And so when we then look at what the Fed did here, in keeping only one rate cut for next year, this is, I think, where the disappointment comes from. Moreover, this change here, these three cuts that we now expect for this year, take a look at what the actual dot plot looks like and tell me if you can figure out where the Trump administration's nominee marked his dot. So here's Fed officials here, right? And you can see that there's 9 of these that favor a more hawkish view. There's 9 of them that favor a less hawkish view. And then here's the break. I mean, clearly,
You think that's the next
this
Fed chair?
average is more than a little skewed.
But
when one person is calling for, what, 5 cuts?
But that one person might be in charge in, what, 5 months?
Well, that's not how the Fed works. And Powell answered this today, right? So the Fed chair can't make these calls solo. But it is certainly interesting that we have, sort of very clearly the introduction of a view that contrasts dramatically with the rest of the committee, and that this will now be a feature. And we'll see, Glenn, to your point, how this evolves. But the forecasts here, they're not dovish. They're not dovish at all. In fact, the Fed is saying they're going to cut only one time next year. The market thinks it's like 3. And that probably is how you end up with this kind of kind of disappointing, but not anything to run away with today kind of an outcome. That slight kind of tinge of disappointment, that feels like where it's coming from.
So the slight run-up was, or the instant reaction was, okay, this looks dovish when you sum it all into one number, but then when you start digging through it, there's so much uncertainty and dissent, perhaps, that you can't really put as much weight to the aggregate number. And Powell kind of spoke to that as well, saying that it's meeting by meeting.
Right. And I mean, that's not necessarily unusual. You've had that be a mantra for the Fed for a while here, but I think that's how you end up with gold spiking lower, with the dollar erasing its losses. I mean, here we have the euro again. I mean, obviously the euro was all the way up here, and then this thing comes out, and not only does it erase all of those gains. It actually finishes the day a little bit lower. I mean, here is, if ever you wanted to see a perfect distillation of what the market thought of this announcement, here it is. Rate cut. Wait. Hold on a minute.
You're suggesting that the weight is not as many cuts as we'd hope for in the future, or the weight is growth slowing, we're cutting rates, or some combination thereof?
It seems like not as many cuts as the markets thought was the essence of the reaction in the forecast. And also the revisions are not dovish. Growth is revised higher. Unemployment is revised lower. Inflation is revised higher. They're not big revisions, but those are the revisions.
The marginal movement is slightly more inflation and slightly less jobs.
Slightly more jobs.
Slightly more jobs.
Yeah. So this is not a revision that would tell you the Fed is in dovish extrapolation mode.
Mm-hmm.
In fact, there was one comment from Powell that I thought was particularly telling. He said, you can think of this as a risk management cut in the context of the risks the labor market having risen.
Mm-hmm.
But this is not, oh my God, the economy isn't good kind of a cut.
Man, the dollar at $1.18, huh?
Yeah.
Terrible.
Yeah. I mean, and
so, I mean, it just seems like a hell of a nice time to get long the dollar, especially when you do have the possibility of the tariff Supreme Court madness next month.
You do, but that's next month. And it seems like here, just looking at the liquid futures contract here for the euro, I mean, if ever there was a spot to find a top and start to head back lower, I mean, this is like the first page of a chapter on support and resistance in your favorite economics or your favorite technical analysis textbook. I mean, oh, look, a former high. Oh, look, we tested a former high. Oh, look, we failed the test at a former high. So if ever there was a spot, this looks like a good one. I'm already short the euro for what it's worth, and I'm a little bit upset.
Using FXE or using futures?
Using micro futures. So I'm outright short M6E. And you can actually see it on the screen here where I'm short. So I'm short a little bit underwater here. I got in a little bit earlier. You can see actually the dotted line here where I did. So there's been a few days here that this has gone a little bit the wrong way, but I still have the position and I don't see any reason to get out of it. By the same token, though, I'm long the pound. You can see where I did that on this break higher here. So I'm not one-sided on the dollar. We'll see what the Bank of England does overnight. I have a mind to hold this for now, but my sense is that the dollar is probably done falling.
And for for the dollar and gold and a lot of these global assets, do you think all the players that wanted a initial reaction are in, or do you see some substantial moves in the Asian session, the European session tomorrow, before we get another look at it in the U.S. session?
Oh, absolutely, and I think that's a very good point. The Fed comes in relatively later in the day. I mean, we're talking about what, 2 p.m. Eastern. By then, European markets are closed, and so especially the liquid ones like Frankfurt and London and Paris, and so Milan, and so you look at this and you say, okay, well, Europe hasn't done anything on this basis yet, neither has Asia. And so we're going to see what the follow through is, if any, overnight. I think certainly the U.S. markets are how they open tomorrow and what happens with the benefit of a little bit of a digestion will be, I think, an important question. Because the markets they didn't get the dovishness they wanted, but they also didn't get hawkishness in a way that's spooked them for now. So now I think basically the markets have to decide, and maybe tomorrow we'll get the first signs of what that decision is. But if the hope was that expansive Fed stimulus is going to keep the rally juiced, we don't see evidence of that here.
Yeah, I think in my mind, overnight gold's the most interesting. We'll be able to see how much. I think the Asian session is really interesting for that, right? I mean, they've been propping gold up from a demand perspective, and we'll be able to see how much of the gold market right now was betting on those lower rates quicker versus risk sentiment. I don't think we know the full picture from the equity reaction, like you said, until tomorrow. So I don't know. Do you see metals moving drastically in either direction?
Drastically, maybe not, but we'll see. The dust is still very much settling on this. Dylan, yesterday when we spoke on this show, we were talking about you're going to buy them hand over fist this morning and just avoid thinking at all costs and keep buying NASDAQ. Is that where you still are?
No. I mean, I believe we should. I'm not. I am strongly of the opinion, and will implement the opinion tomorrow, of a short NASDAQ, short gold, long dollar. I call it the Radigan triple.
I like it.
We have come to an inflection point going into the fall. I believe the price levels are absurd in the NASDAQ. I believe they're preposterous in gold. And I believe they're an outrage in the dollar. I think all three are on meaningful price extremes. And I actually am shocked at the lack of, that the implied volatility is where it is on a lot of these things. And so I just think it's actually a beautiful time to be short the NASDAQ, short gold, and long the dollar. Obviously, there's a huge amount of risk for me in that by virtue of all the thinking involved. But
it does involve thinking.
With that said, I just think price extreme rules the day. I'll put it on small, and then if it starts to work, I'll get bigger, I suppose. But
that would be the way I'd do it.
And I'm inclined to do it, with openly directional put buying, honestly, on the NASDAQ and on gold, and maybe calls on FXE calls or some such thing on the euro.
Well, I mean, if we look here, just really basically, and say, okay, let's say we come into 2,300 on the NASDAQ as like an initial sort of thought process for a pullback. If we wanted to look at what, and let's go risk defined here, what a put vertical would look like here, and let's say we'll go sort of tasty methodology adjacent, and we go, in this case, 44 days out. If we take a look at a move back, let's say, over here to like 23.5, and why there? I'm just looking at pockets where liquidity seems to be, to look at sort of some sense of getting filled. And obviously this is after hours, so it's thin. But if you look at the risk reward here, I mean, it's fantastic. I mean, we're talking 3-to-1 almost. So the vol is cheap enough that even just a simple vertical like this is going to be asymmetrically enticing. If we wanted to get smaller, we could say, for example, the micro contract for NASDAQ. And let's do this same exercise here. So from where we are just at the money, out same distance here. Again, basically a 10 times difference, but the risk reward holds and still looks incredibly attractive. And if we did it even smaller as far as capital allocation and did it in ETFs with the Qs, again, same exact exercise, and we'll go to sort of a comparable level here, let's say somewhere here, give or take. I mean, again, not quite as amazing of a risk reward, but still very, very impressive. Even if you sort of hem it in and say, okay, you know what, I'm only attempting to go down to 580 on the Qs, which, I mean, obviously, if you wanted to go to the same levels here, you'd be all the way down to 560 or so. But even just a pullback into here somewhere, you still have very, very good risk reward, at least 2 to 1, that you lock in a risk defined way, because that's how cheap this vol is. So even in a risk defined, way, I mean, if you were going to bet here, do you bet long, or do you take at worst ish 2 to 1 risk reward in a risk defined way to bet on even just a modest pullback? I mean, the pot odds they scream short at me.
I couldn't agree more. I mean, could we flip through gold for a second?
Absolutely.
And then the dollar?
Absolutely. So let's do this same exercise with gold. So here's the active gold contract. If we get a pullback, let's say from here, and again, let's be modest. Let's get a pullback down to this former high from late April. Let's not get greedy. So back down to 3,600 ish. If we did that same exercise, and again, let's do it 41 days out, although I would probably err on the side of 68.
I was going to say, does this the tasty 45 days hold in this exercise? Just as a thought experiment, does that align with your thesis of?
So we're using it, or at least I'm using it here as a kind of variable to hold constant. But recently, what I've been doing is reducing my delta risk, my directional risk, by looking at longer term durations. And with the bonds, man, that really helped. I had a 80-day spread on, and it had to go 70 days to really work. But in those last 10 days, they paid for all of my sins wanting to short the stock market and then some. So thank you, bond market, and thank you, extra duration. So if we wanted to go, let's say even to 36.50, we're not even going to get very excitable here. We're saying like even to here or something like that, where we have a pocket of a pocket of liquidity. That looks like about 1 to 1. If we went all the way to 3,600, you get a little bit better. Although I would argue this is not the world's greatest risk reward, and it's probably because if you look, whereas NASDAQ had IV rank of 15, we're at 27 here. So vol is a little bit more expensive And I suppose you could approach this by selling calls and doing it this way, where rather than essentially looking at it from a perspective where you're sort of outright just buying puts, betting that this thing will go down, maybe you sell somewhere around here and maybe you allow it space. If we look on the chart here, where's our top? Let's say we can, we can keep this pretty tight. 70, 75 maybe. So if we consider that sort of right here, perhaps something like that. Now we can see, okay, this is starting to get close to 1-to-1, and obviously this would result in a credit. So not bad. When you can get close to 1-to-1 selling vol, pretty good, considering you're obviously a premium receiver. So that might be a better way to approach this side of it. Again, if you wanted to do this smaller, you could do it in ETFs. So you could take GLD and you could go 44 days out. And if you did short put here, you might say, okay, let's pull back to the top of this range, like 318, 320. That would be, let's say, something like this. Let's say 322 to go where the liquidity seems to be. And not bad. Not bad at all in the ETFs.
2-to-1-ish.
2-to-1-ish. Not bad at all. And if you wanted to do it the short call version, then let's say you let yourself go up to 340, 345, something like that. And then you'd say, okay, even if you kept it this tight, again, about 1-to-1, if you went out to 345, now you're getting a little fuzzy. So unless you'd want to keep it real tight, doing it through GLD and keeping it simple and just buying puts, pretty straightforward.
Yeah, what's the case against my naked put buying mentality other than the obvious?
The reason that I like using verticals here is, number one, I like having defined risk because these markets are funky. And so I like basically forcing attractive risk reward onto the position and basically say, you know what, I'm going to make sure that as I roll this dice, the odds are in my favor. The risk reward is in my favor, and I'm going to lock that in up front. And if that means that my worst case scenario here, let's go back to this version of events here. The way that I would structure this would basically be if I've got, let's say, about 20 grand in this this account that I use for the Tasty follow page, where I put all the trades that folks can see, and you can see the risk here is about $500. I might hem this in a little and get the risk down maybe to something a little bit more manageable, such that I'm not risking more than, let's say, 2% of the account. So I might do something like this, and obviously there's sort of room to fudge it, but maybe something like that, and basically say, okay, I'm going to risk 235 in a 20 grand account to be almost 2-to-1. And obviously, this is after hours on a ETF. So we'll see what these quotes are and what this liquidity is when the markets reopen. But easily, sort of the best 2-to-1 bet here seems to be something like this. And you can see why it's good. I mean, the volume here is much higher than anywhere else you look. If you wanted to go further out and you wanted to say, you know what, I'm going to give myself all kinds of time, then things get really interesting, because then you could pull this in to maybe hear something, maybe a little bit more, and your risk reward still looks very solid, and you have lots and lots of time and less immediate sensitivity to what's going on with directional risk. So you could give this some time to kind of figure its way.
What's the
And long dollar?
For the dollar, I think the most straightforward way of doing this is actually to just outright sell the micro future. And I think here, the most kind of direct way seems to be, you know what, don't get all stuck on options for this version of it, because then you have to start thinking about, well, which instrument do I use?
You don't like FXE puts?
I mean, if you did FXC, let's price that out here. So here's FXC.
You're also getting, if you moved over to the spot market, long dollar right now does yield you positive carry. So if
We're
you're
gonna
less
get there in
certain
just a
on,
second.
yeah.
But yes, you're absolutely right. And in the futures, the difference is that positive carry is already baked into the contract. So you're getting the positive carry, whether you're in the futures or in spot. In spot, the positive carry is a thing that occurs independently of the spot price. In the futures, it's already baked into the price of the instrument. So lest you think that the market is going to give you an arbitrage opportunity, it is not. Whereby, let's say you sell the spot, buy the futures, and extract carry. I can't tell you how many people have brought that idea up over the years, going, well, if spot earns positive carry, futures don't have carry on the face of it. Of course they do, but if you're not terribly familiar with the way a futures contract is structured, it's not the way spot is, where every day you some carry either adds or subtracts from the account. And you go, oh, well, fantastic. I'm just going to directionally neutralize everything, be long carry in spot, offset the direction in futures, and just collect the carry. Sorry. Markets are too smart.
I heard you. The last pitch for that little TastyFX tab I will give, though, is you would save on commissions. Commission-free TastyFX. There you go.
And we'll get there in just a second. I think that there's really, I mean, the capital efficiency argument, I think, is by far the most compelling. And we'll get there in just a second. I am, by the way, so I started my trading life in spot, and I love it dearly. So you get no beef from me there. If you wanted to look at FXC here and do it this way, once again, do a. I mean, I suppose you could, again, in a straightforward sort of way, say here, okay, we're going to buy a put vertical, and let's say we aim for a meaningful euro turn. So let's see, down to 105, let's say, just for the sake of argument here. If we went 93 days out, I mean, the risk reward is fantastic. 3-to-1.
Mm-hmm.
I mean, that's excellent.
What's the
and again,
problem?
I mean, there's a couple things here. It's not very liquid.
Big problem.
Not the biggest issue, but it's
Still a
there.
problem.
It's there. I mean, getting fills is fuzzy. I generally like to do currencies in either futures or spot because things do happen outside of U.S. cash equity hours, and both the futures and the spot let you get out if, like, the ECB or the Bank of England does something that your position doesn't envision, or the BOJ does something wacky, or China says something odd and the dollar goes haywire. If you're in the ETF here, you're not doing anything about that overnight. If you're in the futures or in spot, you can adjust your position right there. Looking at spot, I think the biggest and most compelling argument for spot, and you can see, I have a trade on here. Where's my dollar yen position? So I'm a little bit long the dollar against the yen here on the spot side. Why on the spot side? Because there is no good way to do it on the futures side. 6J is a huge capital intensive position. And if you wanted to do verticals even, it'd be expensive. Again, it depends on the size of your account, but still. And there's no liquid options on micro yen in the futures market. So for me, dollar yen as a spot instrument to be essentially short 6J in spirit, that makes a lot more sense. Moreover, you could really adjust the size here. So 0.1 is essentially the same as what would be a micro 6J future. So it's a 10K lot. If you wanted to, you could go. How low could you go here, Glenn? 1K. So 0.01 of a standard 100K lot. So you'd end up. I mean, you could, if you were not sure, and if you thought, you know what, I don't know about currencies, whatever. I don't have any confidence in the dollar. It's had a terrible start to the year, but it does look like Dylan's onto something. I'm going to take a stab. On the spot side, you could put on a trade that's 1/10 the size of a micro contract. So 1/10 the size of M6E, you could do here, let's say if you wanted to look at the euro and you wanted to go short the euro the same way you would outright go short M6E. If you wanted to do this and do it like that, you could do it. And you'd have relatively small exposure.
Right. Margin, at 2%. So that you could get in there for $25.
You'd make less money also if you were right? So there's all the options there. But in my mind, I think, and obviously I'm doing it this way, the most straightforward kind of capital efficient way, if you wanted the full size micro, so you wanted essentially 10K in exposure, the future makes a ton of sense. As does the spot, by the way. If you wanted to just outright go short 10K Euro USD in spot, I've got that on as well. I have it on both ways.
Dylan, is the Radigan trade, is that also meeting to meeting? Or are you pretty confident through the end of the year?
No, I'd go meeting to meeting, and I would reevaluate. I would say the Radigan trade starts now. and I would be confident to hold it through the next meeting. And then I think, again, only a fool believes on Thursday the same thing he believed on Tuesday, no matter what happens on Wednesday. And so I think we have to maintain an open mind and collect new information. But I believe that that today is the day the Radigan trade starts. It's long dollar, it's short gold, it's short NASDAQ. Call your friends, call your neighbors. I think they'll be happy.
I love it. I absolutely love it. I
don't know. It's too bad Vecchio's not here. He'd probably be horrified.
Yeah, he'd probably tell us that we suffer from a
because
terrible.
the other counter narrative, just to play Vecchio for a second, is
yes.
The Fed just cut rates, told you inflation risk is higher than expected. Fed told you it's not going to cut rates as many times as everybody hoped, and the market did not fall.
Yes, I think that is a very fair assessment.
In the face, straight in the beak, and it held its own. It's still there.
Yep.
It's undeterred. It is unperturbed. And even in the face of being told you will not be getting as many rate cuts as you might hope, even in the face of being told that there is a little more inflation than you'd like to know about, and even being told that the Federal Reserve will not be doing as told by the grand and mighty President of the United States, the stock market's like, okay. Like it took a punch today, and it's okay. And maybe this is just a moment of gathering itself before it launches forward in more thoughtless madness of the supernova.
Maybe. That is, I think, entirely
that would be the argument or Radigan of 2 days ago.
Totally plausible. And I think very fair as a readout where you go, you know what? Obviously, the market didn't like it because of those downside wicks. And then it shrugged it right off and said, you know what? Fine, whatever.
Fuck it.
And that's fair. That's entirely fair. I suppose we'll find out in.
And where do you come down between, stiff upper lip and call it off?
Well, so I'm going into tomorrow still long the metals, both gold and silver. And I think it's not difficult to see why. So here was the test of former range resistance turned support, and it held. So the up move is still there. So I didn't get out. Silver, similar story. You came back, you retested this former range top as support. That held. So cool. Okay, I'm still long. If it breaks down, I'll get out. And I'm a little bit short the S&P off of these highs here. So you can see where I got in here was basically right there. So still holding that. We'll see. And as we just said, I'm on both sides of the dollar. I'm short the euro, which, this looks very encouraging here. And I'm long the pound, which held a little bit better than the euro. So encouraging there. So I'm kind of on both sides of this, where my exposure in stocks is balanced by my exposure in the dollar and the metals. And I'm of two minds on the dollar depending on the counterpart. So I'm straddling the fence. Tomorrow, hopefully, we get a little bit more conviction. And I'm probably going to make a decision and just pick a side. And some of these positions will go off and some of them will stay on, depending on what that side is. But before we wrap it up here, I promised in the green room before the show that I'd ask this, and I wanted to get your take on this, Dylan, and Glenn definitely weigh in as well. The president has come out and said that what he'd like to do is go from a quarterly earnings reporting to a semi-annual setup. So companies would have to report earnings not 4 times, but 2 times every calendar or fiscal year. So every 12 months. Dylan, thoughts? Is this a loss of
I know, I agree with that. I mean,
transparency?
I believe that capital allocation and risk is something that plays out over 3 to 5 years for any meaningful, any idea of consequence, to build a business or to grow a business or to do anything that is real as a business. I believe is a 3 to 5 year time window to have an assessment as to what's happening. And so I think it makes much more sense to check in twice a year in a meaningful way with a real audit and a real temperature check on where we at and what's going on relative to reporting to investors, reporting to the entire sort of financial community and all the stakeholders in a given business. But I do think that the quarterly process is very burdensome, requires a tremendous amount of overhead to administrate, and incentivizes bad long-term capital allocation in favor of short-term strategies that can boost the stock price, for which many of the CEOs and executives have a compensation tied to the performance of the stock. And so they may not have a long-term contract at the company. And they have a strong incentive to goose the numbers in the short term through maybe things that are not in the best interest of the business over a long time, but are in the best interest of the management of the company at that time. So I've always thought that quarterly reporting creates a lot of incentive for bad capital allocation and bad decision-making for the long-term interest of a business. And I think twice a year is much better.
I agree. I think it's sound, it's rational. There are a ton of variables, like time being one of them, going to semi-annual, or removing some of the hoops to jump through, like forward guidance. I think Buffett said that a while ago, of not being a requisite. So I think there are a couple things you could tweak to reduce that being such an overhead on companies and still give markets some indication. It would be an interesting exercise, nevertheless. I don't know if, as active market participants, if removing all of those quarterly event risk would be a little less fun. But yeah, from a company perspective, I think it makes a ton of sense.
I agree. I don't find myself, admittedly, in a lot of agreement with the administration on economic matters, but on this proposal, I concur. I think, and it seems like all of us do. In Europe, you already, if I remember correctly, in Europe, you're already for most markets at a semi-annual clip, and I think
are they the role models though?
Reporting. Say that again.
Should they be the role models though? Europe, maybe they
in
didn't have enough growth to report on it quarterly. We have good numbers. Why not give good numbers every quarter? Here, more good numbers.
Well, as long as they're good.
Now he's being a wise ass.
Somebody's got to do it.
And taking
more money. Would you like some more money?
and taking pot shots at our beloved European Union.
Yeah, please.
All right, that's all I got.
I think we're out of time.
In fairness, there are major economies that report quarterly, but I think the essence of and the spirit of the proposal, that is, we don't need to spend all of the resources that companies spend every 90 days to go through this exercise. We could have companies report in a way that is less burdensome administratively, and the markets would fill in the gaps in between just fine without the song and dance. I think that makes sense.
Agreed.
With that, overtime is out of time. Thank you, gentlemen. It looks like we're heading into tomorrow with a reformed, bespectacled Dylan Radigan ready to cut the head off the first 6 months of the year's moves. I like it.
Put them in the ditch,
with it.
baby. Stick it in the ditch.
I'm with it. I'm with it. Don't go anywhere. I'll be right back after a brief commercial to dig in absolutely exhausting and exhaustive detail into this Fed announcement on macro money. So stay tuned. We'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
The Fed rate cut is here, and the reaction in the markets is nothing if not interesting. What does all this mean, and where do things go from here? That's what we're going to tackle here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is unpack all of what just happened and try to make sense of where things are heading from here. There's certainly a lot to break down and a lot to consider, but the markets don't make it easy for us here today because what we end up with is not exactly the most convincing sort of price action one way or another. We end up instead with a sort of strange stasis ultimately, but the intraday price action does seem perhaps to be telling us at least how the markets read today's announcement and where it seems the overall story here is looking like it might develop, at least at first blush. So let's begin with that price action, and then we'll sort of back our way into what the makings of it might have been. So here's the S&P 500, and I think the most kind of glaring thing here immediately is it seems like we're looking at a market that wanted to go down and then didn't. So as we get the Fed news, we can see that things get a little bit soggy. The S&P dips down and then comes back and ultimately closes little changed. So a bit of a sense of maybe the markets didn't get exactly what they wanted, but also not exactly anything that the markets necessarily need to, at least seemingly, be concerned about. Then we look, and by the way, the NASDAQ looks about the same. We look at gold, and it's a similar sort of thing. Silver is a little bit heavier, but neither it nor gold ultimately break down beyond what was former sort of range top resistance. You can see it's now acting as support. This wick dips down. And again, same sort of readout. The market seemingly not all the way happy with this, but also not prepared to jump out the window on what the Fed is saying here, not willing to panic and get off its square. It's a little bit better sailing for the US dollar, and here the dollar is a little bit stronger. We're looking at the euro here as a sort of benchmark, and we can see here was the former swing high back in early July, and we end up tagging it and ultimately holding. So the dollar a little bit stronger than the signal we get, a little bit more convincing than what we saw in gold and what we see in stocks. Bonds ultimately don't go anywhere. They essentially remain locked within their range. Yields tick up just a bit, and they do it across the curve. The 30-year, the 10-year, the 2-year yields uniformly a little bit higher, but within the same range that we've been watching basically since the beginning of the month. So not really a strong signal one way or another, but the dollar does manage at the very least to head off what would have been a breakout earlier in the day with this extension above the high. And so the cumulative tone here, seemingly, well, gold didn't love it. Stocks didn't love it. The dollar was a little bit higher. And altogether, the sense is that the markets wanted the Fed to be more dovish than this turned out to be. And now they must decide whether they don't like it in a lasting, more meaningful way. Because for now, it seems like the end of day is kind of a head scratcher, but the ultimate kind of positioning and the ultimate response is hardly panicky or bearish or anything of the sort. So why did the markets kind of shrug at this? Why did they find this to be not what they wanted to see? Well, looking at the summary of economic projections here, we can see that for all of the conversation about rate cuts and so on and so forth, what we find is the growth expectations uniformly here got nudged up for this year, next year, and the one that follows. The unemployment rate revised lower. Steady for this year, but what revisions there were lower. Inflation, mostly steady, but what revisions there were higher. And then we look at the outlook on rates. This is perhaps the most interesting part of this equation. Now, the median rate was 4.4 before today's cut. We can see in June, the Fed said for this year, we're going to be at 3.9, so that's 2 cuts from 4.4 to 4.1, and then down again to 3.9. So that gives you sort of a sense for where we are now, which is 3 cuts narrowly. Now, that seems like it's dovish, but the markets had most of those 3 cuts already discounted before this meeting. In fact, we can see here's the expectation for October. The day before the meeting, we can see we were somewhere around 70%, and now we're around somewhere like 82 for a cut. If we look at December, the 3rd cut, again, somewhere around 68, 70%. Now we're at maybe 81 for a 3rd cut. So we were, and this is the most important bit, it seems, on both of these, well over better than even odds, even a week ago. Never mind the day before the meeting. So another cut in October was, for the most part, already priced in. In fact, well priced in. Better than 50-50 by a long mile. And then a 3rd cut, likewise. So if we then take a look at December, same thing. Well above 50-50 shot for a 3rd cut even a week ago. And, of course, yesterday. Now, there's been more conviction in all of this, but it's not like the Fed is telling the market something they weren't already looking at. Moreover, when you consider what got you to these 3 cuts here, let's take a look at the dot plot, and you can see here is the range of outcomes calling for 2 cuts or less. Here's the range calling for 3 cuts or more. And we can see that 2 cuts or less and 3 cuts here is an even split, 9 and 9. And then we have one lone dot that apparently is so aggressively dovish that it's looking to see a much more expansive rate cut cycle, even just this year. It's calling for rates not to come down to the 3.5 to 375 range, but to the 275 to 3 range. So almost a percentage point more dovish than what the markets have in mind, certainly in what other Fed officials have on the board. And so we very, very narrowly arrive at this 3rd cut. And part of that is the median is skewed by this very out there dot. One can only surmise that's the dot for Stephen Micron, who the president just managed to squeeze onto the FOMC before this meeting. So not exactly the most dovish signal here, since the market's already had it discounted and since the average is very clearly skewed by a single dot. The bigger story here is for next year, there's still only 1 cut. In June, it was from 3.9 to 3.6. Now it's from 3.6 to 3.4, but still just the 1 cut. And that, of course, clashes directly with what the markets have in mind. They still have 70 basis points on the board for next year. So that's at least 2 cuts with a strong 80-ish% chance of a 3rd. And of course, the question continues to be, if there is this disconnect, if this is what we are looking at here, then are we going to have a situation where the stock market is going to have to turn lower in a disappointed fashion because this looks like it's more dovish than the Fed is now routinely endorsing? And do we have a bottom in the dollar here because we're not going to get more dovish on this outlook at this point, and so the dollar is basically out of reasons to fall? Looking at the comments from Fed Chair Powell here, we sort of get a sense for which direction we might be going. First, we get that there's a slowdown in economic activity. The Fed chair thinks this reflects mostly consumer spending. And of course, we've talked here on the show before extensively about the GDP numbers take on this in the first 6 months of the year. We, of course, don't have third quarter data yet, but for the first 6 months of the year, GDP numbers give us the weakest consumption in 5 years, with the reference point being the first 6 months of 2020, which, of course, is the COVID lockdown. That is an ominous comparison. We see that the justification for the cut here is that the balance of risks have shifted with downside risks to employment. Labor demand has softened, and job gains are running below the break-even rate. That's after that revision of annualized figures where rather than having an average clip of about 150,000 jobs added after the revisions, we looked more like half that for the preceding 12 months. And so indeed, it does look like we have a significant rethink there. Perhaps the most critical part of this equation is the Fed chair is saying, I am not blessing what the market is pricing in at all. There was no widespread support for a 50 basis point cut today. Makes sense in the context of expectations. And perhaps most importantly, you can think of this as a risk management cut. Now, what does this mean in the context of expectations? Well, if the expectations are calling for an expansive easing cycle, in particular next year, the Fed chair is very clearly saying that is not what we're endorsing. This is more like a maintenance move because the balance of risks seems to be shifting, where before we were mostly concerned about inflation and not really concerned about the labor market. Now we're a little bit more concerned about the labor market. You can see from this comment here, Fed Chair says, I don't think we can say that policy no longer warrants a restrictive policy setting. And with inflation at a 7-month high and in the vicinity of 3%, it's seemingly logical why that is. So if the story here seems to be that the market wanted something more dovish and is in fact baking in something more dovish, we can see it with the naked eye right here. And if what the Fed did with their expectations is undershoot that baseline, well, then one might reason that the path of least resistance for stocks is lower, the path of least resistance for the dollar is higher, and what we choose to think about bonds and gold probably depends on the interplay between the rates outlook and whatever risk premium is in the market around uncertainty, not the least of which around things like the Supreme Court's impending ruling, perhaps as soon as next month, about the legality of most of the Trump administration's tariffs. Lower courts have said that those tariffs are conditional on invoking national emergency grounds are illegal. And now we're going to have to see what the Supreme Court says and whether they let the tariffs stand or they don't. But as we just spoke about on Overtime with Dylan Radigan momentarily before this show, A counter narrative and a logical one of that would be, okay, so the markets didn't get all the dovishness they wanted, hence this downswing, but they clearly recovered to be little changed into the end of the day. Ditto for gold. So is this really indicative of anything other than the market basically saying, right, this is not our ideal scenario, but ultimately this is fine? And marking resilience in the rally for gold, resilience in the rally for stocks, and we'll see what this means for the dollar, but the dollar maybe still has room to bottom. But again, this is not certainly a running away of dollar momentum, certainly not relative to this breakout out of this congestion range in the euro. One might think you would at least need to get back in here somewhere to make the case that the dollar is getting ready to run in earnest, at least from a technical or a price action kind of a perspective. So how this all filters through these markets over the next 24 hours should be very interesting indeed. And in the meantime, we are looking at a little bit more event risk overnight. The Bank of England is due to issue its policy announcement. The expectation is we're going to remain at 4% this time around. Rates are going to hold unchanged. But the really big question for the Bank of England and indeed for markets is going to be what the voting pattern here is going to look like. Because as it stands, the expectation is there's going to be fairly good conviction. 7 out of 9 policymakers on the MPC, the Monetary Policy Committee, voting for a hold, and 2 out of 9 voting for a cut. But it was really, really finely balanced in the previous decision. 4-9 for a hold, 5-9 for a cut. And that's largely around inflation in the UK looking more chipper recently. The numbers that we just got over the past 24 hours on inflation in the UK confirm expectations, 3.8% as expected and unchanged from the prior month. But that is nevertheless a repeat of what is or of what was in July at 3.8%, the highest in over a year, going back to January 2024, the last time that we were that high on UK inflation. Core inflation came down, again, as expected, from 3.8 to 3.6%, so nothing really to see there. But obviously, inflation is closer to 4 than it is to 3, and so much hotter than the Bank of England wants it. And so it'll be interesting to see how this calculus breaks out and what it ultimately means for the British pound, which held up a little bit better than the euro today. Positioning-wise, and from that perspective, I am going into this a little bit long the pound, a little bit short the euro. Still have my short put position and so long side in gold. My long calls spread in silver, so I'm still long the metals, and a little bit short in stocks. I've got a put spread in SPY, so keeping it small, keeping it risk defined, and straddling both sides of the fence. I am both long and short the dollar. I am both long the metals and short stocks. So I'm looking to see how this resolves into the end of tomorrow's session, and then I'll probably make some decisions on which side of the equation here to pick, and either the risk on or the risk off side, either the dovish or the hawkish Fed implication side, and we'll see how it goes. But as it stands, at least, the markets did not get out of the Fed everything they wanted, and the price action today speaks as much accordingly. And that's macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I am also commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money will be back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Crypto Show, and with me today is Shelly. Shelly, what's going on?
It always feels so incomplete because I'm always Shelly Van.
Yeah.
So you're like Shelly, and then I'm like waiting.
Yeah.
Like that last hiccup that never comes.
I just got to get better at the intro in general. It's a little bit choppy.
It's all right.
Yeah, it's not consistent.
We've had a day, Dan.
Yeah, we have had a day, but we are matching, which is good.
Yeah.
So we are repping Tasty Crypto.
That's right.
Want to give a shout out to the chat. Thanks for being here, chat. Donna's here.
Donna's like the VIP of this show.
Yes.
This show is for Donna.
Yeah. Donna, we're here for you. We did we planned the whole day, this show for you. So do you want to give us a little rundown of what we're doing?
We are breaking down layer 1s versus 2s because it's all confusing in crypto land. And you know, then you add in like layer 1, layer 2, like what? So here we go.
Okay. All right, let's do it. Let's get
Dive
into
in.
it. Again, this is for Donna. Shout out Donna.
Shout out Donna Ski.
All right. So why don't you...
Oh, and confession. These slides are a hot mess because we had quite a day and these had to be thrown together. So
yeah,
I have to like preface, I would never with this much text on a slide. So apologies in advance, but here we are. Do you want to go ahead and just
Okay. Yeah. So again, what we're going to do today is just kind of give a rundown of what layer 1 versus layer 2 is in blockchain in crypto. So layer 1 is base blockchains that finalize transaction themselves. They maintain consensus, security, and economic value. Examples being Bitcoin, Ethereum, Solana. There's a bunch of others, but those are the big three. Layer 2 are protocols built on top of the layer 1, aiming to improve scalability, transactions per second, lower fees, faster confirmation, while relying on layer 1 for security / finality. So layer 2 you can think of as kind of a...
Well, I think, hold on, let's break it. Let's put this into lay people terms or just more simple terms. Layer 1, think of it like a 1-lane highway, okay, with a lot of security. And so you can get one car through at a time, all right, trucking along. It's nice and secure, it's safe, but it's slow if you want to add more people. And so if we use the analogy that, like, if one car is one transaction being put through on this blockchain road, all right, safe, secure, moving along. But what happens when you've got a lot of transactions to go through? It gets really slow, congested, clunky, and expensive because the protocols allow you to pay to cut the line. So as more people are coming onto this 1-lane highway, they're going to pay more to cut that line and get their transaction pushed through, but then the price is just going to get more and more and more expensive. So layer 1s are really safe, secure, but slow and expensive to use when there's a lot going on.
Right.
So layer 2s evolved as a scaling solution to make, like, public transportation. We'll package more transactions in a package and then settle it on layer 1, so it's still safe and secure, but now more can go through faster and efficient.
Yeah. It's kind of like adding additional lanes, but also with, like, big buses and big tractor trailers that can package more data or more packages to be shipped. And then the congestion fee thing is kind of like when you go to New York City and have to pay congestion fees for the crazy amounts of traffic there. So this helps it kind of, this layer 2, these additional lanes help kind of scale.
Scale the ecosystem.
Yeah.
Make it actually usable for more than just a few of us.
Right. Okay. So let's do a little picture for, let's kind of, we put this picture together, blockchain layers. You gave the analogy of a highway, single lane versus multi-lanes, and, packaging data in public transportation. But this is sort of what we put together is it's kind of like a city in some ways. So this picture...
yeah, because to add more layers of confusion, there's not just layer 1s and layer 2s, there's a layer 0 and layer 3s.
Yeah.
So it's quite the onion. But yeah, layer 0 is the infrastructure that's connecting the separate blockchains.
Yeah.
So so let's just give some examples of a layer 1. You've got Bitcoin, layer 1.
Sure.
Ethereum is a layer 1. Solana is a layer 1. Now, these are all totally separate blockchains. I think people are like, wait, they're different? I thought you could have Solana on ETH and These are different blockchains. And then to add more to the confusion, when we're talking about the currencies, they have the same names.
Yeah.
So, like, Solana's a coin and a chain. Bitcoin is a coin and a chain. Ethereum is a coin and a chain. So it gets really, like, jumbled up and confusing. But layer 1s are a blockchain. Layer 2s are built on top of a layer 1 to scale my brain just died.
Layer 2s are built on top of layer 1 to scale applications and usability, right? Yes. Because, I give the example of Ethereum, right? Bitcoin is a little bit different because Bitcoin was built for one thing and really one thing and one thing only, store value, and you could say, like, internet money. But Ethereum was built for applications, was built to enable these decentralized finance and, NFTs, some of this. And what happened is when they built it, there was trade-offs, right? So the trade-off was, in order to be maximally secure and maximally decentralized, they made the trade-off for the scaling trade-off. Essentially, they went toward decentralization and security, right, as opposed to maybe bringing it a little bit more towards centralized, but scaling it more. So that was a trade-off they made, and as part of that, they ran into issues as more people began using it. It got way too expensive, way too slow, and you can't build robust applications. So what everyone thinks of as a great mobile experience, pick any app. I mean, any app that you could possibly think, gaming, even Tasty Trade's platform, couldn't really work on Ethereum layer 1. But with layer 2s, you can build applications like that are performant, that are cost-effective, lower fees, less costly, and just kind of resemble what you think of as a modern web app, right? But everything that happens on that layer 2 settles to the Ethereum layer 1, right? Bitcoin, for example, the layer 2 there is Stacks. There's a couple networks that have tried payment channels, essentially, like opening up peer-to-peer payment channels so that it's quicker, cheaper. But typically, Bitcoin is a 10-minute block time. It's pretty expensive. Microtransactions don't really work that well, but it's a store of value. It's extremely secure, and it's the most trusted blockchain out there. So, and then Solana took the opposite approach that Ethereum took, where it's a bit more centralized, actually a lot more centralized.
Right.
But it's very performant, fast, maybe not as secure, but or performant, right? Because there is downtime issues with it. But they traded that off for, I guess, a little bit more scalability, usability. So, but I think actually it's interesting because as more people use Solana, I think they're probably going to end up with layer 2s
right
at some point. So so this is just the way we're looking at layer 1 slide here. There's comparison, key weaknesses, risks. So now we'll go to layer 1, continue. Cardano, another one, Avalanche, Cosmos, Polkadot ecosystem, Sui, which we offer on the platform.
We offer all these on the platform, actually.
Oh, we do have Cosmos? I didn't know that. I don't think we do.
No, but we do have Dot.
Dot, yeah.
Okay, so yeah.
So we do have Cardano, we do have Avalanche, we do have Polkadot, and we have Sui. So all these are considered layer 1s. There's a couple others. These are the ones that we offer. And they all make different trade-offs. They're all built for different things. They all have different weaknesses or risks, but all of them are layer 1s. All of them, are sort of that foundation for blockchain applications. So,
and this is important when you're operating in a more DeFi situation with a custodial wallet. If you have a wallet, your wallet address is going to be different for Ethereum versus Solana versus Bitcoin.
Right.
But any layer 2 on Ethereum, same wallet address.
Right.
So it gets confusing when people are like, but wait, if it's on the base network, it's still your Ethereum address. Solana, different. Bitcoin, different. So per chain is a different wallet address. Right. But layer 2s are like stacking on top.
Yes.
All the same wallet.
Yes. And that's for self-custody, like your browser wallets, like the Tasty Crypto wallet, MetaMask, Phantom. Because people do get confused about that.
Right, and it is confusing. So like if you're going to bring in stablecoin into your Tasty Trade account, you need to add your network on Ethereum, which if it's a layer 2, like if it's on base, you need to add that wallet, and then add it again for another network if it's still a layer 2, if you're adding it from, pick one, Polygon or Arbitrum or, wow, my brain. Optimism, thank you. So if you have stablecoin on one of those layer 2s, you still have to add it again.
Yeah.
But it's the same wallet address. So customers are like, wait, but why? And it's like, well, okay. Crypto is still early.
Yeah.
Because at some point, all of this is going to be abstracted away. But right now, it's clunky.
But good to understand.
Yes. Very good. I think it's awesome to understand these things.
Yeah. So let's get on to layer 2s because I think people have some questions around that. So your layer 2 project / network, Arbitrum, Optimism, Polygon, ZK EVM, Base is the Coinbase one. their base layer one, what they settle to, what they send their transactions back to as for finality or the final confirmation essentially is Ethereum. So Arbitrum, pretty strong TVL, pretty well adopted, meaning a lot of users or a lot of money is there.
TVL.
Great dev tools. There's some technical stuff here. Optimistic versus ZK rollups, I think. There's different ways for the data to be packaged and confirmed on the layer 2 to be sent to the layer 1. We don't need to get into that today, but if you want to, if you're really interested, there's different ways that these layer 2s confirm or package the data that's happening on their layer, their blockchain to be sent to the Ethereum blockchain. So different ways of doing that, different data structures, different validation mechanisms. One being optimistic, one being ZK. Trade-offs, which I think is interesting. Do you want to take us through any of the trade-offs with these, or?
I can't actually see it enough. Sorry. Yeah.
All right. So main trade-offs is delays for finality. So some gas/bridge friction. If you need to go between the layer 1 and layer 2, there's some friction there. There's some gas fees, and user experience depends on bridging, right? So to get your money onto the layer 2 or get your tokens onto the layer 2 Arbitrum, you have to interact with a bridge. There's some security risks there, user friction risks. Some people don't understand how that works, but there's some trade-offs. Optimism being another popular layer 2, very similar to Arbitrum, but it has a different architecture. It's more aligned with the Ethereum layer 1 upgrades, and it's got some different development tools to build on it. So, main trade-offs there is the fee structures and the way they subsidize activity on the blockchain. So, a lot of these layer 2s, in order to get adoption, they've made their own token. They'll airdrop the token, or they'll offer the token as a reward for people using it or people building on it. Those are called subsidies. You can think of economic subsidies, same thing.
Right.
And it could come under pressure if the foundation or it doesn't manage it properly, I guess. So still some decentralization questions there, but again, these are pretty new. These have really only launched in 2020, 2019.
Yeah.
So
around that.
Yeah. So they're pretty new, and I don't even know if they went to mainnet. So we're under 5 years of these things existing, which is very, very new.
Yes, thank you. Edward just answered Donna. She said, what does TVL mean? That's total value locked.
Yes. So that means, Donna, that means the amount of money or tokens that are on
the chain.
So it can be represented in dollars or like ETH, but it's just an indication of liquidity and adoption and really economic security in some ways, because the more money there, the harder it is in some ways to hack it, but the bigger the prize if you can hack it, I guess. So it just is an indication of adoption, I would say.
Well, excuse me. I think it's interesting from an investment standpoint if you're looking to get into crypto and you're thinking of it like stock.
Yeah.
This is how you do your research into the technicals like you would a business. What is it? What is the product? What is it doing? Well, these are, infrastructure for a lot of other things. Are people using it? Are they not? TVL is a great thing to look at. And yeah, if you go to are we on the second page for layer 2?
Yeah, layer 2, base, coin. Yeah. So base is actually what I would consider one of the most popular and well-adopted ones. This is Coinbase's layer 2. So Coinbase incubated and developed this internally and launched it to the public.
Not that long ago.
2021, I think.
I feel like it was more recent than that.
Yeah.
We'll have to look it up, but it feels like it was just like last year.
Yeah. I feel like it just caught adoption last year, really.
Yeah.
Like it probably took a couple years, but yeah, so Coinbase, many people don't know, they actually have built their own layer 2 on Ethereum, and a bunch of big names backing it, focus on ease of use, US regulatory compliance, aimed at onboarding, that kind of billion user moment right? Like similar to like the smartphone. This is what they're focusing on applications that allow like normal uses. Social media is a big one. Obviously trading, I think sport prediction markets, stuff like that is really aimed at just kind of a normal user. Not necessarily like a crypto native or somebody in DeFi or finance, but social media is a big one, and gaming too.
Mm-hmm.
So that's in my opinion, that's been the most successful one, and probably the
Don't
most.
forget NFTs, Dan.
And NFTs, yeah.
A lot of NFTs on Base, music NFTs too.
I put NFTs and gaming together, I think, though.
Yeah.
In some ways.
Okay. I can sort of get on board with that.
Yeah.
A little different.
Yeah. They are different, but
I mean, very different.
I put
categorically.
I put DeFi in its own category, but
Yeah.
I put NFTs and gaming sort of like together because they're more consumer apps.
Yeah.
They're not like DeFi to me. DeFi and like trading applications to me is a very specific use case, but NFTs and gaming is like anybody that doesn't necessarily
More abstract.
Yeah.
Yeah.
Or like if you're just interested in social media, gaming, or just kind of a techie, like
You've got like a culture bucket.
Yeah.
And then like the finance. Like
people.
Yeah.
Yeah. Exactly. So,
Yeah.
and majority of the early adoption was this idea of DeFi or open finance or whatever, trading.
Mm-hmm.
But now we're seeing with these layer 2s, more consumer adoption in the culture social bucket,
Mhm.
I would say, which is good because I think this is a bigger bucket, to be honest with you.
Retail. Yeah, I agree.
Because if you think about how the internet tracks or mobile app stores track, like, sure, people put, whatever E-Trade or whatever.
Well, not everybody understands finance.
Right.
DeFi is pretty advanced.
Yeah, it's very.
But most people understand memes, artwork, games culture,
social media.
socializing.
Yeah.
So yeah, there's a lot there.
Yeah.
We've gone off route a
Okay.
little bit. And I want to say hi to everybody on X. We've got For Life Scott, Pensive Chepe, Caldone 678. Hello. And Jerry is on
Jerry's
X.
here.
What up, Jerry?
What's up, Jerry? So there's a couple others here. I think they all kind of have their different specialization. Like I see we have Immutable X here. That is a layer 2 specifically for gaming.
Mm-hmm.
So a lot of the tooling and the way it's designed is for people to build games on top of. So less general purpose, more toward a specific use case. So there's things like that a layer 2 can be as well.
And fun, hot off the press, Coinbase is exploring the launch of a token.
Is that public information?
Yes. I mean, yes.
It's really funny.
I don't have insider information at Coinbase. That would be cool if I did. But no, I did hear it on other publications.
Well, what I think is interesting, not to go off on a huge tangent here about Coinbase, but back in, you remember the 2022-23 like FTX blow up, Terra Luna blow up, kind of destroyed the industry until basically this past year.
Yeah.
At that time, Coinbase had just gone public in 2021, I think. And it traded up to like $300 a share, and then it crashed to $50.
Oof. Why didn't I buy it?
So I was deep in the weeds, and I was like, oh, Coinbase is launching Base. Like I had seen Jesse Pollak, the guy who developed it or kind of pioneered it
Like
there.
the guy behind Base.
Yeah, I saw him at ETH Denver.
Mm-hmm.
I knew there was all this underlying parts of their business. It wasn't just this crypto company that was going to get swept away by the SEC, right?
Mhm.
That was the narrative on Wall Street. I knew that wasn't true and that there was all this stuff coming. So yeah, I bought Coinbase stock at like $50, $60. So I just wanted to plug my my investment.
Your smart move. Well done.
Yeah.
Well done, Dan.
So
Good flex.
Yeah. So anyway, I want to bring up this picture you have.
Well, yeah, you can go to that link.
Yeah, let me see if I can.
This is just we've shown this before on the show. I remember showing Ryan and he hadn't seen it before and he was like, what?
Okay, so can you explain kind of a little bit what this is?
So right now you're looking at ETH on the left, Bitcoin on the right. These are actual real-time transactions represented by South Park characters. They are at scale, so the larger the character, the larger the transaction. And you can see them being put into blocks, hence blockchain, and being processed on the network, okay? The network being the road. So all these blocks are now going down the street. And you can, if you click on one, it'll show you the transaction hash so that you can actually like go look at it on ETH scan here.
This is Bitcoin.
Oh, you're on Bitcoin. So if you go
so this is Ethereum. So
I'm wondering if I'm looking at a mirror image of what you have. For me, Ethereum's on the left.
Bitcoin's the orange one, Ethereum's the blue one. How about that?
Yes, there you go.
So you could see that this block is bigger, it's slower, it's filling up more. This is there's different layers and different fees that you can do on ETH.
Well, and look at all the transactions in line, like waiting in queue.
Yeah, here we go.
So now you can see all these little characters running, and the bigger the character, the bigger the transaction. So find a big one or find a little one, click on the character itself, and there you go. You can see what they're doing. You can click on that hash, and it'll pull up Etherscan, and you can see what are they doing. I can't see because it's too small on my screen, but it's a really fun way to just visualize how the blockchain works.
Right.
And then if you go up and you can pick a different one.
Yeah, so I want to do, let's see, because I want to do
a different chain.
Yeah, here we go. Let's do Arbitrum, which is a layer 2, versus
ETH, layer 1.
Ethereum. So here's Arbitrum, right? So they're all essentially mailing. They're like kind of giving their package to this guy, getting on the escalator or movable walkway, right? And just going, look at how much quicker it is, right? It's kind of...
It's more efficient.
More efficient. See all these applications here that are on Arbitrum. And yeah, it essentially, they give the package, they give the envelope to the guy that's going to package it, the post office, whatever. And then they're kind of waiting in line to be...
They bulk
package it, yeah.
Yeah.
So look, see, he just took it and took it to Ethereum.
And now you could probably see that guy go over on the Ethereum blockchain, and then it settles over there. Oh.
Sorry about that. Yeah, so I just wanted to show the guy because it was kind of cut off, I think. So watch, once this fills up, he'll take it to Ethereum.
Yeah. I used to stalk this and try and find my own characters when I was having transactions go through. I'd be like, who am I? Yeah. Too much time on my hands back in the real trench days.
Blob. Okay. This is part of it. So this package, all these packages that this mailman will take and put to the Ethereum, it's called a data blob. So the way they're representing this on this system or this visualization is this little green character.
Love that.
If you click on it, it's a blob.
Someone's asking, can you show Solana? I don't think Solana.
On this one, I can't. There's no visualization on this particular tool or that we found, but I'll look around for it.
Yeah, we'll try and find something similar.
Yeah. Just want to move this down because you couldn't see here. I just want to show, so when it fills up and it gets packaged, they're taking it to Ethereum. So you'll see in a second here.
Oh, I see. You're not sharing the right. It's not capturing your whole thing.
There it is. See, he packages it up. He's the postman. He takes it to Ethereum. So just a simple, fun visualization for that. So let's go back here to the final slide.
And we can kind of fly through this because we kind of went over a lot of that.
Okay.
And we can post these slides later, so if anybody...
Yeah, we'll post the slides to Discord. We'll post the slides, maybe the newsletter. We'll grab a couple slides, but challenges, trade-offs, what to watch, kind of summing it all up. Security versus performance, layer 2's inherent security from the base chain, but they introduce new attack services. User experience and liquidity, onboarding across layer 1, layer 2, and back can be confusing or risky. There's fragmented liquidity. It can kind of make it less efficient in some ways, depending. Decentralization and governance, some L1s or L2s have more centralized sequencers or validators. So for trust, that matters. Single point of failure, kind of what we were trying to avoid here. Regulation risk, especially for big chains or ones tightly bound to centralized entities, exchanges, parent companies, Coinbase. So there's still some trade-offs, still pretty new. Like I said, these are under 5 years old. Some are getting adoption, but yeah, I think that's kind of summing it all
Well, I
up.
guess we need to ask Donna, did we help answer the question, what's the difference between a layer 1 and a layer 2? Because if not, we have failed, and we can start all over again next week. But yeah, we have a lot of these. Okay, important thing to differentiate is also coin versus token. A coin is the native currency of the blockchain. So like Ethereum, Bitcoin, Solana, those are coins. A token is launched on one of those chains. So like the TC token is launched on Solana. It's the token, not a coin. So I think that's an important thing to mentally understand as well.
I never really thought of it like that until recently either. I was just like, oh, I didn't really make the
They're
distinction.
synonymous. Yeah, no, they are different. And I'm trying to keep up with chat here. Let's see. Dan, what has more promise in 2026, L2 networks or the White Sox?
I would say L2 networks, depending on which L2 network there is. But hey, the White Sox will be back soon. Trust me.
Whoa.
Trust me. They made some moves in the front office. We've brought in some new ownership, albeit minority ownership, but new ownership is always good. And the fans are starving for a winner.
Okay.
So just whatever next season's win total is, bet the over.
All right. And then we had a question regarding the TC token. Downloaded the Tasty Crypto app today and wondered why TC isn't available, or maybe I couldn't find. Oh, okay. So the TC token that Dan and I launched is not in the wallet. It is launched through Bags app on the Solana blockchain. So if you have, we can also help answer these questions in our Discord more directly. So hop in over there, and you can find a link to the Discord at tastycrypto.com. And then, Dan, if you want to jump down 2 slides, also sign up for our newsletter if you're not already on it, because we've got some great stuff. And we also just sent an email today. So if you're subscribed, go check your email. There's an opportunity to potentially earn some money for answering some questions, because we have a survey going out.
We're looking for your feedback. We need you to. We're working with a company that to give us some user research feedback on our crypto offering. If you sit on a quick meeting, an interview, you'll get paid some money.
Yep.
So to sign up for that, you would have already had to be a subscriber, but if you are a newsletter subscriber, check your email, because that went out today.
Check your email and pop back up to that other slide. If you're interested, set up recurring purchases, because those are now available for crypto at Tasty Trade, and most of the coins we just talked about today for those layer 1s are available to trade.
Awesome. So that's kind of it. That's basically it for today.
Yeah, we are overtime.
Yeah. We'll be back Monday.
Well, we'll be back on Friday, Dan. Don't
Beans
forget
will be
Beans.
on Friday on the Tasty Crypto Network.
Yep.
YouTube channel, X, Facebook, Instagram, whatever. We streamed all of them.
Mm-hmm.
We'll be doing some more with the TC token over there. So if you want to learn how to provide liquidity, if you want to watch us buy up the token, if you want to just get involved in that community, because there's a totally different side of this. I'm glad that some people have been asking about the token. Join us on Beans Friday.
9 a.m. Central.
9 a.m. Central. We're going to go through and do a lot more with the token. We do it every week. And things growing. Keep supporting it. Keep backing it. If you have any questions about it, let us know. And that's all I have for today. We'll see you next Monday on the Tasty Crypto Show. I'm Dan.
I'm Shelly.
Peace.
Peace.
Good morning and welcome to Trade Live with IG with myself, Rich McDonald. On bed